Good morning, everyone. One second. Good morning. This is Best Spy Live Trading. Today is December 31st, 2025. The news we have overnight is that S&P 500 futures slipped slightly as the benchmark gets to set to close out the 2025 with a 17% gain for the year. Initial jobless claims came out at 8:30 in the morning. Good morning, everybody. Good morning, Tyler, Harry, Joseph, Francisco, Oscar, Fifth Buddha, Akash, Jake, and Antonio. Good morning,
Santelli
everybody.
here live at CME
Let's do a quick legal
HQ
disclaimer.
for the last
Please consult your personal financial
of
advisor before you make any
2025.
decisions regarding your
Initial
personal
jobless
financial
claims
situation.
for the week ending December
This video is for
27th.
information and educational
Under
purposes only, and I do not
under
recommend that you buy or sell any
200,000,
securities or investments.
199,000.
Financial
Sorry, got a little
advice.
excited there. We don't have many of these
Market is
numbers
opening in
under
2
200,000, and we know many are going to point to seasonalities due to holiday issues and work
IWM
week
has made a
number of
full
days.
retracement.
But if you just look at it on the surface,
Overnight
199,000
to
would be the lowest since
246
it
and
was
has
192,
bounced back.
which was supposedly a distortion for Thanksgiving on the week of 11/28, and that was the lowest going back to the fall of 22 when it was 189. See how bunched up they are? And then that goes back to 1969 on continuing claims back under 1.9 million. 1,866,000. We had a couple under 1.9. Then last week we popped above it. Now we're back below it a bit. Once again, now this is the week ending December 20th. It really shouldn't have any distortions due to the closure for Christmas, but nonetheless, I'm sure seasonal issues probably are coming into play here. Real quickly, let's just look at the fact that we're at what? 346 on a 2-year. That would be down, 78 basis points for 2025. And here we are at
Good morning, Nestor, in the
WhatsApp
WhatsApp group.
That would be
Market
down
is opening here
45, 46
10
basis points. So these are the way the
seconds.
numbers stand. I think the best way to look at year end here is the 210 spread. That spread right now, hovering at 68 basis points, is the widest in 4 years, basically January of 22. And the reason I find that so fascinating is, well, just look at the minutes to the last Fed meeting. Everybody's going in different directions. Many are worried about inflation. Many are talking about they do still see eases in 2026. If you put that together, what does it spell? Steepening yield curve.
Being bearish.
Joe,
Let's see.
back to you.
Interesting. We are right at yesterday's close. 4 p.m. gap has closed on SPY and QQQ. $9.30. Sorry about yesterday, guys. My internet went out, so I had to get it repaired. Hopefully, there are no problems today. If my internet happens to go out before 1 or 12 p.m., I will come back on. But if it is by the late end of the day and my internet goes out, then I don't know. I have a technician coming out next week, so I have no idea. Something is wrong, apparently, with the Ethernet cable cord coming out of the wall into the router, so hopefully there won't be any issues today because I replugged the plugs yesterday. So 9:30 morning cycle happening. Algo range is creating at yesterday's close. The higher time frame on SPX, MACD is trying to be bearish, but it could be tricked instantly. Doesn't mean really anything. The 5-minute higher time frame, 15-minute, slightly tiny bit, and 30-minute nothing. So it's just neutral. IWM is opening mixed. Tesla is testing yesterday's low, breaking yesterday's low. This means that this is a 3/3 lower than yesterday. I have no idea where Tesla wants to go. I do actually have an idea. It's somewhere 440, but we'll see. I have no idea if it wants to do it this week. That's the thing. It is so damn super bearish on Tesla so fast every goddamn day. And this is the 7th day now on Tesla. So what happens on Tesla? We'll know. We'll see. IWM, this is the 7th day in a row going bearish too. It is breaking yesterday's low. That's a little scary. Good morning, everybody.
To help us break down some of these markets, let's bring in our first guest, and that's going to be Kevin Green.
Stock mover
he is senior market correspondent here across the network. KG, happy New Year's Eve to you. You know, a little bit of weakness here today. It's been consolidating here. We haven't had big losses over the last few sessions, but once again, weaker going into the end of the year.
Yeah, a lot lighter volume as well, so you are seeing a little bit more of a defensive trade, and that technology trade also has been kind of lagging here, Tom, and that's also putting a little bit of pressure to the downside. And unfortunately, it looks like, I mean, we do have 2 more days of this Santa Claus rally potentially here, but we'd actually have to have a pretty aggressive move to the upside in order to really call this the Santa Claus rally. But we are seeing a little bit of pressure, a little bit more rotation in the market, and volatility still actually relatively low, sitting at around 14.7 right now. And this is one of those issues where we kind of talked about this about a week and a half ago, Tom, where volatility getting too cheap. Obviously, there's a lot of complacency in the market, but this market has really been driven by high implied volatility, a relatively high implied volatility, and then that IV really then crushes, leading to equity gains. That's just not the environment that we are in right now, and I think we're kind of setting up for the first week or 2 weeks, maybe seeing a little bit more consolidation here, maybe going back and testing the 20-day moving average on the S&P 500, maybe even the 50-day. Those two are not too far away from each other. Maybe going back, retesting, seeing if some buyers want to step in, and then trying to move forward. If you're looking at the performance for January, I would say it's a little bit mixed, but on the latter half of January, it's a little bit more bullish than bearish, and I think that you probably will see kind of that peak inflection point for volatility leading up to the January leap expiration, which obviously will probably cause a lot of volume here. So yes, we are seeing a little bit of rotation. The losses aren't that big, but once again, we don't really have that much of a catalyst to really move us higher in the manner that I think a lot of individuals expected, a week ago, 2 weeks ago.
Yeah, solid gain so far for the S&P 500, up over 17% in 2025. But this comes on the back of a couple of years of over 20% outsized gains. So this is kind of a muted response. The Nasdaq's still up about 21% so far this year. Dow up about 13%. So we've had some solid gains, but you mentioned some of the weakness that we've seen, and probably what's not leading us to the upside is that fall from recent all-time highs in some of these Mag 7 names. KG, all their charts set up, over the last 3-4 weeks, we've seen some weakness in this sector. Is that what's going to take us to that next level going into January? We've got earnings season kicking off in about 2.5 weeks also. Is that going to be the catalyst that the market needs to kind of reset itself? Is that we need strength from those market leaders, and that's the Mag 7.
Halfway point of the drop.
Yeah, it would make it a lot easier. I would also kind of say a lot of those charts are consolidating at this point. I mean, NVIDIA is a really good example of that. Over the last 2.5, 3 weeks, we've seen this range between around 170 at the lows to around 180, 185 or so at those highs. And it has broken out of a bearish formation, but it's still consolidating, and you're looking for some buyers to really step in and try to break this one higher. I think that would be obviously the bigger catalyst for this market. From a market cap weighted standpoint, it makes it a lot easier. If you can have consumer discretionary, information technology, and communication services push us higher here, it makes it easier for us to make new all-time highs. But the broadening trade is also something not to fear. It just makes it a little bit more difficult. You got to be a little bit more of a stock picker in order to gather some alpha within this market. But I would agree with you. I think a lot of these stocks have also been extended pretty aggressively.
Wind direction south. Wow. I'm leaving. $1,484. I'm out. That's $280 real quick. We're going lower into 940. 940 LOD. They are testing on SPX, 6,887. If that breaks, all these bulls are trapped, and they're gonna go dump this shit probably to 6.8, 7.6. But I need them to test, and I need them to figure out what they want to do here. They want to go lower fucking now, looks like. Damn. 9:40. This is the 3/3 morning cycle though, off the morning rip. So 1/3, 2/3, 3/3 going. Wind direction is crazy south off market open, but it was and it has been, and this is the setup. So now that it has played, and this is the 3/3, I'm gonna let the cycle do what it wants, and I'm gonna watch. Wow. SPX is going crazy now. They're about to go to 6.876. The SPX 1 minute gap. Crazy. 9:40. It's so goddamn bearish. I need to bounce though before anything. I'm not chasing this shit full on into 1 minute gap, but they're showing it crazy. Look at this shit, right? I literally said yesterday, right? They're either going to play with the intraday 1 minute push down gap or the SPX 1 minute gap, right? And we are chopping, building liquidity, grabbing people. And they're going to do it, right? And this is what we mean. They did it starting 3:40 of yesterday into 4 p.m. using the purple box setup that I literally said to mark at 3 p.m., right? I mean, I hope people really read what, you know. I really hope people did their own deductions. Is what I'm trying to say, if they wanted to or not, because that's what I literally gave the opportunity for, and this is what I was saying it's most likely probable for. But yeah, this is 9:40 now. This is what happens. Setup. Right? Candle traders are like, what the fuck happened? Candle traders are like, oh, bullish, bullish, bearish, bearish, oh, bearish, bearish, oh, bullish, bullish, oh, bullish, 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 bearish, bearish, because they have no idea what the fuck's going on. But what is going on is that there's setup. What is going on is that there's been setup on SPX, there is setup on SPX, and there was setup on SPX, and there still is setup on SPX. That's what's going on. So, setup traders versus what? Do we have to even say the word right? Setup traders versus candle traders. You decide what you think is reality. You decide what you think is bullshit. But I mean, at the end of the day, it doesn't really matter. It's literally what's going on. So, love reality. This is breaking yesterday's low on IWM, right? Making a new 3/3, playing in the 3/3, going lower. And this is breaking yesterday's low on Tesla, right? Playing in the 3/3, going lower. And this means 3/3 going lower for the 7th day in a row on Tesla on IWM. They're bearish, but it's dangerous as fuck. That's what it really means. And SPY and QQQ has absolutely fucking trapped off of 950 to 850 to 930 island. All right, look at Robinhood. It looks fucking crazy. It looks fucking crazy, right? People bullish bearish without setup. People bullish bearish without fucking jack shit, without fucking higher time frame, without caring about more than candles and MACD on a 1 day, on a fucking 1 second, 1 minute time frame, right? People that don't have true setups on things are fucked. I'm not talking about today. I'm talking about into the rest of the fucking goddamn century. It's happening every day. It's been happening every day, and it's gonna happen every fucking day. That's what I'm trying to say. What do we show on the WhatsApp group? That IWM made a full retracement down to 246, right? And they showed a bounce. So something to watch on IWM today. And they're crazy bearish on IWM right now. They're breaking yesterday's low. They're testing pre-market low. That's fucking crazy. Right, Tesla is bounce trying. QQQ and SPY misaligned, right? SPY is breaking the floor because of IWM dumping, and QQQ is not breaking the floor. So now there's a divergence on the floor. When everybody's fucking panicking and when everybody's fucking fearful, let's fucking focus. Let's care about the primary factors, which is what the market really relies on, which is time confirmation, cycle analysis, and nothing more. And we'll see what happens. All right, that's all it is. Using setups, not bullshit candle, MACD, bullish or bearish, or this is bullish, 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 this is bearish, 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 this is Guruji Furuji bullshit. I'm talking about real life shit. Real life fucking shit. Fucking bullshit. Crazy work, man. I've been saying this shit since fucking 3 weeks ago, 2 weeks ago, 4 weeks ago too, right? Candle traders dunzo, and literally every fucking day they don't fail. Every day they don't fail. The only time those people do good is when it's going up. I guess that's okay. Only way these people perma bulls know how to do is just green candle and then get the little move, little move, little move, little move, and be like, oh, okay. Instead of just fucking pulling up, down, up, down, up, down, up, down, up, down, down, up, down, or some shit like that. You know what I mean? They just don't have setup because they're fucking candle traders. So that's fucked. Crazy. Time is 9:45. There's a divergence at the floor. Let's see if they clear it. SPX is at 6,886. There's a 1 minute gap 10 points below. And we'll see what happens.
Today, Bitcoin is...
Let's talk about some of that right now. Of course, in particular, 2026, what we can expect in terms of that spending. Rohit Kulkarni is managing director and senior research
bear
analyst
cycle.
at Roth
They're
Capital
going lower.
Partners,
I'm just not going.
and joins us now.
You
Rohit,
can go
good
fill
to
the
have
1
you.
minute gap. I'll be happy with it.
2026 going to be more of the same when it comes to the big picture in terms of spend and return or expected return.
Hey, thanks, David. Happy New Year's Eve to both you and Sarah. Yeah, I think it's more of the same, but I think the market sentiment is going to drive.
I'm not chasing this shit though. This shit is actually fucking kind of
on a razor's edge. If you think
greedy almost.
Nasdaq was up 20%, but for the first time in several years, mega caps are not outperforming Nasdaq. So there's a question to be answered. If you're spending hundreds of billions of dollars, when do the returns show up? How do the returns show up? And in the meanwhile, how does the transition play out? I think the first half.
You tell me how the fuck anyone does shit on candles alone in this market, man. They don't.
There's more explanation to do. I don't think we'll see revenue upside, but just cost discipline.
Every day you gonna fucking guess green or red? Like what the fuck you talking about? You know what I mean? How the fuck does anyone fucking guess any fucking day right? Green or red,
right.
Don't.
But if we were to see, I mean, again, what we have not seen, what the market I think has been concerned about at least, or worried that we might is one of the big companies saying,
what are you going to do when the trend changes?
Too much, we're going to pull back. We haven't seen that. Do you expect in 2026 that we might?
Fucking fake fucking paper trading.
That would be a very spooky thing for a large mega company to say. If they come out so early, it's almost a game of chicken.
I'll
Who's
go
going to be the
ranging,
first person to say that? I would be very surprised if either of the large hyperscalers would go out and say that we are taking a pause. Rather, in my opinion, there would be some extraneous factors like supply chain issues, power not being available at the right time at the right place, such as that would be kind of quote-unquote excuses that would
SPX is
hint that there is going to be a measured capex coming up in the pipeline. But in my opinion, I would just say no. It's going to be very hard for a company to say that.
So how do you know? How should shareholders know, Rohit, if these hyperscalers are spending too much? Mm-hmm. If Meta and Google and Amazon are spending correctly? I think Amazon's spending the most, and interestingly, its stock has underperformed the most of the majors.
Yeah, absolutely. I think so. There are various different specific metrics and variables that investors will look at. With Amazon, we look at cloud computing. If it accelerates, probably they have a longer leash of spending. Google has probably demonstrated the best innovation skill set. Meta is in somewhat of a penalty box, given they have the
holy shit, kind of, up $200 on 2K in fucking 40 seconds already. Holy shit, they're going crazy. Oh my god.
Metric, but accelerating revenues in first half is something
Time
that
is
everybody
9:45.
would want to
This
see
is the
for them to
3/3.
continue to spend into second half of 26.
I'm leaving in a candle switch. Come on. Holy shit. Alright, I'm taking $240. I'm out. I'm out. Holy shit. dude. This is fucking just going. I don't even know. My chart on SPX is fucking broken right now, so I don't want to freeze my computer, but I mean, this shit needs to reload. This shit needs to fucking not do this right now, basically, on SPX. I think it might have gap filled. I don't even know. It's like 10 points away. There is no cycle bouncing. It's pretty crazy. IWM gone lower and lower and lower since market open. Testing. Pre-market low, right? Man. There has to be. There's most likely it's going to bounce in the next 5 or 15 minutes. But holy crap, are they just going lower and lower and lower? I scalped that shit twice. But I literally left the second one within 2 minutes, which is basically the time frame I did for the first scalp. But like, there is more risk in the 3/3 right here. The SPX 1 minute gap down there. Right, the SPX 1 minute gap down there is there, but it's most likely going to bounce to create a cycle because this shit is now overextension, right? We talked about this yesterday, right? When they do a move up or down, they do overextensions to create hella fucking liquidity and create cycles. So I don't know if it's going to go lower. My SPX chart needs to really reload here, but I will restart. Let's see. The SPX 3-day chart looks this looks the best right now. Look at this shit, right? They played with the purple box all day yesterday, all of Monday, and they dropped the crap out of it, and we are at the SPX 1 minute gap, and it's literally 5 points away, and they bounced it 3 points away. So we'll see. IWM is digging and digging and digging. I honestly thought it would bounce somewhere here too, but IWM is so goddamn bearish right now, they might really actually go and test 246. If that happens, that means it's really bearish. if that happens, that means it's really bearish. But the cycle has been fucking just shredding. It has been shredding. So what is it doing? It's destroying all calls from yesterday. It's destroying all calls from Monday. So it's turning into a bull trap. And the cycle is extending, actually. It's just this bigger cycle. 1/3, 2/3, 3/3. All right? Medium cycles turning into bigger cycles is all it is. And we are now at the floor, 3/3. So if it bounces and then kills 0 DT puts and then decides to do it tomorrow, it is absolutely possible. Nothing here says that it needs to go now, here, and go fill. Nothing. This is a game. So do realize that before it's too late too. We are seeing what happens. And now they are using the algo range to do something. This is looking bullish, but I mean, it's not bullish or bearish yet. Because the candles did not go into the algo range and then it did not stick there for 5 or 10 more minutes, which is the higher time frame. Looking at the 1 minute candle and being like, oh, you gotta let the thing build. Creating 5, creating 10, creating 15-minute candles. So we'll see. Algo ranging. Now we will draw this algo range in a color that we see together. Orange, yellow. I like this color. Okay, algo ranging at morning, and they are going lower on QQQ trying at 618. That's not a coincidence that number is literally right there at 618. 950 and 950 is creating an algo range at the floor as well, it looks like. But 940 and 940 is already an algo range. Do notate that in your head. This is also pivot point trading. This is also 1/3, 2/3, 3/3 trading from the morning cycle and also the higher time frame. MACD is coming in crazy bullish trying on SPX. IWM is bouncing from the floor, and let's see what happens. I don't really want to call it bullish or bearish. Just cycle creating now. Now is breaking the 950 algo range into 955 trying. 955 is here in 43 seconds. 945, bouncing into 950. Look, if you're here for the first time today, guys, don't try to question or find answers. You probably need to just watch a little bit to even figure out if this is a channel you understand or if you like to begin to understand. So please watch the live stream for at least a day and then start asking questions. Thank you very much. That's how it was back in the day too. But you have to realize there's a lot of people that come and go, man. Not a lot of people want to, pay attention, or not a lot of people want to do a lot of things or put in a lot of time into things they don't want to do. So you put some time into it, and if it is something that you like, and if it is something you want to put some time into and you want to learn, then that's when you stick around and you start asking questions. But can't really take too much time to answer questions to people that are just here, and that might leave within a day. Sorry. But this is not the first time I said this too, so I say this every day.
As we head into 2026, joining us right now is Dom Rizzo.
AI chip market to hit $500 billion.
Let's take a look at big tech stocks to watch as we head into 2026. Joining us right now is Dom Rizzo. He is T. Rowe Price portfolio manager. And Dom, thanks for coming in today.
Thanks for having me back.
All right, before we start on this, you've got a pretty good record, and I'd like to point it out. You're the portfolio manager of the Global Technology Fund, and since you took over just over 3 years ago, the fund's up 34.1% annually. It's outperformed the benchmark by 13.3% and Lipper peers by 26.1% cumulatively. You also run the technology ETF.
Right here, 6887. We did not 1 minute gap fill, but we are back to 6887, finding support, finding resistance or something.
You've got 10.9 billion of assets under management. I think that was as of September 30th. So welcome. You've got a good track record. Let's hear what you have to think about this. Where do you think we're heading in 2026?
Look, first off, on the track record, I'm very lucky. I have a great team around me, and T. Rowe gives us so many great resources and the platform to be able to outperform for our clients, which is our goal. But some of that's lucky timing too, right? Started December 1st, 2022, the day after ChatGPT. But I think we have a good framework, linchpin technologies, innovating in secular growth markets with improving fundamentals at reasonable valuations. And we can use that to navigate all different markets responsibly for our clients.
The numbers have gotten a lot bigger since you stepped into this. You want to walk us through that?
Yeah, just let's look at the AI chip market, right? It was $45 billion in 2023. We think it's going to $500 billion in 2028 and upwards of $1 trillion in 2030. And if you take a step back and think about those numbers, the entire semiconductor market pre-ChatGPT was only $500 billion. So we've seen a real acceleration in the capital intensity of the hyperscalers as we've unlocked all these new revenue growth.
We're at the midpoint.
What gets in the way?
Guys, we got to get some focus, please. In the WhatsApp group too, guys. The good morning thing, I love that we love to, say good morning to everyone, each other, but like,
how do we pay
do that in the pre-market.
And
right. If we start doing that in the WhatsApp group starting 9:40, 9:55, every single day, then
accelerating.
To be honest, I'm the only one really active and typing in the WhatsApp group right now anyway, but I'm just saying, let's just keep it clear.
Meta's growing mid-20s.
What the WhatsApp group
all
is.
All of the hyperscalers, cloud businesses
while the market is open at least, at the minimum.
And then we have the fastest growing privates in the world, right? We have OpenAI on a path to nearly 20 billion of ARR this year. We have Anthropic in a high single-digit billion ARR this year.
Is that fair? Like, there's a lot of cycles happening. Things are moving fast. People are fearful. People are confused. People are not caring. That's when we got to care the most.
The capital markets remain open. I think we see continued spending.
Up or down, it does not matter. That's what really matters. The focus. When it matters, how it matters, and why. So that needs to be there. The focus needs to be there at all times. And nothing can be distracting of that. And right now, things are very, very important to focus on the market. Why? Is it playing with the 1 minute gap? Yes. Is it playing at 6887? Yes. But does anyone know what's going to happen? No. So, you got to let them create a cycle, let them do deductions and all that. But yeah. Today is the end of the year. Wow, December 25. I guess next, yeah, but let's do the New Year thing at market close. Come on. I can't believe it's actually New Year. Wow. Oh my. Because I'm locked in on charts like 100,000% right now and what is going on in the market, and like I also have to look at charts and see there's not that many too many things going on that are too negatively not beneficial, I guess, or just trolling. But then I also got, because I have no mod at the end of the day. My mod really just was, I don't know, dude. All I will say is life is hard and life is lonely, but I mean, at the end of the day, ain't nobody gonna fucking change, ain't nobody gonna do shit for me, so I gotta do everything I gotta do for myself. And that's okay. Actually, respect. Bears are coming, trying.
Our next guest warns that an AI-fueled job apocalypse is on the horizon. Let's bring in Sal Khan. He's the CEO of the Khan Academy. In his latest piece for the New York Times, Sal makes the pitch that
MACD is
every
bearish
company
as hell on the
benefiting from
5,
automation should dedicate 1% of
15,
profits to help
growing,
retrain workers
30
who will be
minute,
displaced by
turning
AI.
more and more bearish now, so
Sal, first of all, thanks for being
1
here.
hour still bearish,
Second
trying.
of all, this is a pretty radical proposal, but let's lay out what you think is
Just
happening.
momentum being used to
why
go
you
south
think
again.
this job apocalypse is coming.
Yeah, as soon as
IWM is
generative
bounced
AI
right.
became a big thing,
10
obviously
a.m.
this has been a big debate. Will we have net loss jobs, net gain jobs? And
not
living
a lot
out
of
here in Silicon Valley, most people have been on, hey, this is going to be like the Industrial Revolution. We'll just, there'll be jobs, we can't name them, but they'll happen. But what we're seeing now, in that op-ed I talk about seeing the Waymos in my neighborhood, and that's cool. But then I go and meet with a friend who is thinking about contributing 1% of his firm's profits for reskilling, and his motivation was he's taken over a call center.
Looks like
in the
they want to
Philippines,
go
and he's gonna
lower,
be
but
laying
I
off
don't pay the
80%
point trade,
of
nor
the
do I care
workforce and
about what they
replacing
want
them
to
with an
show
AI.
here, so I'm just watching.
That's 7 to 10% of the Filipino GDP directly. Driving some form of a vehicle is 4 to 5 million workers just in the United States. It's the biggest, one of the biggest sources of employment for men globally, including in the United States. And even if you look at white-collar jobs, a lot of people are talking about and seeing what's happening in software engineering right now. It seems kind of frozen. Things like product management, design, we're seeing that those jobs are at least changing. You're not seeing a lot of net hiring. If anything, there's a lot of things going the other way. And the only way to think about how to navigate this, I think if folks wait too long, the political winds are going to switch. We've already seen that populism can get a lot of momentum off of things like globalization and immigration. I think automation is going to hit a lot harder. And 1% isn't without precedent. As I mentioned, one of my friends, he hasn't announced it yet. That's why I'm not naming their firm, but it's a major firm. There's Ares Capital, another major asset manager. They have a class of funds, several $1 billion under management, where they're giving 5% of their promote to philanthropy they're doing healthcare and education, but that's related to reskilling.
Man, this is so risky. I'm not doing shit. It's pivot point trading. Bears are coming.
This isn't going to be just,
I'm just watching.
hope isn't a strategy here.
This is cool, I guess. Cool to watch. There's some sort of
the benefits of doing
chop
something
cycle trading, I guess, or hovering.
The alternative.
I don't expect a lot of move on
if
Tesla
do
today. Why? This is 1, 2, 3, 4, 5, 6 bearish days in a row. So actually, like, even if it does go bearish on SPY, or not SPY, Tesla and IWM might move, but I don't expect a lot of move on Tesla. Why? IWM, there's actually setup. If IWM goes here, 246, that's a lot anyway. Or if it breaks that, that's fucked. But, yeah. Oh my god, look at IWM coming in fucking crazy. The IWM coming in crazy right now. Time is 10, and they rejected at 10, so they're going lower into 10:05, looks like, or not. We're about to find out. 9:50 bounced into 10 a.m. HOD is 9:30. Wind direction is south on IWM, but didn't break the floor, so coming in crazy. Candle coming in fucking crazy. This is the most important thing right now, I think, on IWM. Opening bell.
Drop in April.
All right, Mike, of course, going to stay with us throughout our when the bell opens here. Which, there we go. All right, we get started with the final trading day of the year. Take a look at the CNBC Real-Time Exchange.
And that was a quick little nice pre-market down, pre-market, right? Pre-market trap using the candles. I'm not gonna lie, they pumped this shit up from 8:30 into 9. Held it for 15, 20 minutes and dropped it.
My children think they're staying up for it.
Have you informed them otherwise? Or,
no,
yeah?
I told them they could, but
chart
it's
froze.
never easy to keep
and that's because you can do the fake one for kids. You do it at like 10 o'clock or something.
No, yeah. I don't like to lie to my kids. Guys, you mentioned the global stocks, and there's a good stat. MSCI World Index set for its biggest annual return in 6 years. So it really was an all-inclusive rally, not just in the U.S., where we saw really bright spots, like I mentioned, South Korea and Taiwan tied to AI, but even Europe, which is not an AI story, is a defense story.
FTSE was up 21%.
That's non-U.S. stocks versus U.S. stocks year to date.
That was the point I was making when we were talking at the open. I'm sorry, at the beginning of the show, Sarah. That yes, good year for the U.S., but Mike, a great year for so many others.
Yeah.
Brazil, Mexico, China, all outperforming the U.S.
I think it's a little bearish here. The gap below still exists. But I'm not doing shit. It's pivot point trading.
In particular, 2026, what we can expect. Let's talk about some of that right now. Of course, in particular, 2026, what we can expect in terms of that spending.
It's our first poll of the day, folks.
Research analyst at Roth Capital
In your opinion,
and joins.
This is going higher or lower?
Good to have you. 2026 going to be more of the same when it comes to the big picture in terms of spend and return or expected return.
Hey, thanks, David. Happy New Year's Eve to both you and Sarah. Yeah, I think it's more of the same, but I think the market sentiment is going to drive some of the
sentiment.
I think market sentiment is on a razor's edge. If you think, you said NASDAQ was up 20%, but for the first time in several years, mega caps are not outperforming NASDAQ. So there's a question to be answered. If you're spending hundreds of billions of dollars,
I am not going short. I am just watching. Even if they go lower here, I'm just going to watch at this point. I played the 1/3, 2/3. I do not play the 3/3. I do not play pivot point trading. I don't care. I let them trade a cycle, so this is just a market sentiment poll. Nothing else. Opinion pool. Nothing else. Pool means nothing. It's a fucking imaginary fake number pool chart. So all based off the chart candles. We'll see. Do notate that too.
Right.
People
but
are saying
we were to
lower,
see, I mean,
lower,
again, what
higher.
we have not seen, what the market I think has been concerned about, at least,
higher,
or worried
and 6
that we
people
might,
saying lower. So
one of the big companies saying, all right,
3.
we've spent too much, we're going to pull back. We haven't seen that. Do you expect in 2026 that we might?
7 versus 4.
That would be a very
There's 2 people saying
for a
higher.
large mega cap company to say if they
could surprise higher too.
Early,
that is fair.
It's almost a game of chicken.
I think it's up to IWM at this point.
I would be very surprised if either of the large hyperscalers
try to go test the floor
and say that we are taking a pause.
If it breaks it, goes down here. I mean, I don't know.
In my opinion, there would be
easily.
some extraneous factors like supply chain
I think we need to draw a purple box here, basically.
Not being available at the right time at the right place, such as that would be kind of quote unquote excuses that would.
Something's going on with IWM.
There's going to be a measured capex coming up in the pipeline. But in my opinion, I would just say no. It's going to be very hard for
went lower into 10:05,
so how do you know? How should shareholders know, Rohit, if these hyperscalers are spending too much?
A little bit of a cycle
if Meta
divergence.
and Google and Amazon are spending correctly. I think Amazon's spending the most, and interestingly, its stock has underperformed the most.
Temporarily too. Doesn't always have to be.
I think so. There are various different specific metrics and variables.
If the real direction comes, though, it will align. That's for sure.
We look at cloud computing. If it accelerates, probably they have a longer leash.
We have 9 people that voted lower in the WhatsApp group, and 3 people voted higher. And we have Henry said lower, Scott said lower, Camden says lower, David says lower, Marketing says higher, Akash is higher. So 5v13.
Single leg pony, if you will, one trick pony that they have.
Closed.
So I think each of these companies are measured on a different metric, but accelerating revenues in first half is something that everybody would want to see for them to continue to spend into second half of 26.
In my opinion, the risk is fucking crazy for bears, and in my opinion, it's still too early for bulls for some reason. Maybe that is the reason why it's bullish, but I mean, I don't know. That's what I feel. That's what I feel.
Help us break.
I genuinely feel that for some reason inside my heart. But my head, looking at the candles, could easily do some shit else, of course.
Is going to be George Kalis, CEO of Prospero.ai. We're talking retail investors here, George.
Outlook.
When you take a look at maybe some of the action here today, I think one of the key things that kind of stuck out to me
any sort of
is that we've always had that old adage that retail traders.
The shit is bearish, but then it's bearish in the pivot point. It's bearish like 3/3, and IWM is going. So you know, it's low-key bearish, but then the risk is crazy for me because
in the retail side, they were buying the dip in April a lot quicker than institutional instead of hedge funds. You know, what's your take here on the retail investor
so
and
many bears
how
here
they handled
from
2025?
9:55 into 10:05, 10 minutes.
The market has changed. You know, when I first got into it, I worked at the Value Investing Center when I was 16, worked in my first value fund when I was 17, and I've gotten a front row seat to this shift. I mean, we saw retail make up as much as 35% of the market in April 2025. And with all of the algorithmic trading in the market now, we are getting a lot of algorithms that follow that.
That's what smart money does, man. Hybrid trading. The shit we're doing now, deductions, it's just done fucking 10 times faster.
And that has created a change in the market
also done
retail investors
perfectly to the teeth, not
and different
perfectly,
kind
but
of
like
valuations
when the
are
computer or the hybrid or the hybrid
that's just
person
the way the market works now.
realizes that the deductions moved on, deductions lost or whatever, they move on to the next deduction because it's a probability-based game.
Yeah, that's right.
They're just so fucking
maybe
good at
the
it.
retail investor has become the smarter investor. But
I genuinely believe that. They call it hybrid trading.
You guys are
Go Google it. What hybrid trading
AI
is
right now for that retail segment of the traders.
It's a combination of algo, algorithmic, right?
And you guys
whatever,
are
and also human people.
You know, what type of product are you guys looking at when you look at the retail trader and the advantages that maybe your app gives?
So yeah, we have 10 signals that can be used by traders or investors. We have 5 long-term and 5 short-term signals, and actually some of the traders find the long-term signals more helpful to them, and vice versa, because that's not data that they're looking at as much. And we really try to simplify it into these 10 signals. We look at things like social sentiment, so we're trying to coalesce things like retail demand and then net option sentiment, which is our most popular metric, very powerful. We predicted a number of market swings this year with our QQQ SPY.
Everything else is too
and that's actually
far
isolating
out.
institutional
options
demand. You know, netting out the call and the put side, scaling it 0 to 100. So we have powerful metrics leveraging AI that really simplify things, make them more digestible and actionable. And it works for retail investors and it works for us. You know, we are beating the market significantly the last 4 years with the picks we give away for free in our newsletter.
Yeah, if you're looking at the flows and the headline risks that are out there in news flow that's out there on a minute-by-minute basis. So you guys are setting the tone with that. When you look at the different narratives here in the markets moving into 2026, you expect a little bit more volatility, more of a stock pickers market where retail investors just can't buy the SPY and you know, think that they're going to get another 17, 20% gain in 2026.
Yeah, absolutely. I think that it's going to be a stock pickers market, and I think you have to look at NVIDIA and Broadcom earnings, especially recently. And you know, NVIDIA had a fantastic earnings, you know, double beat, guided up, and partly for some macro news, actually finished down on that day, which is crazy. But it shows how the demand and the excitement around AI has really changed. I think Michael Burry's part of that. I think there's a lot of things at play there. But then if you look on Broadcom on the other side, you know, they got hit, you know, estimates as much as, you know, 15 to 21%, depending on your timeline. And, you know, they had a double beat. They had good guidance.
26,
but the problem with them was they guided down on margin. Their product mix was changing. You know, more automation. They're using more third-party specialized products, which is also
from yesterday and Monday.
And even even just looking at that alone and the way the AI trade is changing from it just being like everything up, every earnings response great, I think that right there is the story of the increased volatility that we expect in 2026.
Yeah, the bar is high on those stocks going into the reports.
Wow.
You know, I'm looking through them as they're coming out immediately, and I'm going, hey, what else can these companies do? And the stocks are selling off pretty significantly, but the bar is high on those. The valuations are elevated, and I think everybody's kind of concerned about moving into 2026 that we're going to see maybe a topping out into maybe the tech trade here, George. I mean, as far as maybe what you guys are inputting and what you guys are seeing on your side, do you expect a little bit more volatility in 2026? And traders and retail traders should be, you know, aware of that.
Yes, we do expect it, but actually, in one of our last letters, actually our last letter of the year, this last Sunday, we write a letter every Sunday that kind of looks at some specific stock picks as well as some narratives. And what we actually like are some growth names. We mentioned, I was actually on the Schwab Network a couple weeks ago. I mentioned ASTS, LEU, and I was actually on 1216. If you go and look at the charts from 1217 on, I think some people were sharing that, especially those communities. Both of those stocks did very well, and we like those stocks because we like what's going on with nuclear, space, broadband. There's huge opportunities, I think, in those. And ASTS and LEU have very strong market positions and unique market positions, I would say. So that's the kind of thing we're recommending, and we're also looking to pair growth names like that with something like real estate. We see a lot of macro issues with the real estate market. The listings, the supply and demand is down in the real estate market, and we think that if there are rate surprises, those stocks are going to be hit perhaps even harder because of the actual growth concerns in those industries. So that's one of the things that we're trying to help people with the volatility, just being like, hey, if you're going to have growth names, I would think about pairing some real estate with that because I think that balances out the risk pretty well. Real estate shorts.
Yeah, real estate basically been in a bear market almost compared to other segments within the markets. Looking ahead to 2026, George,
it's dangerous.
What are your keys? Do you have like
this is what I wanted to say at all-time highs, right? I wanted to say at all-time highs that all-time highs are so fucking dangerous that every time we're at the top, some crazy shit happens. Well, like, dude, you know how fucking crazy it is you know how crazy it sounds to say that when we are at the top? You get what I'm saying here? You know how fucking crazy this shit was? At the pure top on October, it looked crazy bullish. To say this shit at the tip of the top sounded fucking crazy. It looked crazy bullish into FOMC. To say it was going to pull back at the tip of the top was fucking crazy. To say it was going to pull back here was fucking crazy. That's why I didn't even say it that much, but I literally played it, right? You know how fucking crazy this shit is? Does anyone understand how fucking crazy this shit is? Like, it's moving crazy. Market is going to the fucking all-time highs 3-4 times and it's fucking rejecting like crazy every fucking time. Like, it's so much. Look at this. 1/3, 2/3, 3/3. They're using cycle and using fucking thing to trap people all the way at the top, trap people all the way at the bottom. Every time people think it's going to crash and go out of the range, it just pops right back up into the range and goes all the way to all-time high again, breaks out all-time high and rejects, traps people at the top, traps people at the bottom, traps people like, holy shit. Can't even stay up there for 3 days in a row. We just boom, 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 no volume rally up, all-time high, make the all-time high, and then fucking reject. Like, jeez. This has to be set up like so fucking hard. So hard. Like, what the fuck? Now we're at this doji candle. So maybe this doji candle acts as some sort of weird ass fucking play here. But I mean, that's the reason why I left. I fucking marked this that day. But I never deleted it. That's crazy. This gap is being played. The 1 minute gap from that day. There's a gap down there, gap down there. There's 3 gaps down there still. But I mean, we could bounce and play here and test all time. At some point, it's gonna bounce. At some point, it's gotta hurt these bears. But like, wow, I can't lie. Wow, IWM is truly testing the bottom. Look at this shit. IWM is truly testing the bottom of the pre-market low right now. This is what we were saying 40 minutes ago, that this shit could be possible. Look at that IWM. Fucking testing the pre-market bottom during market hours. That is something. From 248 to 246. That is insane fucking money. I don't think anyone would have fucking expected that insane except smart money. Smart money that looked at IWM and saw that it made a Fibonacci and that realized that that's a setup. How do I know why I'm saying what I'm saying? Because that's literally what I did, right? Today in the morning at 9:04 in the morning, I sent the picture of IWM in the WhatsApp group. Fibonacci full retracement to 246.88. Why did I send that? I don't fucking know. I was looking around the chart, but I literally knew it was something important, right? And here we are. Something important. This shit right here. This is setup. I mean, setup changes, setup happens every fucking day. But what is going on in this market is that there are setups. There are things going on, and there are people that are able to catch it. Holy fuck. Gap is filling. 1 minute gap is filling. 6, 8, 7, 6. The SPX 1 minute gap. I'm okay. I'm up thousands for the fucking week and the month. So I'm just gonna fucking chill. I am okay with this. They are pivot point trading. They are 3/3 and going to the 1 minute gap. So things happen super fast, but this is the real direction. And the real direction, moving QQQ to the real floor. Time is 10:20. They were just faking out with the candles bullish. But the setup is the SPX 1 minute gap they want to do. Or they did. Why did we go rally up to the all-time highs? There was a 1 minute gap too on the upside. Right at 6,900 from the FOMC drop. So if you go all the way back, this has played. SPX 1 minute gap has filled. Alright, we will leave that, but this is filled now. So we gotta delete the SPX 1 minute gap. That is what we call gap fill. Why do we do the WhatsApp group poll yesterday, right? The poll was, let's see, 7:17 p.m. Are 1 minute gaps on SPX, IWM, QQQ? Answer 1, setup. Are they traps? Or answer 3, they could be both setups and traps, right? And people that voted option 3, setups and traps, they got it right. Just depending on the environment and the situation and how it's used.
For 2026 for retail
I wanted to
traders
short
out
at market close yesterday, but I didn't. Things weren't.
I would
just
say volatility.
I mean, I kind of did things so early too.
Closely, people need to watch.
There was a day where I tried like somewhere here.
Like
I think I tried somewhere here some shit.
I mean, sure. You know, if you don't have time to buy something like Vanguard Total Return, and we always encourage people to be very realistic about the time commitment they can make. But if you want to be in the stock picker's market, you have to be prepared
that is not a coincidence.
You know, things like our net option sentiment, other market signals, technicals. You know, you don't have to be watching charts all day, but you have to be prepared if you're going to do as well as you can to be willing to try to time the market a little bit. Everybody says don't try to time the market, but I would say if you're not going to try to time the market, don't buy individual stocks.
Yep, I'm a trader, George. I know exactly what you mean. Can't time it, but maybe you can profit from it. That's the key, I think, moving forward. All right,
SPX
George, happy New Year. Thanks for joining us today. That's George Kalis, CEO of Prospero.ai.
SPX 1 minute gap is filled. Saying countdown to chaos.
We want income limits. We wanted insurance reforms and accountability to hold the insurance companies accountable. We wanted to eliminate
still bearish. Premium plans. Look at Tesla not moving. I told you Tesla not going to do jack shit, right?
So that there's some skin in the game and we can
IWM doing something.
over 12 million of the 24 million who benefit from the enhanced premium tax credit have never filed a claim. And so we want to make sure
20.
that these people actually, A, know
I'm not
they
logging
have
here
healthcare,
either
and
because
B,
I'm just
the
waiting.
insurance companies aren't
Nothing here
just
says that just
billing
because
the
we filled the
taxpayers.
SPX
The
1 minute gap,
objective
we have to
was to
bounce.
get that
We
in
can
the
chop
House.
here.
Unfortunately, we couldn't reach
So
an
I'm letting
agreement
the
with
market
House
do its thing.
Republican leadership
We
to
are
get
now
a
back
vote.
into the
And so
downward
we
trend
were left with
on
no choice but to sign
SPX.
that discharge and force a vote.
That was New York Congressman Mike
Right,
Lawler
candle
with me
traders
on
are
this
fucked
program
because they don't know what's going
yesterday.
on.
The Obamacare
This is
subsidy is set to expire at midnight tonight.
set up.
After Congress failed to come to an agreement before the new year. Millions of Americans now facing higher health care premiums as a result. Some states are stepping in.
If you don't
to
think
try
this
to
is
push
set up,
down
I don't
the
know what to
cost.
tell you.
Here's a map
But this
of
is set
some
up.
of those areas on your screen.
It literally
Congress
proves
currently
it.
on holiday
Chart
recess.
fucking
The
proves
Senate's
it.
going to return
Post
Monday. They've
free.
got 3
So
working
we
weeks
saw it
to
live
fund the
together.
government before another fast-approaching shutdown deadline, January 30th. Joining me now, Missouri Congressman Bob Onder. Congressman, you're on the House Doctors Caucus. I want to get your reaction to where we are in healthcare. You heard Congressman Lawler with me yesterday that the moves that he and some of his colleagues made was to put the onus on the Senate when they return, and it does have to be clear here, action by the Senate. Where are we in your opinion?
Well, good morning, Cheryl. Great to be on with you. Look, remember that what we're talking about here are not Obamacare subsidies. These are the extended Obamacare subsidies passed ostensibly to fight COVID in 2021 and 2022 by Democrats without a single Republican vote. But remember, if these subsidies expire, and they should, these enhanced subsidies,
I think it depends on how IWM does here at 246%
by the U.S. taxpayer. But the real issue here is not the 7%.
I mean, I would never have played IWM going down like that, but I mean, the deduction was there. If somebody did, they probably printed fucking crazy. Like, you got it. This shit's like $3 on IWM. That's not little money. That's fucking huge on IWM. That's not little money. That's actually fucking even bigger than SPY. SPY moved $3. SPY moved $2. Sorry, IWM moved even more. IWM is down 0.6-0.5% right now, and SPY is down 0.25. So yeah, IWM moved way more.
Who received these enhanced Obamacare subsidies?
IWM moved way more.
Moreover, it would even for those who are on Obamacare health insurance, it would lower premiums on an average by 11% by fixing the cost share reduction part of the Obamacare system.
Still not bullish. I mean,
never did.
I'm just watching at this point too. I don't think it's bearish anymore. I think the setup is played, so it's not really bearish anymore. I think the cycles might have created bullish and bearish, and then at some point, momentum at some point, cycle at some point time, something happens, and then I might try a long. I'm not gonna lie, I don't want to go short. Why the fuck when I short 1, 2, 3 fucking days in a row, setup is played? I'm okay with short at this point. I want to look for a little scalp up. But I also want to let the cycle build. I don't want to fucking go before the market does shit. So, you know, I'm trying to be as patient as possible, but then also if shit happens before, I'm going to feel FOMO, then I don't want to. I don't even want to think about it at that point, so I'm just good. I'm happy with life right now is all I'm trying to say.
So I think that's where this all is kind of coming into. You've got some vulnerable Senate seats
10, 20, 10, 20. I'll go range happening on IWM.
Yeah, well, Cheryl,
that's not a coincidence.
6 months ago, we were being told
they're building liquidity at the floor.
Increase the SALT deduction, all these people would lose
okay,
their
what the
seats.
fuck? Dude, they literally went in gap filled. I mean, the risk was so crazy. I did not play that shit, but I would have loved to. I wanted to play that shit since yesterday. I mean, risk too crazy. Risk too crazy.
It'll probably be 3 more things before election day.
Okay.
Look,
full cycle building. MACD's already coming.
In
Interesting.
November 2026, as well it should be. But the
divergence cleared.
Double down on a failed system,
time is 10:25.
Like we
damn, they're already going.
Did on the 17th of December, right before Christmas.
I agree.
Wow, they're already fucking going.
I agree with the premise of that. I just, you know, can you do that in a fast time frame and get the entire caucus on board? I mean, that's on Speaker Johnson, but that seems to be, you know, there's a lot of different opinions.
Now it's coin toss though.
Yeah. But the discharge
IWM
petition
1
that
minute
Mr.
gap.
Lawler signed was Hakeem Jeffries' petition.
This cycle being broken out like that could mean that's the 332. I don't know. I'm waiting for a huge trap.
And
huge trap in momentum.
By the U.S. Senate. So I think these
momentous momentum volume
subsidies are going to expire, and I think they should expire.
Okay.
Welcome to Morning Brief, presented by Robinhood, the home to commission-free trading. I'm Yahoo Finance Executive Editor Brian Sozzi. Let's fire up 3 things you need to know today. First up, it's the final trading day of 2025, and the bulls have a lot to rejoice. Age of 11. Did you? Probably not. And lastly, insiders are running to own Nike. A few days after Apple CEO and longtime Nike board member Tim Cook bought $3 million of Nike shares, CEO
strategist says market is in a bubble, but could grind higher. So what the fuck are you saying? Look at that rejection, bro. That's why I didn't want to fucking chase it.
As Hill turnaround has moved much slower than expected.
Chopping. This is chopping. Chop, chop happening.
All right, final trading day of the year, and what are markets doing? A
RSI,
little bit of green, but like I've been saying all week, volume is low on the street. People are getting their holiday
I need them to cycle, trap, data burn, create,
they can very easily be lower at the end of the day.
Momentum.
Who knows? All right, let's dive into our
Not
top
like it for
stories.
35
I'll
minutes.
bring you the year review
at that point, and
review
only
for
that.
Financial markets. Plus, we're bidding farewell to Berkshire Hathaway CEO Warren Buffett,
wow,
who is stepping down from his post when the clock strikes
10:25 rejection to 10:30 happening. Trying.
Here, alongside
or this is a 10:30 rejection happening to 10:30. I ain't changed this shit. I ain't changed this shit. I don't give a fuck.
We've seen a lot of you this year, which makes me very happy. Eric,
I don't care about the 3/3. That's the thing. I do not want to be in the 3/3.
No pressure, but can this
really stress to stay away from it. So
I think it can,
up or down.
I think
they could run this shit. They could reject this shit crazy.
When you look at the forward,
I really don't do shit without setup though.
Versus 6 months ago, versus 12 months
setup
ago, 18
is
months ago,
I don't know. It's creating a setup.
Consistent.
I don't really see a setup anymore.
This is not a
maybe a setup IWM down there, but that's not really all guaranteed. It's gonna reject. No, it's just nothing.
The bears insisting that it is. It's not.
Sometimes we're just gonna let the market.
There's a lot of
what it wants
pausing and reflecting and kind of people not sure that Nvidia can keep posting these billion-dollar quarters and so forth. So I think that skepticism makes me optimistic that we can continue to grind higher.
Michael, of course, Nvidia could keep printing those billion-dollar quarters, right, next year? I mean, this is just almost like the Fed printing money.
Sometimes, though, Ochoa, the warning is the move, right? That's where all the volume is. Everybody is.
So, of course, its growth is going to continue to be strong.
What are you concerned about next year? If I imagine we could very easily have the same conversation, Michael, next year at the same time, same place.
It's just to be on the right side.
There really wouldn't be any reason why
that's
the market couldn't be up another 15 to 20%. I mean, the rates are likely to stay low.
Not using candles,
AI spending,
but using setups basically.
All the factors that drove
speaking,
stocks
right now,
this year higher
the
are
average of the
certainly in
market.
place for next year. If I would even argue perhaps they're a little more bullish on the Fed side.
From my perspective, I'm actually in the bubble camp here. When you take the top 20 names in the S&P 500 and you drop Tesla out of the mix, they're still trading 28 times forward earnings. So those top 20 names in the S&P 500, their market capitalization is equal to half of the index. So it's a very top-heavy tape, and I think there's a lot of risk there. There's many attractively valued companies in the U.S. stock market right now. But the index itself is very top-heavy, and I think that is a risk.
And as I was thinking a lot about this AI bubble debate last night, I'm thinking about a lot of it this morning too as well. The reality is we don't know when a bubble has burst until it has burst and stocks have plunged.
Right, and we've spoken to a lot of strategists that talk about the fact that we will be entering a bubble. I mean, I know that you've spoken to some of them as well, but as far as going into next year, I mean, you've got B of A that has said we're not in a bubble yet. They do see that there
we
is
either fly or we chop.
Air pocket, but they're expecting that
the two major possibilities are we show people that we flip view up and we fly,
I mean, this is what
or we chop here.
to.
So
Goldman Sachs
I'm gonna say, I don't want to speculate, but I feel like it's gonna chop somehow. Maybe a little bit of up and then down, and then up and down, or something.
It's unclear.
Look at the downward trend we are in. Please look at the downward trend we are in.
Or when you are in the bubble. But look,
Friday 26th,
Monday
29th of December, Tuesday the 30th, we broke out yesterday, and then we dropped back into it today, Wednesday. So this is a downward trend. We are in a downward trend. It's just IWM is bouncing.
and lower
And
interest
it
rates,
has
as you
already
just
played
mentioned.
out. That's the thing.
Eric, getting back
setup
to
has
NVIDIA,
already
this is
played
stock you and I
out.
have talked
So
about, I don't know, 12,000 times
now
this
that
year
the
at
setup
various
has
points.
played
But
out,
we come out
market needs to
blasting
build more
next
liquidity
year.
probably
January
here and
5th,
decide whether
you have
to
NVIDIA CEO
actually
Jensen
fucking
Huang,
go
key
lower or
speech
not.
again at CES. What do you
15
want
minute,
to hear from him? If you're bullish the stock more broadly, like it
30
sounds
minute,
like you are, what do you need to hear from him to stay bullish here?
1 hour.
I think it would be great to hear more success stories,
4
case
hour.
studies of the
Look at the 4 hour
applications that
MACD right now.
people have started
Completely
to roll out
neutralized.
that really
1 hour
prove
MACD bearish.
the payback
That's
from the
dangerous as
investment.
fuck.
The street
Number
has
one,
been
that's
overly
dangerous.
focused on just
4
how much
calls
and how
up
long
there,
the investment phase has
expiring
gone
this
into,
week,
and
next
I
week,
think
or next month, whatever the
they're
fuck.
waiting for that
And number
kind
2,
of proof point
that is
of
super
just
fast.
how efficient or how quickly new revenues can ramp post
no
AI
volume
bubble.
going
So
up.
more stories like that, whether it's
all
from
the
Jensen
volume
or
to go
from
down.
the new CEOs of the new businesses themselves. I do want to point
So
out though,
fun.
Brian, one thing. Right now, Walmart and Costco are trading at 40 times forward PE. We never hear about a retail bubble. We never hear about a big box bubble. And even though Domino's Pizza has come down recently, and I think in the last 6 months, I think at this moment, Domino's Pizza still trades at a higher forward PE ratio than NVIDIA. When do we talk about the pizza bubble, Brian? Like, what's going on here? That's the part that amazes me when we get so fixated on the AI bubble.
Eric, you tossed at that bait. I'm going to take it. Michael, over to you because Eric brings up a very good. He brings up a good point
algo
here.
range.
You have a Costco.
They're creating some sort of a cornucopia cone
to the broader market. Yet you look at the health of the U.S. consumer. They're not
We're about
exactly
to find
doing
out if
great.
the bulls are still here within a couple of
They've
minutes.
enjoyed a lot of gains on NVIDIA and stocks, but that middle income and especially the lower income shopper have been really pressured. So it is almost bizarre to see those two stocks trading at a premium. Or maybe
Look, what is a cornucopia cone? I'm going to draw it so we can see it this time. But it is basically a cone.
I don't think it's specifically an AI bubble. I think it's a bubble. There's the entire tape has a bubble nature
forming
to
outward
it.
or
Whether
inward.
it's the digital asset treasury companies where people are buying stocks where the company's business model is to
whatever you want to
dilute
call
the shareholders.
Little channel.
In the case of a Walmart, it's a great company. It's executed great. Premium
every single
valuation,
algo range we have in store.
It's a tough, it's a tough environment
Deciding
out
what
there.
to do. Time is 10:35.
Stocks that are attractively valued. The interesting thing with Walmart is its last push to 40
IWM is back at the 0.5 Fibonacci. This is bullish rather than not.
AI and integrating ChatGPT.
Top of the purple
so
box.
There's an AI element to that
That's
as well.
something.
But I did speak about the
not
top
bad on
20,
IWM.
20 largest
IWM moving crazy
in the S&P 500. I didn't say
so fast. 10:20 dip, and then now back up to 10:35. 15 minutes.
They represent half the index by market cap, and they are expensive. And if you add Tesla's multiple in there, they're even more expensive. I was trying to be a little generous.
Fair enough. As you know, I'm coming to you on Costco. I know you're a big
Should I
Costco
draw this
devotee.
downward trend today?
Maybe I'm just making too much of this.
I have
think Costco is being viewed as a quasi play on gold. Of course, they sell gold bars.
Do I have
and
to?
I would venture to say people, while they respect what Costco's selling, they have steady membership income. A lot of folks out there just say, if they're selling gold bars,
I don't want to
can
even
get my
think about
exposure
going
to gold.
lower, but they're going down there.
Damn! Those gold bars
I ain't
tend
doing.
to go very quickly when it comes to their selling gold bars. And look, I mean, the metals trade in general this year. I mean, if you there are some strategists that say it's gone too far, too quickly.
All right, guys, let's get the thumbs up on the live stream up, please. Thank you very, very much.
Since you mentioned gold, I mean, you're looking at strategists that are pointing to 5,000 for gold going into next year. You've got the silver bulls that are talking about silver being traded like an industrial metal because it's being treated like an industrial metal because it is also used
SPX is crazy oversold.
That has to do with electronics. It's one of these metals that countries are now hoarding. So there's a case to be made for this trade to continue into 2026 despite
SPX 1 minute is crazy oversold. More likely we see the shit go back up and then do whatever it wants to do. But
he is officially stepping down as CEO. Heavy
doesn't really have to.
Telegraph move over at Berkshire Hathaway. Is his way of investing over? given where the market and what drives the market here,
I certainly would not be like, oh, this is gonna go double and then go. There's no fucking way that's happening.
Of how Warren Buffett has invested?
Absolutely. I think his message is really consistency over time and compounding returns, the power of kind of just sticking with it and sticking with positions. And I think it was either a Buffett or a Munger aphorism at one of the annual meetings that you only have to be right in stocks like 51% of the time, and you look like a genius. And so you don't have to be, 9 out of 10.
That's what they call fucking candle
people
traders.
Can complain and say that he didn't catch the tech wave.
Bullish. You only gotta be right fucking 4 out of fucking 100 fucking times.
Whether it's about a Carvana or an open door.
Oh, good old!
Oh, so sticking with it through the drawdowns and the volatility. He proved that compounding over decades is how you really become wealthy, not just sort of trading in and out of stocks.
Like
Michael,
people actually deducting, smart money deductors that have been doing this shit for a while, and they become billionaires in lives that have actually made something of their lives. They're going lower. I'm shorting.
He knew at 20 years old,
I'm not doing
25 years to figure out
those people.
And I think that's incredibly impressive.
I'm doing it.
I definitely teach his lessons to my children.
Those people, best believe
you know,
they're fucking right 85% of the time. Best fucking believe. I'm in 2.1K here, 687.
Like I said, it's incredible.
If they revert 1030, I'm leaving immediately, but I am thinking they barcode.
I don't think anyone has ever done it better and will do it better ever again.
I agree with you. Inez and Michael, so good to see you. Eric, you're sticking with me because we got a lot more coming up. Coming up, I return with a look at some Yahoo Finance trending tickers. I also return with Eric Jackson and some possible money-making ideas for next year. We'll be right back.
Yo. Damn. Please go a little bit lower in barcode. Please go a little bit lower in barcode. I just want one more candle. $100 up right now. Just want $200 on this shit. I'll be up $600 for the day. Let me the fuck out. Come on. LOD? If they break LOD, I expect a immediate bounce, but that's a speculation. Time is 10:40. Candle switch lower. Any one of these candles could blow up fucking nuke. Going lower though for now. Damn. I'm out. $2,270. I'm out. Let's go. 170. Easy. LOD retest. LOD retest. At the minimum. LOD retest. LOD retest. Barcoding. Alright. 6876. Barcoding. We're barcoding. Alright, this shit does not mean bearish. It could easily pop. This shit could easily it could easily bounce right here. It could easily go lower and then bounce. Nobody knows. Nobody knows. But what we do know is that's what's happening. So please do realize shit could bounce right here like this. Shit could go lower and then barcode, or it could go do whatever the fuck it wants, but it's doing something. 1040 did not break the floor by mere cents. That's scary. IWM looked like it was gonna bounce and then rejecting, so nobody knows at this point. IWM fake. I thought IWM was gonna bounce right here too, but I mean I don't want to fuck around and find out if the LOD gonna break here, so I leave before LOD break. And the candle is so slow. All bulls are trapped. All the bears are just fucking waiting. Slowly. Tesla, no move today. I literally said Tesla, I expect no move, right? Look at the crazy ass moves they've been doing and doing and doing, and there's no move now at all. IWM is coiling now too. And it's barcoding at the floor. So it could look bearish here for 5-10 minutes and then blow up. I don't know. Or it's not doing shit.
Things like that in the past. But what has amazed me this year with the retail investor, Eric, is they have known when to buy the dip or have a good sense, and they've stayed true.
Damn, you guys hear this shit? Retail investors are better informed because they keep saying that.
This strategy throughout the whole year.
Keep fucking.
Well, I think there's a reason why people like Tom Lee and Dan Ives are
Tom Lee
are seen as
Where's my guy that says Tom Lee with a U, bro? I missed that dude. He used to say Tom Lee every time I stream Tom Lee.
We all sort of fixate on these like one moments in time, like these weeks or months, but that where there's this huge drawdown, and everybody wants to be the next Michael Burry.
We opened at 6,900. The most crazy shit. Who remembers the pre-market, bro? The fucking pre-market did some shit like this, way down, and then came all the way back up. Wow. I was in no positions overnight, so I got my nice rest of sleep. I woke up and I was like, yo, what the fuck happened? But like, wow,
remember like a month ago, like where everybody was sort of like navel gazing and
it came right back up to where we closed. I honestly thought it was bullish too, but like I wasn't fucking biased at all because I didn't have any positions. But I mean, the market opened bearish.
These are great companies.
Pre-market looked bullish. Let's not lie. Pre-market, I think everyone in the world thinking bullish. Market opened and everything fucking just going.
As promised, let's go to Carvana. Actually, let's go to some of your
Never look back.
Carvana.
Never look back.
Bullish on
4 p.m. gap filled.
Is one of your main theses or investment theses for next year, Eric, that the digitization of
IWM
old
actually went
things
first.
just continues and picks up the pace, like buying a home, buying a car. We don't have to go to a car dealer anymore, for example.
And the only reason why I wanted to go south that market open is because of the gap. But I mean, now that we are literally, we went there crazy fast.
So, like, you didn't want to go to the
thing is, though, I played from here to here, and I didn't even hold. Like, it's just like I'm okay with what they give.
But I think AI has just sped up the pace of making that kind of digitization
somewhere 935.
So Open Door and Better Home and Finance, for example, they're
being on the wrong side of this shit absolutely terrible.
Massive market, massive TAM or total addressable market. And yet,
can you fucking even imagine, man? Not even zero DT. You gotta imagine this shit is into the fucking entire week. 1, 2, 3, 4 calls, 4-day calls. Calls from up here too. They're just crazy sight. They were like, oh, chops the news, and then they drop it into market close, and then they open it too up here into market open, and they drop it. So, almost
simplify the process in a lot of ways. So yes, like I'm looking going into 2026.
I'm not gonna say it burned the majority, but like it tried burning the majority, right? It burned all the calls. It tried burning the puts because it scared people out into market open, and then they went. So it's just crazy, bro. The only reason why we were able to tell that is because of what? IWM spike down candle to the perfect bottom of the Fibonacci and then bounced, right? We literally called this out at when 9 a.m. in the open in the WhatsApp group. Literally took a picture like this and sent it in the group. We said, wow, IWM made a full Fibonacci retracement. And then now that's what we're doing intraday. MACD coming in bearish, pre-market volume being used to do this move basically. That was the trap, the pre-market move.
Powered by AI.
Pre-market bullishness being used for this shit.
Neighborhoods
IWM bearish again, SPX bearish. We're barcoding here at the minimum. Now market about to decide if it wants to go lower. 6872. If that happens, what would most likely mean is that we're about to barcode here like this, or we're about to barcode like this or something, right? So we're about to see. But that's what the cycle, that's what the possibility, that's what the deductions say.
I've seen you out in front of Drake's house.
Not speculative candle MACD bullshit. There is no volume. There's no MACD. So right now, technically speaking, there's no volume. RSI MACD is just in bearish territory.
Well,
and
it started with Open Door.
You can do whatever the fuck it wants, basically. IWM is literally not at the floor.
International, by the way. 70% of kind of supporters that
let's see what happens here. This is the new floor.
And
this is the 3/3 playing.
And
it could happen. It could spike down, bear trap, and go fucking crazy. Nuke and come back here in a heartbeat.
And other stocks.
Why?
Like
Because we're in the 3/3 all day long. This is literally 1/3, 2/3, 3/3 from 9:30 open into today. So it's gonna happen. Shits are gonna move like fucking flying rock right here. Is what I'm trying to say, and it's gonna be crazy risky for bears. It's going to be crazy risky for bulls,
they have some job,
no matter what they do
plumbers,
here.
They could be,
so
painters or
if
whatever,
that's the case,
and they're going to continue to do that.
I'm going to chill the fuck out.
But they realize
I don't give a fuck.
Ahead,
but I really realize that's what's going on. You have to understand that there's bigger things going on. We are in the 3/3 bearish cycle from the top. We are in a 1/3, 2/3, 3/3 bearish cycle from the morning. We are in a 1/3, 2/3 bearish cycle from
or the lottery, or zero DTE.
There's nothing that says we're in a 1/3, 2/3 bullish cycle yet. That's all it means. But the risk is crazy.
Studying stocks.
And they're going a little bit lower. QQQ divergence is there. Maybe that's another setup, but I mean divergence is still there. IWM is holding it up. I don't know why. I have no idea why. Tesla's holding it up. SPX is
power of this rising dynasty family. People
trying to
say,
go
hey,
lower.
I'm smart enough. But I have to take responsibility to
now.
get ahead and to create some generational wealth for my family. And I think the stock market's the way to do that.
This is the barcode.
Amazing times to be an investor. I'm so psyched for next year. And Eric, on personal, you've given us a lot of time of your time this year. I thank you for it. Happy New Year, my friend. I will talk to you in the new year.
Have a great 2026,
Thanks,
Brian.
I appreciate it. All right, that
does it for Morning Brief, presented
by Robinhood. I'll be right back.
Like a bear trap crazy right here.
All in on Sullivan.
Let's talk about robo-taxis, because you think that 2026 could actually be a big year for one.
Bro, very good talk about Waymo in the news. That's crazy. News helps. It's set up.
The latest Fed minutes show more disagreement inside the central bank, raising fresh questions about the policy path next year. Joining us now is former Federal Reserve Vice Chair at Princeton, Professor Alan Blinder. In a Wall Street Journal op-ed from Monday, he argued that dissent at the Fed isn't a red flag, but a normal part of the decision-making process. It's good to see
another
you,
good day. Looks like
my takeaway on the Fed is on the
I
minutes
am already
yesterday.
done for the day, and I'm up $600. So $620.
Adjustments to the target range for the Fed funds rate would be appropriate if inflation declined over time as expected. That they're ready to cut more. Maybe they're going to pause for a little bit here, but they're in cutting mode still. What do you think?
Well, remember, most of those remarks were directed at the decision that was in front of them right then. Some of them were thinking ahead, that's for sure. They're all thinking ahead, but in terms of talking, the discussion tends to focus on
the last day of the trading.
These are the minutes of
look at the cornucopia cone being broken down. The shit I drew.
By a 9-3 vote to cut 25.
Look at that cornucopia cone being broken down.
As it said, agreed with that decision, but a non-trivial number did not agree with that decision. The
Bears are strong.
You know, it depends who has the vote at each meeting, but the
vote
look
at this waterfall.
Closer to unanimity, I think, than the sentiment on the committee.
Agree. And
Waterfall.
now we get a new crop of voters next year. The regional Fed presidents
are going crazy
in
down.
Terms of who votes. So how do we game out
pushing
what
this
happens
shit crazy
next year
down
on policy?
today now.
Well, you know, I think it's very early to game out. I think the likelihood is that we're going to have some modest further cutting, but that likelihood is enshrouded in fog now. It's just coming out of the data fog that the government shutdown put
30
us
points
in.
already on
As
SPX.
you noted, I'm sure a lot of the numbers that just came out recently, for example, on the CPI, have much more than the usual amount of guesswork in them. And we all took notice when Chairman Powell suggested that the jobs numbers would be revised
I did not expect that should be broken down. Just going like that, though.
So we're still coming through a data fog. We should be mostly out of it by the next Fed meeting, and I think it'll be an easier decision.
The divergence still at the 4.
It depends, of course, what the new data shows.
Man, this downward trend is crazy strong,
I mean, obviously, the other big question is who's going to
some
be
sort of
chair.
downward
And
trend
it sounds
today
like what
on
the
the
White House
market.
is gearing up for is to announce
Crazy strong.
that person, you know, before end of January 31st, which is when the Stephen
SPX
Myron
aided today.
governor comes off. How, if you were inside the Fed, how would that go down? If they knew months in advance who the next chair would be and if that person joined the Fed. I guess they would have to do that for all of them except for Waller, who's already a governor.
Yeah, that's correct.
I literally called out. Who remembers the market update video? I said the market is at a wedge. The market in QQQ and Tesla is at the tippity top of the wedge. I called out, right?
Up to Myron, but yes, it's up to the president.
I really hope the market update video, people that watched it got some benefit out of it, because this was the most lowest viewed market update video that I've ever posted.
So to speak, the earlier the announcement, the worse. Because as soon as you announce the new Fed chair, the Fed is now a hydra-headed monster with two heads. And depending on how the new designated head behaves himself, they've all been hymns that have been mentioned seriously. That could wreak havoc in terms of what the markets believe the Fed is going to do. Powell is still chairman. There's no indication he's going to resign early. That would be a
what happens. Tesla pulls back. He goes. How is SPY going to hold?
Have one chairman at a time, just as we
have
one
IWM pulls back.
president
Everything's set up. Wow. Amazing end to the year. From my point of view, all things have already played and all things are playing out right now. From my point of view. Market update video went out on literally Sunday night. It was right here before Monday, right? At the tippity top. For 1, 2, 3 days. Wedge is breaking down crazy, and they want to go crazy lower into somewhere downward trend line, which they're already in. So, wow. That has to be beautiful. That has to be something today. This may be some sort of 3/3 forming down there too. Wow. Hello, the divergence about to break on QQQ and SPY. Thank you so much, those that have hit the like button on this video as well, but also the market update video, because the market update video likes were at like 35, 30, so none of that changed, but it's just, yeah, I guess the algorithm can't like pick it up and like send it over, I guess, or to new people or whatever, but that is.
Let's figure out what all this means for the markets and for the economy
in
the new year. Mohamed El-Arian joins us. Allianz's
market
chief
is
economic
fucking
advisor.
dumping now.
I mean, do you see a scenario, Mohamed, where we have
this is the
even
3/3
higher
extending
unemployment and higher growth at the same time?
And we saw on the daily chart that this is a wedge breaking down.
I worry about that a great deal. And as you both discussed, it has political, social, and economic implications. Look, the decoupling of GDP growth from employment has been happening for a while, but it is accelerating. And it's accelerating because of innovation. And the way to deal with it is to have an AI adoption policy. You know, Sarah, David, you and we all talk about those working on AI. It's so exciting. What are the latest innovations? But as important is the issue of working with AI. And as yet, we do not have an adoption policy. And that's going to be really important to determine the mindsets of companies as they move forward.
10:35 when they broke
what does that mean for
cornucopia account? 25
I mean, let's just start
minutes.
with the Fed, for instance, because I noted it was mentioned in the minutes.
Damn, now I'm feeling FOMO. I'm not gonna lie.
Whether it's a structural or cyclical change in jobs.
Now I'm feeling FOMO about watching.
Yeah, and as you point out, this is complicating the Fed's task for two reasons.
Biggest drop of the day, almost.
It forces them.
This is the biggest drop of the day.
They haven't done yet to take a strategic view. They're gonna have to decide: is this a fundamentally productivity enhancing innovation?
The thing is, though, this is like extreme greed 3/3. So
then the speed limit for the economy goes up.
But I'm okay.
They can bring rates down. The second issue is, what do you do when the two parts of your dual mandate starts decoupling even more?
Nobody knows where this shit's
going to stop. And that's what's going to happen moving forward. So it does complicate the Fed both from a short-term perspective, but critically, they've got to take a strategic view of what this means for the economy going forward.
So, maybe they'll do that, maybe they won't. What do you expect in terms of Fed policy? Since the market's now, at 2 cuts next year. The dot plot's at 1 cut. We don't know exactly who's going to be on the committee. There's a lot of question marks.
So a lot will depend on the new Fed chair, not in the sense of they can completely get what they want, but whether they can unify what is a deeply divided Fed committee. We saw very clearly from the minutes yesterday that the disagreements are deepening.
This is faster than
there's more issues they disagree on, and they disagree to a greater extent on them. So it is going to be a very divided.
Right, let's see what happens with IWM. This is the third bear cycle. It could bear trap big here, but there's no confirmation logs up. This is bearish territory.
Greenspan is through economic.
But there's a lot of bears here, so I expect the bear trap at some point.
Authority on a divided Fed. Otherwise, it will be a very muddled middle sort of
lower, but I expect
policy.
the bear trap. Fucked on. They could use this gap hope to bear trap everybody down there, so I don't care. Time is 11. Bounce strike. I don't really do shit off of emotions, or I don't really do shit off of price targets, or I don't really do shit off of anything else other than cycle analysis for myself. So that's the reason why I don't really care about super far out price targets and candles and anything else, basically, for myself, because that's how I am. I've been like that for quite a while. And it took me a long time to kind of like not be like how I was for how everyone is. So yeah, I'm just gonna go look at other things. Like this.
Let's get to Kevin Green, who joins me on this day, and obviously we got the initial jobless claims this morning. 199,000 on the headline. Not too bad, actually. One of the lowest this year. KG, what does it tell you?
Well, we also have to keep in mind there are some seasonal factors as well as seasonal adjustments into this number, but we are not seeing a ramp up in jobless claims at this point in time. And in fact, we are starting to see it actually move to the downside if you're looking at the last couple of weeks, which is a positive sign. And you talked about the fact that it was better than the street's expectations, coming in at 199,000. The street was looking for 219,000. But what's also very key, Sam, is this volatility that we are seeing coming from Texas. And that's really what's been driving a lot of this move to the downside, as well as maybe some slight upticks here. Texas actually saw a 50% drop on a week-over-week basis in initial claims, so that did draw on the index as a whole. You also did see continuing claims also dropping to the downside as well. Once again, major adjustments coming from Texas, as well as major adjustments coming from California. So I would say this is seasonal in nature. Let's see if this is going to be reconfirmed over the next week or 2 weeks here. But overall,
make sure we hit the like button, guys.
And what's the result of that? The dollar is moving to the upside here today. Yields also moving to the upside. It makes it a little bit more difficult for the Fed to actually cut rates, which could provide maybe a little bit of volatility for the markets as a whole. I'm not sure if that's the main driver for a little bit of selling pressure today.
Pick up the channel.
The indexes,
new people
but
can find the
once
channel.
Again, the economic data is looking pretty favorable, at least for now. Over the next month or so, month and a half, we probably will get a little bit more of a smoothing out of a lot of the economic data coming from the federal government. As the government shutdown effects are still kind of being reflected in some of the data points.
Yeah, we are looking for a bit of a cleaner picture. Hopefully we'll get that come January. Let's just park the macro aside there. Let's focus on China.
I honestly think a bounce is more possible
Beijing
than
wants everybody
a rejection.
to use domestic
It's just
chips
too much,
in the country.
too much.
The companies over in China have a different idea. They still have a strong appetite for these H200s. We're seeing this report now that NVIDIA is saying, hey, TSMC,
I think more than likely 0DT would say cycle chop at the minimum and then decide what to do. 5-minute is oversold,
but
that really doesn't mean it can't go more and more and more. So it's absolutely true.
Kind of pricing in that they would like
Looking
to see the numbers actually being reflected, or China
more and
from a government standpoint actually confirming this report from Reuters here. But they are reporting that Chinese tech firms have ordered over 2 million chips, H200 chips.
Maybe that's their plan. I mean, I guess it's 50-50.
Right now has
Gotta
around
watch.
700,000 within their inventory.
I really think it takes something as a presidential
that you're looking at, and we are seeing potentially TSMC starting to ramp up production of these H200 starting in Q2.
I just don't play the 330. I don't care. I don't really care what they do here. They are creating
for NVIDIA.
Downward
Each
channel.
one of these chips cost around $27,000. So if you're looking at that $2 million order, if you will, if that does come to fruition, you're talking around $54 billion in revenue that we could see NVIDIA capture. Now, obviously, that will not be in 1 quarter or even 2 quarters. That could be spread out over a couple of quarters here. But that's something that has not been priced into their guidance moving forward. They have actually removed the China sales when it comes to these GPUs because of the
246.8 breaks today, then that's how you really know.
So a really
on the 5 or the 15-minute candle.
Right now, NVIDIA
until then,
was in this kind of consolidation pattern.
This is pivot point trading now off the floor, 3/3 bear cycle getting trapped trying, so things are getting risky. Things are trading a cycle at the floor.
I think if you can break above 190, close above that level for 2
I guess we're chopping on this shit, this IWM downward trend instead of the
new all-time highs. But this is actually a really decent story. You get a little bit concerned though, Sam, that a lot of these positive news stories around artificial intelligence and these purchasing agreements and things of that nature just has not been able to be a very strong and long-lasting catalyst for a lot of these stocks. That gets a little bit concerning that maybe the market
the most problem
is kind of calling
with
a bluff
a lot of retail, the majority is as the candles go lower and lower, and the cycle changes from 1/3, 2/3 into 3/3, they get more excited, and they want more, and they get more euphoric. What should be happening is as you're going from 1/3, 2/3 into 3/3, you should be getting more excited that you got the deduction right in the 1/3, 2/3 going into 3/3. You should be more willing and more willful to be personally, I'm speaking to myself, right? This is what I do for myself. You should be more and more understanding of the cycle and be more faster moving because you understand that 3/3 moves crazy. And it's like, that's what I mean by cycle analysis as it goes more and more, you know what I'm saying? Instead of just candle, MACD, candle, because anybody and their mother and their neighborhood dog can look at the fucking MACD and candle and tell you it's bullish or bearish or it's green or red. You just gotta train them with the bone. You know, that's literally what the market does, right? But I mean, all I'm saying is, right, cycle and time confirmation alone, nothing else really in the market. Candles is part of time confirmation, candles, I guess, visually alone is the only thing that could really tell people this shit is crazy or this shit is risky or this is smart or this is deductible or this is a possibility or this is reasonable or this is insane or this is too, you know, whatever the hell it is people may do or don't do that makes them who they are. But honestly, I'm saying this shit too. There's a lot of the paper trading fake bullshit fucking like TJR. Yeah. I'm not saying that. I just say a lot. There's a lot of online saying weird things, saying a lot of. I don't know if it's true or not. I don't watch or follow any of them. But I'm just saying, online could be a very. You can make shit up on candles. Is all I'm saying. Red or green. And it's fucking very dangerous on what the fucking person's saying and what the hell you're actually listening to and what they are really showing and proving and saying. Because of what they're doing is just, oh, look at that candle, bullish, bearish. Oh, and then after it happens, they're like, oh, look at that. Oh, happened. Oh, there's something telling you that clearly it has already happened. It's something that's chasing, and that's nothing other than having an understanding of being bullshitted on for 40 years of their lives by the market, so they have a little bit of a better understanding of what a green candle and a red candle does. That has nothing to do with setup traders. Setup traders could be 20 years old, 40 years old, 50 years old, 80 years old, or whatever age. I just think they have dedicated some portion of their lives, a long time, 5, 10, 15 years, whatever it is, or plus, to really try to educate and really explain in a scientific, logical, provable way, visual or not, before or post or not, based on what's really happening and proving what other people have been saying, not even you, right? Not just candles and MACD. That's ain't nothing gonna fucking defeat that. Nothing. Candle traders are just fucking this is the reason why we need candle traders. Actually, the market loves candle traders. I love candle traders. Why? It's needed. But what is true is that they are used really, really bad. Like September, October, December, January, really, 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 really bad. Right, there was a friend that said, "Oh, blah 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 blah. I used to be fine back in last year when we were just going up and up and up and up and up." And I was like, "Bro, you know how fucking terrible that shit sounds? Like, you really just said, like, you know how fucking terrible that shit sounds? Having no fucking analysis, whatever, and just being bullish, 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 and bullish, 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 and then being right like maybe 3 or fucking 4 out of 10 days, and it was just like, that's crazy. I guess people do that and they're okay with it, but at the end of the day, that is wild shit. So dangerous, real in real situations.
One. I mean, obviously Chinese companies, domestically speaking, that want to get their hands on this stuff, as you say. Nvidia,
Dr. Barry ain't
which
fucking
reported
doing
strong
100
earnings,
fucking percent portfolios
China, also
with fucking
TSMC, and the US government,
100,000
because they're
SPX
also going to get a cut
contracts
from
with his
this, according to the Trump
100,000 SPX
administration
contracts
too. So,
ability
you know,
on one
an
fucking
interesting story.
dumbass
We'll
fucking
continue to track
environment.
that
Ain't nobody
one.
doing that, bro.
Let's switch gears to what's happening in solar. It's been a pretty good year. I'm just looking at this TAN ETF. No doubt a moment in the
actually,
sunshine.
70K, 40K, and then get
40%
destroyed
year to date.
from
Just talk us
930
through
to
that.
945, 950 with no setup.
Yeah, well, Sam, it's the end of the year, and I think it's very important for us to kind of look at a lot of industries or even sectors that have been beaten down one way or another. We have seen the solar sector in general see a lot of headwinds when it comes to tax credits being pulled from the U.S. government, as well as maybe policy from the current administration that might not be as favorable. But this is kind of one of those industries that is still thriving to the upside, especially when you're looking at commercial demand. Energy production, especially when you're coming from solar, is the quickest that you can actually bring to market, bring online in order to put into the grid or even power some of these data centers. So there's still a lot of strength in these companies like First Solar, even Sunrun for that matter, that is actually pushing this higher. So keep your eye out on this. There's other industries like the healthcare industry right now, especially when you're looking at the insurers, that have had a lot of negative headlines, a lot of regulatory headwinds, but maybe they actually do see a little bit of bargain hunting from a lot of investors in 2026 because of the oversold nature of their industry. It may be that the final product of the ACA readjustments that we might see in 2026 could be a tailwind for these insurance companies. So just trying to draw a little bit of a parallel that sometimes the narrative and the headlines may not actually match the price action that we are seeing for these stocks. And I think the TAN ETF and the solar stocks, for the most part outside of in-phase, really reflect that this year.
And what is going on with the metals space today? Because we did see a nice recovery yesterday. We're back in the red today. I'm just looking across some of the price action right now. I mean, you've got silver getting hammered to the tune of 6.5%, platinum down about 7%, palladium down 3.5%. I'm seeing this headline, obviously, that's been catching a lot of attention, how China is actually going to pluck a page out of its rare earths playbook now and going to be restricting silver exports, I believe, starting from New Year's Day tomorrow. How much of that's got to do with it? Just talk us through the price action.
I'm not going to call no volume
that
bearish.
Story, I think we also have to clarify putting restrictions in and
could be bearish more, sure,
rather than potentially banning. And I think
the
market's I'm not kind of preparing that maybe a full-on ban of silver exports could be in the cards for next year. That would actually be a very, very negative signal between the U.S. and China relations, unfortunately. So that is obviously causing some headlines and some movement in the metal space as a whole. I think you're also just seeing the fact that it has run up too far, too fast here. And you are starting to see maybe a little bit of digestion in the market. We might be seeing a topping pattern taking place. Usually when we see reversals, it's not a one-day event. You see a battle at very high levels. You see volume being outsized for a couple of trading sessions. And then we try to pick a direction. It's either going to be a consolidation and continued break to the upside, or it's going to be a breakdown when you're looking at silver. Now, platinum or palladium, for that matter, was actually down about 8%, 9% in the overnight session. Buyers have stepped in and trying to defend the 20-day moving average. So this is not over with yet. You are seeing that volatility. The market's trying to price in the direction of what's going to happen next. The fundamental story is there, but is the valuation story where a lot of these metals really making sense for big institutional investors? And I think that's the battle that we're going to see over the next couple of weeks.
Yeah, and we've had a lot of guests talking about this sort of commodities bull market being one of the big stories for 2026. So we'll have to wait and see. But for now, we are seeing all the metals down quite considerably. Thanks, KG, for getting us across the price action and some of the macro data and other headlines we're tracking this morning on this New Year's Eve.
Two. Three, two, three. If more volume comes, I will maybe go long for a couple of minutes, but I'm just still watching. I'm removing a lot of non-active, non-watchers from the WhatsApp group, so nine, seven. Not a lot of volume. Just candle just showing bullish, but not really bullish, just deciding. Bar coding almost. Bar coding on IWM, I think, not SPX. BOC just shifted to the chop zone. IWM coming in with bullish MACD holding.
Welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in the team from Charles Schwab. That is Colin Martin, Head of Fixed Income Research and Strategy, Schwab Center for Financial Research. Okay, so Colin, we got through the big event of the year, of the week, I should say. The year, oh my gosh, the week. And that was the FOMC minutes. And it was a bit of a nothing burger. But what it did show us was that there are deep divisions within the Fed. What were your takeaways?
Yeah, that was the main takeaway, Sam, that there are a lot of divisions out there, a lot of dispersion of views, but we knew that already. And we can see that from the Fed's dot plot that we got in the middle of December, that there are some officials who are, focusing on I wouldn't call it an aggressive pace of rate cuts, but more projecting more rate cuts going forward. But then there's some that are a little bit more hawkish that are projecting, no rate cuts or even think rates should be a little bit higher right now. So no change there. When we look at the minutes, they make a lot of headlines, but it is very vague. And there is a way we look at kind of the qualitative approach they provide to how
holding and hovering.
They quantify things. And there's actually a report that the Fed puts out in terms of how many people or officials characterized as few, many, some, something like that. And the key word here was that some thought it was appropriate to hold rates steady for a while. And that's, more than a couple of
IWM not helping.
So there's
that's
not
weird.
just one or two people who are out there thinking that rates are appropriate right now. And that just means the Fed will probably be on hold for a little while. That's our case right now. We think 1 or 2 rate cuts next year, but the Fed has time, just like they had time in 2025. They cut rates by a full percentage point in 2024 and then basically went on hold for 9 months. I'm not sure if it'll be 9 months again next year, but I think they can be patient right now, given the economic outlook and given that wide dispersion of views, before we get more evidence that maybe the labor market is cooling more than we think it is, or maybe that inflation is actually steadily moving lower. But I think that will take some time because it'll take a few months before we get a complete economic picture, as it'll take time for the real data come in following the reopening of the government.
Yeah, you raise an interesting point, and that's certainly what we were talking about off the back of the last meeting, was the fact that we went from December to September in okay shape, despite the April hiccup, of course, in the markets. But, now it really feels like it's shifted from not just when and how much, but also just around why and how fast the Fed should go as well. You talked about the data. Obviously, we're looking for a bit more of a cleaner picture. We got some initial jobless claims out this morning, looking okay, but there are some seasonal factors to consider here. What are you expecting in the first couple of weeks of January? What data points are you going to be paying attention to the most?
It's going to be the labor market and inflation as they're going to be the key focus right now. But I don't think it's just going to be one more month of data. I think we'll need to see a couple more months before things get kind of filtered through as the government reopened. You mentioned the initial and continuing jobless claims this morning, better than expected. But again, they can be a little bit funky around the holiday season. We saw that around Thanksgiving with a pretty low reading for initial jobless claims. And now we saw another low reading with the Christmas week. So a lot of noise there. We want to see a handful of weeks before we get a more complete picture there. But it's really going to come down to the labor market and inflation. We got some good news with the most recent CPI report, but again, we didn't get a key month of October. So we saw a long-term 12-month trend. We didn't see that monthly
and
trend.
RSI is coming back up, trying.
So again, very incomplete. So it's not just the next
IWM is relaxing, reverting back up.
3 more months, I think, before we get that.
If it flips this candle or support on the 5 or the 15 and things start changing, then this is more bullish than not. We are chopping back up to 6876, like I said. And the bears are getting burnt off the floor.
International markets have outperformed too, but just talk us through.
Market always cycles, and market always rewards those that are patient, right?
Yeah, it was a really
and
good
I literally
year for
said
bonds
in the
this year.
WhatsApp
In
group,
fact,
if there's more volume, things are more bullish than not.
Maybe there's some indexes out there, a little bit more niche
right.
ones, real peak.
Still chop back the RSI bullish trying at 1116. IWM is not helping.
Investments this year. If we look at high quality investments, we saw returns anywhere from the
3/3 is cooking down. We are back at 6876. We went extreme lower than that, and now we're coming back to that. So do realize that before it's too late.
Of return.
IWM is now above.
First, yields have declined as the year progressed. So the starting point is a little bit lower, meaning the income earned relative to your price will be a little bit lower, so slightly smaller income returns.
Guys, someone's like trying to talk to me in the WhatsApp group. Like the WhatsApp group is, I'm sorry, like not for inactive people too, sure, but we want people to talk to each other in the WhatsApp group, not necessarily try to talk to me or like try to ask me personal questions, because like I don't really have time for that when the market's open. So you guys should just,
to fall as much as they
stay
did
active
this year.
in the YouTube chat, but also if you want to post some things here and there and be like, oh, this is what I did or whatever in the WhatsApp group, that's fine too. But there's a big difference from
bad reasons or negative reasons, slower growth or a potential recession. So while you might get a boost with, say, treasury prices, you probably see risk assets sell off a little bit there. So kind of be careful what you wish for.
Do that on WhatsApp because I'm really doing everything else too.
Hey, Colin, we're going to wrap it up there, but thank you so much for all your help this year.
I'm personally doing
really
my own thing too.
Colin Martin there. We'll see
for
you in
myself,
2026.
there's a lot of things going on. So, yeah. This is only for people that have just came into the WhatsApp group. Like 2-3 days ago, we added 2 to 5 people, or 6 people. But I mean, everyone else already understands. But I'm saying those people that just joined. Yeah. There's a lot of things that happen in the market clearly every day. So, you know, just best to say logical things, rational things at logical times, and also to just let the market be and watch things and being like, oh, okay, 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 and then you watch and then you see or you whatever, and then if yeah. All right, bulls are trying to give up trying or what? Let's see.
And Tony,
tariff fear-mongering collapses as economy defies the experts.
But it remained resilient for sure. What do you see happening in the new year?
Good news for Trump.
Well, actually,
Trump.
I think you're absolutely right. It certainly has remained resilient
despite
range
the
on
IWM
mess that was left behind by the Biden administration. But that mess has largely been dealt with by
or whatever
tax
is
reform,
going on.
regulatory reform, energy
I
reform.
would have liked to see that shit go back into,
in the
but
right
it's
direction.
not.
They're helping put downward
This is the
pressure
previous
on
low
many,
today also
many
turned
consumer
into resistance
prices.
and there's
Great
support
news
happening.
on that front. We've seen not only job growth, but the job growth being entirely in the private sector on net, as well as all net jobs going to native-born Americans, not just foreign-born workers that the previous administration was importing en masse. So really, all the dials are starting to line up, and despite all the turbulence this year, despite all of the transitions that we have seen, we are now moving in the right direction, and I think we have really set up 2026 for some blockbuster growth. So I'm very, very excited. Again, all the dials really seem to be lining up, Ashley.
Very good. We should point out, EJ, starting tomorrow, the minimum wage in 19 states will be getting a boost, putting more people, putting more money in people's pockets, but could hurt small businesses as well. Overall, is it good for the economy?
You know, Ashley, it's kind of counterintuitive here when we talk about the minimum wage, but the reality is it's actually not. It's not good. This is a net negative, not a net positive. You know, you're absolutely right, Ashley, when you say that this means more money in the pockets, but it's more money in the pockets of people who keep their jobs. What about all the people who are going to lose their jobs because of these hikes? You know, if you charge more for something, you get less of it, right? If you charge a small business more for labor, what happens? Well, the small business will buy less labor. That's Econ 101, right? And so, yes, it is going to hurt small businesses, but it's also going to hurt those people who lose their jobs. Let's be honest, the real minimum wage was, is, and always will be zero.
Very good point. And just to follow up quickly, EJ, on tariffs, we had all these forecasts.
I really want a long
the economy was going to
going
crater. What is the president doing? None of that came true, did it?
No, Ashley, you're absolutely right. All of these so-called experts, right, who told us that it was going to be doom and gloom, well, they certainly now have egg on their face. The reality is that as time has gone on, the administration has really fine-tuned this tariff strategy, and they continue to do so, and it continues to get better and better. And regardless of the outcome in this upcoming Supreme Court decision, you know, the administration still has a lot of other tools in the toolkit when it comes to implementing tariffs. And I think that tariff strategy, again, will continue to be refined over time, and therefore will continue to be more effective and more efficient as well.
I'm feeling very optimistic on this New Year's Eve. EJ and Tony, thank you, sir, as always, and Happy New Year to you.
Happy New Year to you. It's pretty nasty how they got the calls destroyed. Damn.
Exchanges that cater to retail traders have been racing to get a piece of the booming prediction markets. Mackenzie Sagalos joins us now. She's got a look at who is leading this important race. Mackenzie.
And David, it is a tale of two fintechs. Robinhood is up about 200% this year, one of the best performers in the S&P 500. And Coinbase, it hit an all-time high
above $440
in July, but it is now in the red year to date, still very much trading like a crypto proxy. And that divergence tells a story. Prediction markets let you trade on real-world outcomes, and the category has exploded in 2025. Weekly volumes have topped 2 billion. Kalshi alone hit 50 billion in annualized volume this year. And analysts say this could be a $1 trillion market by the end of the decade. Now, Robinhood has proven prediction markets can be a breakout product inside of a mainstream brokerage. 11 billion contracts traded since launching last year. Now it's fastest growing product by revenue in company history. And it's pushing deep into sports contracts tied to NFL games and players' territory that's traditionally belonged to Sportsbook. Now, in November, it took a majority stake in Ledger X with Susquehanna, so now it controls its own CFTC-regulated exchange and clearinghouse. Meanwhile, Coinbase
look at this knife already broke out, though.
Prediction markets this month and just announced its 10th acquisition of the year, a startup called The Clearing Company run by Polymarket and Kalshi veterans that gives Coinbase the tech and talent that it needs to clear and settle contracts. But the space, it is getting crowded fast. DraftKings bought its own exchange. FanDuel is teaming up with the CME. Polymarket is entering the U.S. through a newly approved venue. So really, this is shaping up to be the next big battleground for retail trading. Sarah?
Robinhood, huh? Oh, God.
Now for the word on Wall Street, top investors watching your money. Joining me now, Menden Capital Advisors President and CIO Anton Schutz. Also,
they're not saying crypto could be the AI story now.
We're going to start with you here. Take a look at futures. Final trading day 2025. We have just some slight red arrows here. Markets are going to be closed tomorrow, of course. Stocks ending the year with a third straight year of double-digit gains.
MACD volume is actually in bullish territory for the first time here now.
Strong returns, even with a lot of swings when it came to trade policy and geopolitical tensions and worries about valuations. Momentum did kind of fade late in December. That Santa Claus rally didn't materialize, but AI really defined the market. Alphabet jumping more than 65%. NVIDIA gained 40%.
I had already built on SPX 5 minute.
Amazon, single-digit gains there, Anton.
Look at that fucking chop. That was a great.
Now what's behind us?
It just went extended and then great bottom.
Well, I expect the rally to broaden out. I mean, first of all, you made a great.
I don't want to chase the fucking top, but like that was a great bottom. It's just it kind of looked like
that money's going to get
IWM.
It's going to get saved. Some of it
brought that shit lower on purpose.
I think GDP is going to be strong. We've got central banks around the world lowering rates. Certainly, ours has been much more accommodative, and I expect to be even more accommodative once we've got a change in Fed leadership. So I think we're poised to have a good year, but a broadening year, not just a few companies leading the market higher, but a much broader market, potentially the Russell 2000 outperforming, value certainly cheap, and financials, which I focus on, are incredibly cheap. And we're in an also incredible deregulatory environment.
All right, cycle happening now. Let's see if the bottom something holds. It's 11:30. Projection, one candle coming, but it could be 1, 2, 3 red candle. No cycle confirmation, and then bear trap, and then go higher.
Or something else. And then lastly, one of the biggest beneficiaries of AI.
Or chop at the minimum, not like super high, but like just chop right below VWAP or some shit.
Real quick, there's a huge push for deregulation in financial services and for banks, and that's really hasn't come to fruition yet, Anton.
No, but it's all coming. It's all going to show up in earnings. Going to be less employees, and M&A is really happening. And I think one of the biggest things that happened yesterday is the OCC is really taking a look at the size of companies and saying, hey, 700 billion plus matters, below doesn't.
Yeah.
well, they're all gonna race to get to 700 billion. And so there's gonna be tons of
cycle is coming.
Yeah, I think the point that Anton was making about AI is the amount of efficiency that businesses
Things
are
are not aligned on SPY, QQQ, and IWM.
Some of the labor softening is really
QQQ and SPY is aligned,
not
IWM.
To some of that, some of those labor models, and banks particularly are going to be able to streamline operations pretty significantly.
No, I think it's going to be a real game changer, and I agree with Anton. You're going to see it in the earnings reports sooner rather than later. Marcus, let's talk about the IPOs that could be coming in 2026. There's a lot of excitement about this. You know, a lot of this was delayed by the government shutdown, but bankers are watching for a blockbuster pipeline of IPOs. So here we go.
The 1 minute gap, huh?
Motive. They've announced a 2026 debut. SpaceX is moving ahead with plans to raise more than $30 billion to go public. OpenAI, Databricks, Anthropic. All of these are being considered for 2026, Marcus.
Well, here's what's interesting. The ones that you're hearing about are big numbers, and they're all in either the AI or some technology space. You're not hearing traditional IPOs like you would before around retail.
What a day.
When you look at OpenAI, that one probably is the end of 26, potentially the beginning of 27.
What a best ending to the end of the year. Look at the live stream title now.
Start to focus on some of these other ones in the blockchain.
The SPX 1 minute gap fills.
Who are finally going to start to unpack the ability for consumers to invest in this particular space. That's probably going to unlock more value. I think blockchain and crypto could be the AI story of 26.
Bigger than, like we were just showing SpaceX. I mean, because there's a lot of
chopping
excitement
at
about
the area,
SpaceX.
though.
Yeah. SpaceX is exciting, but I think at the end of the day, where consumers are going to put their extra money in things that they can understand, they can invest in, and they believe are going to change their life,
IWM,
SpaceX is going to be
huge
largely
rejection.
institutional.
So it's not really bullish anymore. It's not really bearish anymore. It's just chopping almost.
Index funds and things of that nature. I think you're going to find themselves in blockchain and crypto in 26.
Okay, yeah, no, that's been a big push for this administration in
that
2025.
crazy difference in
let's take a look
IWM
at yields this morning.
and
The December
SPY
Fed minutes
QQQ,
did
and
show
then fucking
officials
aligned.
were
Like,
sharply
what the
divided
fuck?
about the cut for December. Several called the decision finally balanced. Policymakers saying more cuts could come if inflation eases further. Others are favoring holding rates steady for some time, and they are signaling kind of this pause in January.
Previous low today turned into resistance and or support.
Downside risks to the labor market, Anton. What did you make of the minutes?
Well, I mean, I completely agree, right? The Fed's dual mandate has got a problem, right? You've got a little inflation still left. You've got people losing jobs. AI certainly responsible for some of that. So how do they solve that? They really have an issue here. I think inflation calms down. I think the tariff stuff is largely behind us. I know we have the Supreme Court ruling. Trump administration will find ways around it, you know, but you don't have iterative process, right? You don't have inflation on tariffs. It's a one-time thing. They may get lowered as other people play nice with us. So I don't think inflation's an issue. I think they'll focus on labor, and I think they really need to focus on housing, right? We've got to find an affordability issue, and the best way to do that is to drive long rates lower. So you may have operation twists and things like that, where the Fed, instead of buying short-term treasuries, actually changes its modus and buys long-term treasuries, not necessarily increasing the balance sheet, but allowing long rates to come down, allowing people to refinance, allowing people to afford new housing.
Yeah, I'm glad that he said it.
I am too. Marcus, go ahead. Yeah.
There is only
I think we're barcoding it. There's a 11:30 algo range unless they really break it down.
Treasury breaking 4%. We continue to sit around this 4.1, 4.2 range, and
5 or the 15-minute candle would mean something.
10-year Treasury doesn't drop. We don't get the mortgage relief that we need. We don't get the housing starts that we need. We don't get the refinancing that we need. And that's all part of the affordability piece when you're talking about giving people more money back into their wallet. Period. End of story.
Yeah, and that's going to be those returns. But again, the Fed can do they can do rate cuts. But again, I'm so glad you brought up the 10-year, Marcus. I think that is the real key here, and I agree with you 100%. And portable mortgages. I'm going to keep. That's my New Year's resolution. Get that across. He's shaking his head. We'll talk about that in a bit. Yeah. Anton Schutz, it's great to see you. Marcus, of course, is going to stay with us all morning long. Happy New Year, Anton.
Thanks, Anton.
All right.
Happy New Year.
Well. Sorry about that.
Welcome back to Morning Trade Line.
Well.
I'm Sam Vardas on the floor of the New York Stock Exchange. Let's welcome in our next guest to talk about the software space in 2026. And joining us now, very pleased to say, Steve Koenig, who's the US Head of Software and Services Research at Macquarie. Very good morning to you, Steve. Happy New Year's Eve. Thanks so much for joining us. So when you do a pulse check on software, is it still beating?
Yeah. Thank you, Sam. The pulse of software is still beating. I think we're set up to, have a pretty good momentum going into 2026. I think we're seeing some positive signs. We track job postings for 40 growth software companies across the space, and job postings have been ramping for throughout Q3, July, August, September, October, and into November. I think that's positive. And I think, we're seeing good demand signals out there. So, it's going to depend on the performance of each company, how they're positioned, how their AI stories are playing out, et cetera. But broadly speaking, the space is positioned pretty well to perform.
I love that you're talking about jobs, and I love that there are opportunities out there. I know that we're obviously going to be talking about the performance of software, and you've got
Let's see what happens with the MACD. If it stays bullish or not. If it stays bullish, I would say it's rather choppy
what
than not.
opportunities are some of these companies providing? Because
you could be using this bullish MACD to go lower, maybe. Sure. Nope.
I'm
going to the bathroom. I'm not going long here. No volume. Not huge anyway, so.
People are fearful. We're seeing that in the consumer confidence sentiment surveys as well. So where are they?
Yeah, that's a really interesting question, Sam. And if I were to generalize, when we look at where the job postings are concentrated, it's tending to be more on the sales and marketing side, not so much not so much R&D and the software development. Companies are getting a lot more efficient there. Maybe AI can bring efficiencies to sales, but I think the catalyst here is, more generally speaking, software companies want to get more people out there, pushing the adoption, especially of their agentic AI products.
Okay, so it's good news then that at least sales and marketing teams are looking to bolster that. No doubt that's going to show up in some of the numbers. Talk to us about some of your top picks here.
Yeah, bro, they're burning the bears, man. People ask why I care about cycle and time and shit like this. Honestly, it's not a one-time thing. Like, I wish it was like a one-time. Actually, I don't wish it was a one-time thing. It's a fucking everyday thing, and I wish it's an everyday thing. That thing happens every day.
I think those three names.
Look at how they're cooking the zero DT bears down there. They're not even going that much higher off of this algo range, but they're burning every single bear from down there. Where's down there? 6,868 below the gap, below the setup they already played. People that are holding on down there from 6,868 to 6,836 to 6,850. They're all getting cooked.
And so there's good exposure there.
You feel me?
I think in the
why? Because the market operates on zero DT. Like, they cook people up there and they cook people down here like crazy. Because it's just hope. Hope without setup and hope without real logical shit. And then they really just cycle and burn everything.
Automated with AI frameworks from the
except the deductible real moves.
And then lastly, you've got Autodesk is a beneficiary of. They're actually creating their own foundation models for design. They're the design leader in the architecture, engineering, construction space, and they also do work in manufacturing, product design.
Go watch your Guruji then, man.
And game design with their media and entertainment group. So they can benefit very much from the adoption of these generative models for high-end design work. We're not
too much noise on this channel. Go watch some other channel,
Google
bro.
or OpenAI are putting out, but we're talking about bringing automation to design, to architectural design and construction.
So,
like, bro, you're literally a channel hopper, Red Dawn. No offense, but December 31st, December 23rd, December 22nd, 19th, 18th, 17th, 12th, 11th, 2nd, 1st, October 8th, September 18th, September 12th, September 11th. Hope you're having a good life, but brother, you ain't gonna get shit done in life channel hopping, bro. There ain't nothing to be learned. I mean, I've been talking about people like you all week, month long, right? But I mean, bro, Go watch the Furucci channel, bro. I know you, right? Everybody knows everybody, but like I give a fuck. Stop wasting my fucking time with your trolls. You're here doing jack shit, leaving, and you're fucking getting mad at me because the market going against you. Stop fucking crying.
2025, a bit of a tougher year for software. I mean, as far as
Go
the
learn something for
is
yourself in
concerned,
life,
does it
man.
start to get better in 2026 as far as you're concerned with some of the questions in the market right now around some of the capex, the leadership and valuations, the financing?
Yeah, great question. There's some nuances there, and I would say, yeah, if you look at a large cap software index like IGV, it's lagged the S&P significantly this year.
Much love, man.
Still up.
Honestly,
but we look at a broader index of 40.
You feel me? Like there's people that's been here fucking for months. What's the fucking point of you coming in and out 2-3 weeks out of the fucking day, and then oh yeah, one day hopefully it goes good, and one day green or red, and like bro, ain't nothing fucking, you know what I'm saying? Ain't nothing gonna change. It's the same thing every day. Relax, love it, feel it, breathe it, live it. Oh, I love it, man. Seriously, ain't nothing gonna change. It's the same shit every day. What the fuck changes? Nothing. Just the participants. Right? Nothing changes. Alright, let's see what happens, dude. Oh my lord. Looking like no volume. That shit is had loud, mother. Bro, if it's for people that have been watching, of course I care. But honestly, channel hoppers, get out. I've been saying channel hoppers wasting time. Like, if it's from people I know, 100% I'm in the wrong. 100%. But man, these channel hoppers getting wrecked, and yeah, it's fucked.
Kevin Hanks, live at the CBOE with the pre-bell playbook, and a good morning to you, friend. Let's talk about jobless claims.
Good morning, Nicole. Yeah, we got jobless claims about a half hour ago. 199,000.
Like I care, dude. I make fun of naive all the time. My admin was so naive, he was lying to me. Wasting my fucking time. Like I have fucking time to waste.
There may be a holiday factor going on here with jobless claims, and I think
get fucking trolled and waste time with the market. I don't have fucking time to fucking waste. I don't have time to fucking troll. Get fucking trolled in life. I don't have fucking time to troll. I'm a man. I take care of shit on my own fucking end, and I do shit when I want because I know what the fuck I'm doing.
Normally, Friday, we might expect a payroll number. Well, we're not getting that. Hopefully, we'll get it next week in a timely manner.
Trust me, you will never be able to come back on this channel ever again. Can't even channel hop anymore.
Historically strong.
Just go over there.
For jobless.
Like, why are you over here? Because you're doing dog shit terrible over there, right? I already know, dude. We've already been through this shit. Why am I saying this shit I'm saying? Because I've had this talk with my admin, man. My admin was you, right? Do dog shit here, you channel hop there, you channel hop there, you do dog shit there, you channel hop somewhere. But I'm not even trying to be I'm not even trying to be mean here. I'm being real.
Holidays do have something to do with it, so we'll have to get. I can't wait
to
finally get data real time.
Nothing's gonna change in life. Only thing that changes in life is you, your mentality,
yeah, remember, you and I
how you are, how
right
you
when
negotiate life, how you will life, and how you do in life.
So it's 20 days old.
That's it.
So a lot of the data
only
we
person
knew
that could
about,
do that
remember,
is you.
There was so much released.
Nobody
in
else.
Fed meeting on December 10th, but this one, and
Stop
I thought,
crying,
you and I
man.
spoke about this yesterday. What I thought was the most important part of this was what led
on a
them
public
to
channel.
not only
Exactly.
stop
On a
quantitative
public
tightening
forum.
on December 1st, but start quantitative easing. And in the Fed minutes, here's the statement. In light of this projected decline in reserves, as well as recent developments in money markets, the manager recommended that committee consider starting reserve management purchases this month to maintain ample level of reserves on an ongoing basis. So it's not necessarily quantitative easing, but they are buying short-term treasuries to make sure that they're well positioned for next year. So besides that, remember, we talked about things like the dissenters and the rate cut and the SEP and the overall a big distance between the members of the Fed that are focused on the labor market and the members of the Fed that are focused on inflation. A very polarizing look at how the FOMC is moving. And remember, what January 1st does, it takes out some voters and it puts in some
go take a break,
voters.
guys. If you guys are literally here for the first time, putting in chat saying, oh, blah, 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 I don't know you, dude. This is your first time posting shit on my channel. Go take a break. Go take a walk. Clearly, right? Thank you for saying that, Henry. I like you, clearly. But I mean, clearly, if people are here to fucking worry about shit they ain't fucking focused on, if people are here to worry about shit they're not even focused, part of, they're not a focused person. I have no fucking time for it. Like, I give a shit if they're here or not, so
in the longer term
I'm removing them.
cut if needed. I mean,
waste of
it's
time.
not that they're anti-cutting. They just want to wait and see. It's the timing more.
New Year is here. 2026 is here. Greatness is among us. Hopefully, you're doing great things in life.
People are hoping
but
for in 2026.
yeah,
AI,
opportunity all around us. Opportunity all around us. But the thing is,
as you look ahead to 2026,
how you are in life and how willing you are to put yourself in the opportunity, and how willing you are to be, the person, good or bad you are mentally against other people or yourself, to be able to receive that or not for yourself, man. That's all it is. But honestly, if you are focused on audio, if you're focused on negativity, if you're focused on anything else other than what's going on, the deductions, then they're not the right person for what's going on in the market. That's the reality. People that are focused on the market clearly are the 105, 110 people that are still here through all the trolls that have left. Not all the trolls, but people that didn't want to, sit through this little drama that we're having right here on New Year's Eve. But I mean, this is the reality, right? I provide reality.
I'm joined by Dryden
A lot of
Pence,
people don't
Chief
like
Investment
reality.
Officer of Pence Capital
That's not
Management.
my
Dryden,
fault.
well, welcome to the
I
show.
love
I wanted to get your
reality.
kind of take here.
A lot of the
because I
people
keep on
here
hearing
right
this
now,
theme
right
that,
here
hey, it was
live,
the most hated
love
rally ever
reality.
in
So,
2025, but we still got 17%
shivering,
gains for
man.
the S&P
It's fucking
500.
cringy
And there's
when
a lot
people
of
think
positives, right? And I think one of the key takeaways is,
things
hey,
are
the
just
Fed's
all
cutting
that
rates.
because it's
You've
behind
got
the internet
earnings that
screen,
are
bro. What are you
outperforming
talking
the last
about?
few
How do you live?
quarters.
Who
So
are
there's
you,
good support
right?
for this rally that we've seen, right?
Are you a good person? Are you a chill person?
I mean,
Are
this
you
is a rally of
that's what I
fundamental
want to
earnings.
ask. What culture, right? Not even what culture, but like, how are you as a person? What are you doing to people online? What are you doing to other people? And what are you truly internally promoting?
Companies are making more money than ever
Some people
before.
don't even give a
If
fuck
earnings
about
are at
that,
an
and they
all-time
listen to
high, then it
Ferrugi
makes sense
Gurujis,
for
and
the
they're like,
market
oh
to be at
yeah,
an all-time high.
let me get my
And
ass
we
scammed.
see
Oh
this
yeah,
as a
yeah, I
trend
love
continuing
yeah.
on
Get the
into
fuck out of here, dude.
2026.
Waste.
You combine that with a
Waste of
tremendous
a
amount of
fucking
stimulus
time
in the
for all
pipeline,
involved,
and we were pretty
except the person
constructive, certainly on
doing
the
that on
first
them.
half of the year. You've got roughly $600 billion or more coming in. You've got 150
The people that have
billion
been
showing
complaining
up
and
as
telling me about my
additional tax
audio the
refunds. So that's
most were the
additional
people that
tax
were
refunds
going
that
over
people
there
used to get.
paying $1,000
Then you've
and
got a
getting
tax
fucking
cut from
wrecked
the
and
great
getting
big
fucking
beautiful
scammed
bill.
like
That's going to be about
stupid and
another
coming back and
$600
fucking
million.
crying and
And so
being
you're
like,
going to have the
oh, but
American
Jeff,
consumers are
I
going to
did
have
so bad,
several
but then
thousands of
I want to
dollars
still be
more
because
in
he's
their
so good.
pocket as
Oh,
they
he's
move
telling me
through
he's winning, but
in the
like he's so
second
good.
quarter
Look,
and
oh.
third quarter.
I was
And
like, bro, you're
all
just
of
naive
this
as fuck.
portends a
Like
very strong
you're 15 years
continuing
older
growth
than
of the
me.
economy, and
I
that's
said this
good
shit to
for
my
all of the
admin, and I said,
companies,
you're just
and
naive. You're
especially the
literally
MAX
not
side.
listening to what's
Yeah,
going
you
on,
take
what
a
he's
look
saying,
at the
and you
outlook
just
for
see
2026.
person saying,
You
oh,
mentioned,
look at that.
some of the
Green.
deregulation,
Oh,
the
look.
changes that the
And he is,
administration's making, maybe going to be a lift a little bit. But then on the other side, you've got maybe some headwinds.
Got to do
There's
some
still
logical
tariff
understanding
concerns
in
at
life
this
and be
point,
a logical,
weakening
reasonable
jobs
person, man.
market.
You cannot be
Is
getting
that one of
bullshitted on
those
whatever
things
the
where
fuck.
you
There's
look
so
at,
much in life that
you
is
weigh the
actually
good and bad, the
good,
pros
and there's
and
actually
cons,
so much
where,
in life that's
hey,
actually bad.
outperformance is probably still
Whatever the
on
fuck that means to you,
for 2026,
you better know that's
just due
real
to the
because it's
fact
real.
that, all these positive effects on the markets are going to.
There's good in life and there's bad in life, right? What do you attract? What do you do?
We do
That's
think
the
that the
fucking question.
positives outweigh the negatives, and of course, yes,
What do you do
for
for work? What do you do for your family? What do you do in life that's good, and what do you do that's bad? That's the real fucking question, to be honest.
Side of the market, it's very interesting. The amount of jobs we need to maintain a level of unemployment
Patterns are forming, chopping, not bearish, not bullish, but more leaning bullish. IWM is bullish right now. I would rather say this is more bullish than not until IWM does something else.
Than it used to be. I mean, a year
right?
ago,
MACD is still bullish on the 5-minute on SPX.
Now we can replace the job market about 35,000 a month, so that's good. And then at the job thing, you brought this up. It's really important to understand that where the job market is weakest is at recent college graduate group. And this plays into Mag 7 and AI. Companies are saying, look, I can either hire a new college grad, or I can try to let AI do this. And so companies are experiencing an experiment with what we call AI plus H. Artificial intelligence plus a human factor, and that's what's creating this skew in the unemployment number. And it's unfortunate for college graduates, but actually for the overall economy, it actually moves to higher labor productivity.
Yeah, you mentioned that my son just graduated from college. Took him a little while to get a job, as previous years had shown they were easily hired, but maybe the AI. But if you look at that, the outlook for 2026, that's going to be one of the keys is going to be productivity. That AI brings to the table at this point. Can that, maybe offset some of maybe the weakness that we've seen in the jobs market, even though the Fed's on a rate-cutting cycle at this point, and maybe they don't need to be anymore at this point.
Well, you have fiscal stimulus and monetary policy coming into the market at the same time. And congratulations on your son getting a job. That's important. And I think that it's important to recognize we probably have 1 to 2 more cuts in the Fed funds rate coming in. So that's additional stimulus to the market. You have a recovery from the government shutdown. It usually picks up the quarter after that happens. That's additional stimulus into the market. So I think that we're actually moving well into the first half of the year. And I think that's, again, this whole idea about the increase in labor productivity, that increases margins. So an increase in labor productivity, increase profit margins increase stock valuation. So again, we're further constructive.
That actually could have been a great play.
The first half of the year for sure.
Not gonna lie, just on IWM alone, 1145 to 1150. I don't know if that's real or temporary or what.
Into the end of 2025. But what's your outlook
quick little
for
50-cent, 60-cent push?
Companies? It seems like, hey, you know what? They're spending a lot of money. They're investing a lot in AI.
I have no idea if that's like temporary or real or what, but that could have easily been on IWM chasing them easily, 1145 to 1150.
Not only for the Mag 7, but for the overall
Nice W
market,
formed on SPY and
What's your outlook in that
QQQ is a little bit weaker than SPY.
Well, there's 2 particular things. First of all, this is not a dot-com boom. You hear people trying to say that, everything was. These companies have real earnings. These companies are.
It was kind of scary though because of the MACD. But look at that pullback.
Very deep engagement in what's going on.
Somehow bulls came through with this little cycle since 11:30 to 11:50, 20 minutes.
Continue to drive the earnings of each of the Mag 7. Some of them are going to do better than others, but relative to the rest of the market, we think they're going to continue to be dominant. For the rest of the market, we begin to see this broadening out as basically the 493 begins to catch up with the growth in the market and earnings growth that we had last year moving into this year. So again, we're constructive across the board, but we also think Mag 7 will continue to dominate.
Yep, and
well, honestly, this is nice to see because I was expecting a chop immediately when we got there, but it went lower than there and then chopping. So
made some ground
it's doing it with the volume too.
Are there any names
9:30 open
tech that you're kind of focused on here moving into 2026? Because a lot of those sectors, you look at memory chips, those have led to the upside. We've seen a pullback in maybe some of the bigger cap tech names, but anything sticking out to you here?
Well, we like all of the Mag 7. I think the ones that are somewhat underappreciated would be Apple. This for the first time they've shipped more phones. First time in 14 years they've shipped more phones
all have a beautiful
than Samsung. That's
New
really
Year's.
big, and they make a lot of profit on
Right?
each of those.
Go to your
the other one that's probably
family New Year's
underappreciated, I think,
party,
is
or
Amazon.
you know what you do.
People
New Year's
forget that
party
they are
with your
so
friends for New
dominant
Year's,
in
but
retail consumer behavior. I mean,
it actually
40%
is
of online sales run
already
through
New
Amazon, and they're now second to
2020.
Walmart in retail sales. And
6,
so
man.
you're beginning to see this breadth and depth of a
Can you believe
retail
it?
company, of a technology company,
Time flew.
all moving forward. I think if you look at outside the traditional Mag 7, I think you have to pay attention to Broadcom. They really are dominant in almost every part of the communications network.
I feel like it was like September, October, literally last week. Like, what the
continue their dominance
flew,
for the rest of the year. And then you begin to spread
Wow.
out what are the also rans and what are the ones that are coming up second and third.
Yep. More.
You guys doing anything for New Year's? New Year's party, family party, friend party, or anything?
Appreciate that. That's Dryden Pence. Chief
This is
Investment
1 hour.
Officer
1 hour
Pence
bullish
Capital
from
Management,
10:55 to
breaking down markets for us.
11:55. So actually, they weren't. It's not bad either. It's actually burning every single bear down there. They went down so much. Like, I was feeling somewhere down there dangerous. And it was 1/3, 2/3, 3/3, and then now they're cooking the 3/3 bears in the new 1/3, 2/3, 3/3. So this is what cycle analysis means, right? Because I literally said when we went there, I said, hey, the gap has filled, the setup has played, and they're going lower, but anything lower than there is kind of risky, and it's the 3/3 playing in the huge 3/3, right? And they trapped that. It did not fill the gap down there. It looked like it was going to go like crazy down there, and then it just didn't. 0 DT too much.
Joining me right now, Morgan Stanley Senior Vice President and Senior Portfolio Management Director, Jim LeCam. Jim, always great to have you on this program. So can you answer that? Does the bull market keep roaring next year?
I think so, Taylor. It would be very unusual for a market to stop when interest rates are falling, especially when interest rates are falling with the market at an all-time high. That's a very bullish signal generally. Earnings expectations are rising. CapEx plans for businesses are rising. Share buybacks are still very strong. And it looks like the Fed, they probably won't cut in January, of course, the brand new Fed chair, but the Fed funds futures are suggesting more than a 50% chance of a rate cut in March. And we need that. We need it particularly for private credit, private equity, and particularly for the housing market as well. But I think we'll get rates coming down. And the other thing to remember, even though the second year of a presidential cycle is typically a little rockier, we have a lot of things coming at businesses that are good. We have several.
Timmy said, "Why did I get the boot, Jeff? You left the WhatsApp group on your own. What do you mean?" Because I was checking, I was like, "Isn't Timmy D somebody that's literally in the WhatsApp group, but you literally left?" I removed like 15 other people that was inactive, but you were the only person that left. If I remove people, it would say you removed somebody, but it literally says Timmy D left. So when I remove people, everyone can see who I remove. When people leave the group on their own, they don't get seen by anyone. So you left the group on your own. I didn't boot anybody. I didn't boot you. You booted yourself, and you're making some shit up now, but I don't know why. Because you are an old watcher. So you left the group on your own, bro. I didn't boot you.
Several aspects of the big beautiful bill.
I got a message from a guy in Britain that wanted to join back because he's an active watcher, but I booted like 14 really old inactive AFK people that I thought, and then one person DM me back, so he's getting an invite back, but I don't know. It says that you left the group on your own, Timmy, and then you're messaging in the YouTube, "Why did I get the boot, Jeff?" So I don't know, man.
We have deregulation kicking in.
You left the group on your own,
so
and then
there's a lot of things that are positive drivers.
We're just gonna move on, bro. It's New Year's. I don't got time for this shit. You know what I'm saying?
So I think we can rally.
Life's good.
I don't think it'll be as much as this year, last year.
I thought I was logging out. Oh, you're good, bro. I'll add you back.
Underpinning
I'll add you back, but I did not boot you, bro. You left on your own. Yeah, you good. I literally only removed like 9 or something people that weren't here for like, I think 2 weeks or something. but one of them was like, "Hey, I'm still a watcher. I'm just not here right now," or something. So, yeah.
You talked about the
All right,
Federal Reserve
misunderstanding.
in play. I'm taking a look at a very stable 10-year yield, a very well-behaved 10-year yield at just a 4.13. Does the calmness of these bond markets in the last couple of weeks,
and dude, trust me, I want people to be active like how Timmy is in the WhatsApp group, like how he was today.
You like the markets, the bond markets.
I don't
want
to, reply to people. Is why there's an unwritten rule to not really.
On Wall Street to never short a dull market.
Because people have been messaging me crazy shit, being like, "Hey, can I get a one-on-one?" Blah blah blah. Like I don't really have time. Like I go to work after the shit, so.
And they feel more confident about doing that when the bond market isn't all over the place. I do think, though, that this is a major concern for next year is whether the longer rates are going to play along with the shorter rates, because that's what is going to impact the housing market a lot more, and a lot of deal flow will be impacted. But they need, and we need, longer rates to come down. It's a big question that needs to be answered. Inflation picture is a little muddy. Looks like it's improving a little bit. Deregulation should help that. Low oil prices should help that. But it's still a question that needs to be answered. The other concern I have, Taylor, is everybody on Wall Street is bullish, and usually.
Can we talk about that? Because I asked that question on the earlier show in the noon o'clock hour. It makes me very nervous when everyone on Wall Street, all the big major investment banks, are looking at anywhere from 7,200 up to 8,000 on the S&P 500. So everyone is pricing in gains. Does that mean it is a one-side trade, and does that worry you, or is it good? Everyone's optimistic.
Well, it's a double-edged sword, but it does concern me a lot because you always look to where is the pain trade. Where's the trade nobody's looking for? The pain trade is that the market would sell off. And again, historically, it does do that in the second year of a presidential cycle. Now, you might be asking why? Because there's a lot of positives going on for this market. So two concerns would be maybe valuations, or something that we're not thinking about yet. Maybe another government shutdown. Who knows? There's any number of places that a market speed bump or road hazard or even volcano can happen. You just don't know where these things come from a lot of times. And when the market's very richly valued, or more sensitive to those kinds of disruptions.
I think some people, and this is a question for you, would push back on valuations. One argument I hear is, yes, maybe it is richly valued, but when AI has done a structural shift in the economy, it deserves a higher valuation, some of these AI stocks, because again, this is the fourth industrial revolution. This is not like the dot-com era where none of these companies were profitable. They are changing this economy, and they are changing it structurally. Does that command an inherent higher valuation? Are you okay with a higher valuation given that scenario?
That's a great question, Taylor. And the reason it's great is you strip out those 10 companies, the market really isn't at historically high values, and we're seeing some rotation in the market, the financials, the industrials, basic materials, even the mid caps. This is healthy. A rotation in the market is healthy. But getting back to the data centers, the AI trade, if you look at CapEx plans, that's where all the money is flowing. That's where a lot of the hiring is happening.
It says I can't even add you back, Timmy, because you left the group recently or something. I don't even know, bro. I sent you an invite.
And I had a client ask me the other day, he said, do you think we should sell all our high PE stocks? And I said, well, you could, but if you do that, you're selling all the stocks that have the best growth prospects out there. So you might want to rethink that. And again, the spend for
down on pace for the third day in a row.
And the CapEx plans for businesses in this area is still very solid.
Third day in a row,
there are concerns, and there's a lot of interdependency between these companies, and there's a lot of debt involved, but lower rates will help that from the debt side. So I think the trade is still intact. These are real businesses. In the dot-com bomb era, a lot of those were not real businesses at all. these are, and so I think you can still be in these names as long as you diversify that portfolio a little bit and have some of these other areas. And there's a lot of adjacent areas too. Space is an adjacent area. Robotics is an adjacent area to AI. And these companies are all doing very, very well with very solid earnings profiles. And overall, it's a very good backdrop for stocks. And again, one of my concerns is really just that the sentiment recognizes that and may not be factoring some things that might come from out of the blue.
Finally here, I want to touch on some dollar weakness. Now, we know that traditional math is pretty simple. When the dollar is weak, big multinationals, I'm thinking the big companies in the S&P 500, they get sort of an artificial boost in earnings because when you translate all of those earnings overseas back into a dollar-denominated balance sheet, it looks better. And so you have higher profit. Do you like dollar weakness, or would you prefer more dollar strength and stability in the dollar?
You know, that is a great. Your friend and mine, Larry Kudlow, and I have gone back and forth.
I know.
And you like the strong dollar because it means more money flows into a country that has a strong dollar. On the other hand, as you pointed out, a very slightly weakening currency, a stable but slightly weakening currency can really help our exporters.
More and more getting in a wedge, this downward trend line, as well
generally benefit from that. That goes right down to the bottom line, and that helps earnings. And the markets
I'm just watching.
Usually do a little bit better if the dollar is just slightly weakening. Long term, you like the dollar to be fairly strong. But look, we're printing a lot of money in this country, and everybody else is too. And that's why these metals and these natural resources and all these anti-dollar plays, even the cryptocurrencies have done fairly well. And I think the metals will still be a play for next year. But I do think the slightly weakening dollar will help the large cap stocks for next year.
Well, I love having you on this program. You're going cross asset for us. So smart. Jim LeCamp, thank you, and see you next year.
Looking forward to it.
All right.
Yeah, we're all going to see each other, guys, next year. Next week is next year, 2026.
Our next guest says we're entering a new year in a bifurcated economy, and that its growth is fragile. Joining us is Mark Zanny.
Everyone's talking about we're going to grow, but it's fragile.
Say, Mark, hasn't the economy surprised you in a positive way this year? There were so many calls.
Timmy, you did nothing wrong, by the way. Everything was good. You were active. Right? You were actually the most active out of all our members for the week, so that's what we want. It's just
2025, and it's been quite strong.
Ask questions to each other in the WhatsApp group too, just like how we do in the YouTube chat, right? You don't have to talk to me. Like, it's not like a personal message group to me. Like, it's literally just I'm talking to myself in the WhatsApp group, kind of.
GDP growth in calendar year 2025,
showing my opinions to other people that they want to see.
A year ago, what would happen in 2025?
You could do the same.
And the GDP growth number was 2.2%. So
time is 12/10. Yeah, I missed the shit either, so I'm watching 12/10.
For 2024, I thought 2025 would be an okay
lower.
year.
But IWM was the one that was faking. They're barcoding. Wow, they're chopping.
No, that's exactly
easy
where
one,
I was
but
going.
fuck.
Yeah, I certainly would
not
have.
So
I would have
IWM was faking.
End up being a much weaker year, something closer to half that kind of growth rate, like a 1%.
Every cycle is just.
And the thing that
okay, though, let the cycle be.
It's pretty obvious.
Cycle is this is a nice cycle, though. Oh my lord.
The impact of artificial intelligence, both in terms of the investment spending, but most importantly through the run up in stock prices and the wealth effects that's generated in the effect that's had on consumer spending. So you're right. As of April, I was much more pessimistic about the year. It ended up being much better than I anticipated.
So you say it's bifurcated. Is that because, in part, of the rising stock market, which has helped the wealthier cohort?
Yeah, in part. I mean, it's there's such a dichotomy. When I talk to folks, I get such a very perspective on the economy. Some people are incredibly optimistic. Things are booming. Other folks are incredibly pessimistic. Things couldn't be worse. And I think that goes just to the fact that the economy itself is what the word is bifurcated. It's
the MACD was bullish since 11, 20,
totally different levels.
You
can see in lots
12,
of different ways.
And 11, 20 to 12 ran, and now the MACD is turning bearish.
Not so much. You can see that in,
bullish
for example,
MACD
in the
being
ADP data. You can see
why is the rejection so strong?
Their financial situation is about as good as it's ever been.
QQQ wants to go to 614 maybe. Crazy work.
industries. I mean, the tech industry, obviously, healthcare doing really well, adding a lot of jobs. But then manufacturing and the real estate industry, agriculture, transportation industry, they're literally contracting. They're in recession. So I can go on and on and on. You know, the economy just feels very bifurcated here, moving on, again, operating on different dynamics. And that's why I think people are getting such different perspectives on things. If you add it all up, you know, the economy is growing. It's okay. It's growing around its potential, but it's as you said, it's a fragile growth. I mean, I don't know that the economy can operate this way for very long without, you know, something going off the rails at some point.
Crazy. I'm in 31,685 puts right now on SPY. 0 DT. $3K. Damn, crazy. Maybe this is the fucking drop to bounce. Oh my god. Yo. IWM bouncing. Cycle getting scary. I am now inside a cycle.
This. Elon Musk took to X to call Minnesota Governor Tim Walz a traitor over his state's alleged fraud schemes. Liz Peek, great to see you, Liz, joins us now. Would you use that word, Liz, traitor?
LOD test.
Well, I think he's certainly a traitor to the taxpayers of Minnesota and generally also to the population in Minnesota that requires the services that basically were not delivered. So, yes, I would go along with that. I mean, after all, the Minnesota budget, remember, Ashley, is only about $66 billion. If it's true that somewhere between $1 and $18 billion went missing, that is a giant hole, and it's almost impossible to imagine, given the closeness of the Democratic Party in Minnesota with the Somali community and with a lot of officials basically sort of being involved in both camps. It's almost impossible that officials did not know, including Governor Walz. I have no idea if his agencies were actually making the kinds of stops and routine investigations they surely should have with numbers of that size, but it certainly doesn't seem that way.
It certainly doesn't, at least not at this stage. Next one for you, Liz. You have a new op-ed out. It reads, 5 unforgettable lessons we all learned in 2025.
This could be the pullback to long. I don't know, but I'm short right now. It's 0 DTs,
well,
and
Ashley,
they are
when I was sort of
thinking
about the year
as
a whole, I kept coming across major issues where we've seen a 180-degree turn in public sentiment because guess what? The prevailing wisdom was wrong. And the prevailing wisdom from the left in particular constantly was proved false. So let's start with climate. My gosh, what an incredible abandonment of the whole climate crusade we've seen when Bill Gates says, no, this is not the biggest threat to humanity. And when governments around the world and even left governments, Democrats like Kathy Hochul have to do a reverse spin because they realize they need energy and getting rid of fossil fuels is simply not an acceptable way to go down that road. I think you've seen a big, big problem emerge for Democrat platform. Secondly, let's talk about DEI. DEI has been abandoned by corporations far and wide. Why? because it doesn't work. It breeds resentment. And it, even a Harvard study shows
Yeah,
it
we
has
don't want
basically
resentment,
not
guys.
moved the needle in advancing
We just want positivity.
positions
There's no need
of
for
minorities. So
resentment in
that's
life.
kind of out in the wind.
Just
you can talk about cops and law
brutal
enforcement.
positivity and reality.
Across the country, we've
That's
seen
what we like.
cities
Life
and
is
towns
all
say, well,
about
wait
the
a minute,
good, and
actually,
life is
more
all about
cops
learning
do lead to more safety.
the
Again,
brutal
citing
reality it
Kathy
takes
Hochul,
to
as a left-wing
provide
Democrat,
happiness and love
what did she do to bring
and
safety to the
protection and
subways?
strength
She put more cops down there,
to
National
those
Guard down
around
there.
us and
So
those you care
all
about in
these
life,
sort of myths
and your
that the
family and
Democrats have
yourselves in
lofted,
life.
those three that I
That's the
mentioned,
only way
may be
to
the most horrible, being
protect yourself against
gender-affirming
all
care,
evil
being something that
and all
is
fucking other
acceptable
dog shit
and
forces
should
out
be
there
pushed on
that
minors.
may try to
No,
sway
in
you
Europe, most countries have outlawed it.
and be
I think
protected
we're
by
on our
God.
way to outlawing it, and thank heavens. So I think
It's
you
the
just have
only way.
seen, and finally,
This
this
life.
last thing, the fraud. What Democrats
MACD
have
still
pushed
bullish
for
trying,
decades is more
IWM
and more
bouncing.
big
Right.
entitlement
It's
programs.
dangerous as shit.
Guess what? That leads to big fraud.
Full of bandits left and right on the road.
It certainly does.
On the
Great
journey
run
of
through
life.
there,
That's
Liz
for
Peek.
sure.
And Liz, great to see
That
you,
is
and Happy
something
New Year to you.
that
We
will
look
never
forward to
change.
chatting more in the new year.
I do too, Ashley. Happy New Year to you.
God damn, am I a warrior in a garden?
Let's bring in the top, Wall Street's #1 audacious market leader.
Oh my God, what did I say 2 days ago? What did I say 2 days ago? Huh? The Roaring 20s, right? The Roaring 20s. A look inside the economy heading into the new
Yardeni
year.
Research President at Yardeni. Ed, I got to tell you, one thing I've always loved about you is you're a straight shooter and you're optimistic. And so you're looking at 2026, another year of living audaciously. Talk about that.
Well, I've been talking about the roar.
Jesse Swanson, don't take it to heart. Like the candle trader comment that I'm saying is not to people like you and people like in the comments in the chat. It is not to generalize people like me and you. Like, dude, we are all candle traders. Let that be clear. I was just saying that because there are certain people, channels out there in the world, the online universe, whatever you want to call it, online universe or whatever the fuck you want to call it, the field, that people just go to the extreme and make bullshit up on candles. This is why I said what I said, so don't take to your heart. I mean, with the shit I mean with the candle trader and the candle traders lose. We are all candle traders. Hope you understand, right? There's literally candles fucking going up and down. You know what I mean? Everyone's a candle trader. It's just like the candles are a part of the setup, a part of the... This is what I was trying to get at. Like, candles, MACD volume is all a part of the system. So... wow, that is literally going fucking north crazy. That is the pullback to long trying now. Bears are burning crazy off this fucking bounce to out burning. But yeah, that's literally what I meant. Right, so don't take it too hard. But I literally know when I say shit like that, people take it too hard because it honestly does sound like some shit that I would take it too hard too. If somebody said, "Oh, candle trader, blah blah blah," but honestly, like, if you look at the statistics, right, of the options or the bonds or stocks, it's just the way the shit is designed. Like the majority, you know what I mean? It's just our best. We have to do our best to just be deducting, get the remove, right, is all I meant. So thank you for saying what you said, and I hope to see you next year as well on the channel. And thank you so much for saying what you said. Thank you. I'm pretty sure I've seen you before, but thank you, Arkatam, and thank you, Timmy, and thank you, Chris. Like, honestly, everybody, thank you. Everybody have a great, great new year. And Timmy, you can join the group whenever you want. But seriously, like, yeah, I did not kick you out, bro. I hope you have no resentment. Like, I want people to just be active in the WhatsApp group, man, and just be real. And if they want to, be watching, and if they're here and they're doing that, they want to be that. But if they don't want to do on any of that, and they're just here on the WhatsApp group, and they don't even want to be on, and there's no point, right? So that's literally just what I did. I just cleared people that weren't here for fucking weeks. So
2020, that looked like a delusional kind of scenario, but it's worked out.
And we're not asking people to be just active on the WhatsApp group or YouTube chat. I'm just saying, like, let's just be reasonable if you're here. Just, you can be like, hey, everyone, or you can just say what you want to say, what you think on that, and then that's fine.
Increase, maybe a 10% increase to 7700.
And the volume going back bullish right now. The market is really deciding this is the last moment for the bears to try. IWM is in a bullish territory.
Because I wrote a book published in 21, and I also had a big
scary than that for me.
About a redo.
I'm not gonna lie. I'm kind of getting washed down. $800, which is basically my day's profit right now. If they go higher, I'm kind of fucked.
All these things, and we had a big recession.
A lot of negative similarities.
Exactly, but positive too, because we ended up with a president and then another president back to back who were pro-business.
Let's do a poll, guys. I think we should do a poll.
Well, what I really saw coming
VWAP fly
was I perceived that as
or rejection. Right, this has to be a poll moment. One of those, perfect.
I didn't really factor in what was going on with migration.
Honestly, the last time for the Bears to step up here,
the key
reject.
variable
it's
that I had some
final finale for the Bulls to come in and just liquidate all Bears here. So
we would be finding a
let's
shortage
do a
of
poll.
skilled workers, and that companies would be under a lot of pressure to figure out how to increase productivity.
Oh my God, I can't even do the poll. It can't look coming in before poll.
Technology tools to do that.
Right.
I kind of mentioned AI, but
what is incoming in your opinion? WhatsApp group?
Start to become
poll
a big
being
deal
sent now.
At the end of 2022.
I think
you went flip
in October, November, ChatGPT,
fly or
Nokia's announcement,
reject.
Right? So they're like, hey,
Holy
we got
crap.
a new version of this thing, and it sort of woke everything up.
Right.
I'm going to go to this baby boomer thing
VWAP,
since you brought that up, because there's one thing about the baby boomers retiring.
We are barcoding right now at 6,876. That is the game of the day for right now.
Their assets are worth a lot.
The SPX 1 minute gap we have came and filled.
We see political ramifications.
I am very, very
glad. From a
glad.
Point of view, has been phenomenal.
We were all here to see this shit together because that is amazing. Market is crazy, and this is what they did today.
This is the one I used. I used the French E. Is that the one, like
the 1 minute gap?
One with the little thing here?
We gotta go black so much.
SPX
SPX 1 minute gap from last Tuesday.
That looks like Chick-fil-A.
Wow.
Well, the Chick-fil-A economy. But I mean, the baby
we are right at it.
Longer. They
That's
have
insane.
All, they own stock. They own real estate.
That's not bullish.
Money.
That's not bearish. Market deciding. Everybody
with all my friends
at the roof or at
the baby
middle
boomers have done
or the middle or the
well.
floor.
And it's
6 people says VWAP flip and fly.
Not Dr.
We have
Spock, who I guess
4 people or 5 people now with me, including saying reject below VWAP.
We've lived long, and we bought houses.
Yours says higher than dump. No. It has to be VWAP flip and fly, or I think reject
phenomenal. But I think there's a tremendous amount of
Archetype says, I think we chop.
So I think
chop
not so
lower.
Much
Okay, that's
that,
fair. Not break LOD,
so
but a little bit chop, and then figure out maybe bear chop or
I mean,
something
when I
later.
first started working, I was making $20,000 at the New York Fed. It happened to rent that back then was $400 a month.
Right.
But the cost of living.
Well, that's another thing that you see President Trump addressing the affordability.
That rejection is getting me thinking, but it's also making me hoping at the same time. It's getting me excited and making me hope at the same time right here.
Housing. I mean, home prices have gone up a great deal.
WhatsApp group is split down the middle. 7 people, 50 says bullish or bearish. VWAP flip and fly, or reject.
To buy a house, and the baby boomers are
VWAP flip and fly. What would be the next target? Next target of VWAP flip and fly would be 10 points up at 6,882. If we reject below, it would be some sort of chop.
Not contrarian, but let's call it contradictory.
Yeah.
It feels like a contradictory stock market in some ways and economy. So we had this GDP number, 4.3%. Absolutely phenomenal. You got consumer spending, exports, imports. You got all this stuff here, but you go down to line 34, disposable personal income, 0.0%.
Right.
I mean, are we living in a world? Can we live in a world where there's sort of jobless, wageless prosperity?
Short answer is no. I think we need consumers. Obviously, the U.S. economy is very much driven by the consumer. But I think instead of the head count of consumers going up a lot, as it did when the baby boomers first entered the labor market, I think we're going to see a much slower pace of head count. So that means real wages have to go up, and that's usually in the past what real wages have always done. They've always gone up with productivity, so that it all ties together. One more thing, and that is, again, the demography is a key issue here.
Right.
The younger folks aren't making that much, and the baby boomers are retiring with a lot of.
No, you did nothing wrong to me, and you're very active in the YouTube chat, which I like.
Because,
some people are very active.
So you're looking for 7,700, I think 360 on earnings, and you have a PE ratio
I
of
guess
22.
Just, do better on the YouTube chat,
I think
which is way
thinking,
better.
That it's going to
no, I haven't made a Discord community yet, but I mean, I know some people are going to do way better on the Discord than WhatsApp or YouTube. So,
72, big time highs in terms of the
I, for certain, have not used WhatsApp ever since 2025. That's for certain.
Looks like a lot lot of opportunity.
So trust me when I say this shit.
I think so.
Right? Not a lot of people even use WhatsApp to begin with. Right?
You find that they account for 45%
start and then they start using it. And they're like, oh, okay.
And then 500. I've been telling people to overweight those two, but I can't
it's
do
not
that
like
anymore.
people need to be in the
They're too
WhatsApp
large.
group at all, too.
And I do think that the beneficiaries of AI and other technologies, namely the impressive 493, are the ones that are going to benefit.
For now, right now, I am posting
the impressive 493. Okay, I like that. We're going to give you some props on that one.
Except showing my contracts or all that.
I mean, listen, it's going to be earnings. What's going to
WhatsApp
bring
group,
into okay?
Yeah,
but I will be making a group where I do show all my contracts and I basically do everything that I do now. And like a different group too, so.
And by the way, just about every company's looked at AI, and some of them may conclude, hey, you know what? It's really not that relevant. However, we found a lot of things that we could do more efficiently aside from AI.
Candle making me hope,
because all the gold bugs are singing your praises once again. You've raised your target now, I think, for 2027.
Yeah.
What is
Candle
it now?
making me hope.
It's 8,000.
Let's focus on 2026.
Okay.
Let's do one year at a time. And I was looking for 5,000. I was looking for 4,000 this year, and we shot above it. And I thought we were just going to kind of go sideways for a while. And then we shot up to like 4,500. Right. And now we're shooting down by a couple of $100 today. I think it may very well continue to meander till the middle of the year, and then I think you'll see.
6,000 is reasonable.
Yeah, I raised it from 5,000 to 6,000 in 2026.
And you're still looking at by 2029, 2030, 10,000.
Yeah, by the end of the decade, 10,000. Same as the S&P 500, 10,000.
What about bonds? What kind of bond allocation do you have?
I mean, it obviously depends on the investor. But I think bonds.
There's a lot of calls and puts. You just reminded me to send the SPX put the call ratio. I just got it.
For the bond in 2026
What's the greatest risk that you see then going into next year for next year?
Well, historically, 12, for the stock 25. Market and the economy, the biggest risk has always been something blowing up in the credit market. And so I am looking at private credit, but I'm not that worried about it because these are diversified.
There's been some high-profile stories, but not,
but they're diversified portfolios, so you get maybe a lower return on some portfolios.
All right, we're going to draw the SPX put the call ratio in the group chat now.
Don't like all this stimulus. The monetary stimulus may be about to really hit. They're doing QE again.
So
and then
disgusting.
On the fiscal side, the president and the secretary of the Treasury have both said that we're going to have humongous refunds in the tax season because the big, beautiful bill.
Even where we are right here, it's just filled.
Is retroactive to the beginning of this year.
Well, we know that the Trump Fed is going to run it hot. We'll see where that takes us. Ed, great stuff.
Sorry.
Let's bring in E.J. Antoni, Heritage Foundation Chief Economist, and Mark Summerlin, Even Flow Macro Managing Partner. Gentlemen, great to see you. Thank you for being here. E.J., our friend and associate Steve Moore had a mea culpa today. He said, at first he was against firing Jay Powell, and he spoke out strongly against. He was against the president, suggesting that. Now he looks at Powell's record, particularly on growth. As we've just found out, it was way off. I think we can put up the figures. The Fed was estimated, of course, that was Powell and those genius 300 economists that they have who always get it wrong. They said it was going to be 1.6%, the Fed's September forecast. That was their forecast for growth of the GDP. Actually, in the second quarter, it was 3.8. Last week, we found out that the third quarter rate was 4.3. They were so off. Should he be fired for this?
Well, look, David, it's not just that, though. I mean, this is a man who has been making mistakes since the first Trump administration when he first became Fed chair. We forget because it happened right before COVID, but he over-tightened so much.
Apparently,
that
Jerome
money
Powell's gone in December,
we had a repo crisis, a kind of mini financial crisis, and the Fed ended up having to conduct a $500 billion bailout of leveraged hedge funds beginning in the autumn of 2019. Now, again, it happened right before COVID, so we all forget about it, given everything the Fed did as soon as COVID started. But then throughout COVID into 21 and even 22, the Fed kept its foot on the gas
just
for
data
way
gaming
too
right
long,
now. There's a lot of puts and calls. They're burning.
Then they had to hike
they're about to
rates
make
very
a move.
fast at the
And I think the
fastest
move
rate
is
in
down
40
south.
years. And
Below
so they've
12.10
completely
at some
frozen over
point.
the housing
We're about
market.
to
They
see.
gave us a regional banking crisis. crisis.
But
They
it
gave
also
us the
could be
incredibly high
volume and
cost of
MACD
living
is
that we
not
have
really
today.
bearish.
Powell's
And it's
entire record, I
trying
think,
to show
is
bullish.
just mistake after mistake.
I don't know if it's
well,
fake.
you're making the case. Do you think he should be fired?
I need lower than 1210.
Well, if for a cause includes incompetence, then I think the case is very clear for removing Powell. It's just a question, I suppose, of how broad is that?
Mark, the bottom line here is that Powell and those 300 economists just don't seem to get incentives. How incentives affect the economy. The incentives that, the disincentives from the Biden administration, how they affected the economy negatively, particularly on inflation, and then the incentives of the Trump era.
Let's get the likes up. Thank you so much, guys. There's 70 of you.
The effect of those incentives on the economy, the tax cuts and the regulation cuts.
Beautiful, beautiful New Year's.
I mean, Powell's big mistake was in 2021 when they just admitted that the spending was going to cause inflation. So I think if you want to hit him on something, that's probably it. And ironically, that's part of what made the building more expensive.
Yeah.
The cost of everything went up 25% after COVID, and that fed through to the cost of their own construction. So they got burned a little bit by their being too late in 2021.
What are we doing right now, bro? Oh my gosh.
I do want to give Powell credit for one thing. I mean, the minutes that came out today showed that 8 people didn't want to vote for the rate cut that we had 2 weeks ago, and Powell had to twist some arms
more
to
bullish
get
and
there.
bullish slowly.
So they might be a little slow sometimes, but they have been on a
If this shit bounces, it'll be a sick ass fucking.
Yeah. Was the Bank of America president right that if he was fired before he goes in May, I think it is, if he was fired, the bond market would just collapse as a result of lack of confidence in our dollar?
I don't think it would collapse, but it wouldn't do any good. I mean, there's no reason at this point. It is even President Trump said that it's a short enough time that it's better to focus on getting the right person in next, and thinking about the committee and the reforms you want about the committee, because we some of the blame that falls on Powell is the fact that you've got a Fed that is just an old creaky institution that needs to be reformed, and it's too slow. It's as slow as molasses.
That's crazy. Look at that drop from 12.20 to 12.15 on the poll, and then we went
I think
nowhere.
of it a lot more of an institutional reform than trying to blame him.
Well, let's talk about something that's fast and exciting rather than something that's slow and boring. And that is the tax cuts that are coming, EJ. And Treasury Secretary Bessent was talking about them. I think we have that soundbite. Can you roll that?
I can see that we're going to have a gigantic refund year in the first quarter because working Americans did not change their withholding. So I think households could see, depending on the number of workers, $1,000, $2,000 refunds.
And EJ, in addition to that, people who have 401k, and that's millions and millions of people who have a 401k, as you've pointed out in a great paper that you wrote for the Committee to Unleash Prosperity, they have had an extraordinary growth in the past year under Trump that is the exact opposite of what happened under Biden. Quickly explain.
Well, David, that's exactly right. Under Biden, we had literally the worst 4-year run for the bond market in at least a century that really clobbered 401ks. People forget it's not just the S&P in your 401k. It's disproportionately fixed income, especially as you get closer to retirement. You really pile into those fixed income assets.
60 cents up from where I'm in.
Under Biden. So in inflation-adjusted terms or in real terms, you saw losses of almost $25,000
I hate these cycles. No volume fucking cycles. I hate
under
it.
Biden. Conversely, this year under Trump, from the first quarter through the
third
quarter, it's
no
moved in
fucking
exactly
volume.
the opposite direction. In fact, you've regained most of that lost ground with almost a $21,000 increase in the real value of the average 401k. So great news on that front for America's retirees. We now have, if you look at pension plans, it's not just 401ks, David, but pension plan balances are now over $10 trillion for the first time.
And Mark, very quickly, because we're running out of time, but the effect on the business community at large.
Someone's saying Tesla's
both the big companies and the small and mid-sized companies. Are they equally optimistic about the next year?
Plan.
I think so, because of the tax bill that you're talking about. I mean, by my numbers, we have $140 billion hitting in the first 4 months of the year, and that's just on the individual side. And so people are going to get those refunds, and businesses are going to be able to deduct all their new construction costs.
Wow.
Even the Fed raised their growth rate for the next 3 years based on the minutes that came out.
Squeezing high.
So it should be an exciting year. EJ, Mark, thank you so much.
Damn. Market going with Tesla showing? Is the market going with Tesla? IWM bullish, SPX fucking 5-minute bullish, QQQ 5-minute bullish. Man, they're creating a fucking big ass cycle. They're theta burning off this shit. Creating a wedge along with everything too. That is crazy. 1/3, 2/3, 3/3. That's pretty crazy. Temporary or real, I don't know, but it's going with Tesla. Five-minute still bullish. You know, we haven't looked at NVIDIA in a long time, in like 2-3 days. Wonder what the hell NVIDIA doing.
Joining us here at Post 9 is former Director of Enforcement at the CFTC, the Commodity Futures Trading Commission, which regulates prediction markets. He's now a partner at Sidley Austin, Ian McKinley. It's great to have you back. Welcome. So how strongly are these prediction markets regulated at this point?
Well, they're regulated by the CFTC, right? And what's interesting, and I think an interesting starting place that a lot of people don't realize is prediction markets have existed for decades and decades. Typically, they were on what you would think of as traditional commodities, right? Will the price of gold hit 5,000 by the end of the year? Yes or no, right? And people would take positions, and folks would hedge sometimes, right? If you were a seller of gold and you wanted protection for the downside, you would take the no. And then you saw a rapid growth recently over the last few years in elections and sports-related
Tesla is like 0 DT too. Shit expires literally Friday, and it's fucking doing this shit.
Shut it down.
That's right.
Didn't happen.
But elections have consequences. And so after the election, a new administration, a very pro-innovation, pro-growth, prediction markets fit that trend. And so now we've seen them infiltrate basically everything in our lives, right? I mean, I just saw in your previous segment you had who would be the next Fed president, and you looked at a prediction market for that. And so, and then you see them in elections now as well.
So the knock against them for
the prediction markets are more accurate than the damn elections.
It's much easier to do insider trading on prediction markets because the CFTC doesn't have the heft and has been hollowed out a lot more than, for instance, the SEC. Is that true?
Well, there has been, like every agency in government, staffing cuts. So now, does the CFTC have the ability to police these markets? Yes. They have regulated and policed event contracts, designated contract markets, as they're called, essentially exchanges. But you're right, the staffing is an issue. I mean, by some reports, the Division of Enforcement, which I used to lead at the CFTC, is under 100
comment on all
right?
things.
And now you're talking about regulating huge markets, right? Sports, prediction markets, I think that's about 90% of the volume of prediction markets now. And so there needs to be, I think, more staffing. And like any new market that is being regulated, they'll be learning. They'll be understanding from events, from things that happen, from things that go right, from things that go wrong. and for an agency to effectively regulate.
I'm about to sneeze. Muted myself.
Welcome back. The Fed minutes out yesterday showed a tight split over the December rate cut. Let's bring in James Bullard, Dean of Purdue University's Business School, former St. Louis Fed president. It's great to have
Bears
you.
are
Welcome
here.
back, Jim.
Bearish, bearish, bearish,
Happy
bearish, bearish.
Happy New Year. What would you be doing if you were
bearish,
at the Fed? Would you have voted for that December cut?
No, I actually advocated to wait and see more data and then make that move in January.
Bearish wedge.
And I guess there was one person on the committee, Austin Goolsbee, who made that argument and dissented in that direction. I just thought that, you know, they didn't really have all the data in front of them.
Again. They're going to cook all these calls up here, basically.
In December.
The SPX put the call ratio, no joke.
You know, get a little bit more data and then come back in January. So.
They're fucking burning. Oh! Calls inputs. But they went higher first.
Yeah, although, I mean, the data
now they're going lower.
Mostly shows, Jim, doesn't it, that the unemployment rate and that the labor market is a bigger risk
they're
right
about
now
to go break
than
12,
rising inflation,
10,
doesn't it?
I think. Yeah, I don't know. Unemployment.
Hell yeah! Get my shit back. Let's go. All right, I'm out in 5 minutes. Within 5 minutes here. I'm out within 5 minutes here.
You know, you could argue about it, but
no
so
volume.
I think what's going on in the labor market data is really the immigration story. And
again, we're at the fucking algo, not algo, but 1 minute SPX gap.
We didn't have such
wedge formed on SPX.
Intense policy as we have today. So that's kind of mucking up the numbers
slow
on that
as
side.
Shit.
And then on inflation, we're still well above target, and you want to be somewhat.
Come on, don't get everyone bearish here and flip.
Just so I think that would be the best policy right now.
So what do you think they're going to do next year? How long do you think that the pause will last? And I mean, it's almost impossible to tell because we don't know who's going to be the chair. We don't exactly know who's going to be on the committee. But what's your best guess?
So many questions.
The trend direction is south right now.
I think the way they got through
wind
the
direction
December
is south today.
To,
they burnt the fuck out of the
go
calls.
Ahead with it at that meeting, but promised not to do very much at least in the first half of 2026. That's a common tactic on the committee, is to trade off today versus tomorrow, and they picked up 3 cents anyway on that decision. The GDP upgrade by the committee suggests that reinforces that decision, and also the dot plot, which shows only one cut next year in 2026. That is, that suggests that they're not intending to do too much very soon here. So that sort of sets up a clash with the way the politics seems to be going, where, obviously the White House wants more action than that.
They're trying to create an algo range.
Compensation for OpenAI's employees setting records in Silicon Valley, that according to the Wall Street Journal. Mackenzie Sagales has the latest on the AI talent wars. That's in today's Tech Check. Mac?
Hey, David. So OpenAI's investor decks are basically a paced-up version of the AI arms race. The Journal reporting that the average salary across its 4,000 workers is $1.5 million in stock-based comp. That's more than 7x what Google disclosed in 2003 ahead of its IPO. It's also about 46% of revenue in 2025, a level you almost never see outside of the most aggressive pre-IPO ramps. OpenAI also reportedly loosening vesting rules. That's a retention move, plain and simple. The company is trying to keep people from walking the moment arrival call. Now, OpenAI declined to comment on the report, and there is a big caveat to this. The journal's comparing current data to historical data from over 20 years ago. Yes, you can adjust for inflation, but it doesn't fully reflect the fact that there is so much more money flooding cap tables and talent recruitment across Gen AI darlings, private and public.
End of the decade,
Look at Meta. Its spending shows the incentive structure is changing fast. $30 billion on talent this year, with about half effectively tied to bringing Alexander Wang in-house. It's a signal that the winners think the bottleneck is people, not just compute. Only a select few can afford these kind of pay packages, which puts OpenAI at an advantage. It can run a startup-style equity fire hose. A lot of public companies don't have that same flexibility to drastically shift internal pay bands without drawing shareholders' scrutiny. And the economics of this do get ugly fast. Equity-heavy comp inflates losses and dilutes shareholders.
No
so in 2026, the separating question is sustainability. Who can keep paying this price at scale, and who has to win with fewer outsized packages, tighter headcount, and faster product cycles? Guys?
$12.45. Bro.
AI data centers are emerging as one of the most debated real estate investment themes heading into 2026 as tech giants spend heavily to upgrade their technology. Joining us right now is Vikram Malhotra. He is Mizuho real estate analyst. And Vikram, thanks a lot for being with us this morning. This has been a very interesting area to cover. It was one of huge promise for several years, but this year was kind of the year when investors sat up and said, wait a second, do we worry about an AI bubble? What are your thoughts on what we've seen this year and what you can anticipate for 2026?
Well, Happy New Year, first of all, to both of you. Glad to be here. I think it's very interesting times. You know, there's definitely a bull-bear debate going on. Just, you know, to rewind, we had March of this year, fears of Microsoft pulling back, that weighed on the data center REITs. Then we had a pickup, outperformance, and then, as you said, AI bubble fears. I think 2026 really will come down to just how pronounced these fears, manifest themselves. Are we truly seeing lower spending or rationalization in the CapEx going to these REITs and essentially to the infrastructure, or are these fears unfounded and we go back to investing in gigawatt type data centers? And I think in my view, as we think about 26, there'll be an evolution. It reminds me of sort of iPhone 1 versus sort of iPhone 17. There were fits and starts, but ultimately there's a lot of work to be done in foundational models, a lot more compute power. So I think 26 is shaping up to a good year for the data center REITs, particularly Digital Realty and Equinix.
Vikram, what happened last year? I think Digital Realty was one of your top picks last year. It's down about 12% over the last year. What's going to turn the tide on this? How do you think the bulls really come out on top this year?
Yeah, it's a great question. Look, I think the bulls are focused on a big bookings number. By that, I mean, these REITs are looking to the hyperscalers, to neo hyperscalers, et cetera, to provide more capex to build new data centers. And I think if Digital Realty can come out and show they have a big bookings number for AI compute, that'll be one big catalyst. The other is they are doing a lot of work on the cloud in terms of winning enterprise contracts. Those are shorter duration that'll help the earnings. And lastly, I think if we can get the earnings trajectory up to the high single digits, I think people start moving away from viewing digital only as an AI hyperscaler play to one that can actually see a multi-year growth of double-digit, high single-digit, low double-digit earnings. I think that's what will get people back into Digital Realty.
Another one of the stocks you like this year is Equinix, EQIX. It's down 18% year to date. What is it that you see that you like here?
So Equinix is really interesting. It's not been viewed as the AI hyperscaler beneficiary, but it is and can be a beneficiary of inference. And so I think Equinix is shaping up in 26 to be a very interesting stock, both from a bull and bear perspective. And just give me a minute. If we're in a bear scenario where there's a complete AI bubble, Equinix, 95% of its business is tied to traditional cloud. And so there's obviously going to be an impact to the multiple, but cash flow wise, I think there's a little impact in terms of a bear case playing out. If we're in a bull case and we truly see inference cases, Equinix has the right footprint to take advantage where you start moving from these massive data centers to ones that are closer to the city. And that's where Equinix can win. So I think Equinix is shaping up to be a very interesting stock in 2026.
Crypto crime is rapidly becoming a focal point for 2026. Joining us now, Ari Redbord, TRM Labs Global Head of Policy. It's good to have you on. You got a lot of background in all kinds of cyber crime, I think. Ari, and I guess we'll start with a lot of it is state-sponsored, a lot of it is individuals. Is it more state-sponsored now in terms of crypto? I know Russia has been implicated. Just go into some of the background.
Terrific. Yeah, no, thank you so much. Happy New Year. And thank you for having me on today. Look, over the last few years, the use of crypto, we've seen proliferate in a whole host of different crimes. For example, this year, we've seen about 2.7 billion in hacks on cryptocurrency businesses. To your question, about half of those, even a little bit more than half of those, have been attributed to North Korea, which has really professionalized, industrialized the hacking and then the laundering of large amounts of funds. Of that 2.7 billion, 1.5 billion alone was attributed to a hack by North Korea in February of this year, 2025, to account for about half of that, the largest ever, let's say, bank robbery in human history, 1.5 billion to be used for weapons proliferation and other destabilizing activity. Look, we've seen a huge year for the digital asset ecosystem. We've seen activity increase by about 50% from last year in the U.S. alone. Bad actors go to where the money is, and that means individual cyber criminals, but it also means nation states like North Korea.
Right. And cybercrime and corporate malfeasance predates anything Bitcoin ever had anything to do with. I've made this point so many times to the politicians, some of them that have some vested interest, to bank executives that don't want to get disintermediated, to former Treasury secretaries, to former SEC chairmen. They all talk about crypto. Oh, my God, crypto. And if you look at the history of fraud, what percentage of financial fraud is crypto? They did just fine using dollars. 98% of it.
I have been doing the same thing with the same people, I think, for many years now. Look, I spent about 11 years as a federal prosecutor at the Department of Justice, and I investigated cases involving bulk cash smuggling and networks of shell companies and high-value art. There was no TRM to track and trace those things on open public ledgers. So the reality is that crypto is a paradox, right? We can now move funds faster and in larger amounts than ever before, but we can also trace and track those funds to ultimately seize them back. And 2025 has been a huge year for that. We've seen the DOJ take down a huge scam network called the Prince Network that was run by some leaders at the highest levels of the Cambodian government. We've seen the TRM create the Beacon Network, which basically brought all of crypto on board to interdict and seize back illicit proceeds. So while you can steal larger amounts of funds and move them, law enforcement could also move much faster than we could in the traditional world.
Yeah, it goes back to cavemen, hitting someone on the head and stealing their shells or something.
Bad actors will, to your point, bad actors will always go to where the money is.
Joe, that's where we got to start. I mean, the recent price action, we're on pace for 4 straight days of being in the red on the S&P going into the new year. How meaningful are these days? How meaningful are the last 2 weeks, 2 holiday shortened weeks? Or should we look at a longer period of time? Like I'm looking at the month to date. Believe it or not, comm services in the red. It's actually pulled back over the last month about 0.75%, even though it's the best performing sector this year. What should we be looking at when it comes to a trend going into the new year?
Yeah, I think you have to look at the quarter in its totality because a lot has happened in this quarter to raise the awareness of the investor to say to themselves, okay, valuation matters, portfolio allocation matters, my risk matters. So I think in this quarter, there's been a very clear pivot away from what was the leadership in 2025, momentum names, high beta names, more towards a defensive positioning. And I don't think that defensive positioning means that it's preparing for a significant market decline. I just think it's preparing for it gets a lot hotter. We saw in the quarter the reemergence of healthcare once again, offense and defense. We saw in the quarter working off some of this extreme bullishness as it relates to position and sentiment in AI, in the AI adjacent names. So I think if your awareness is not elevated at the end of the quarter by what has gone on here, I think that's a foolish mistake. I think you have to carry into 2026 the awareness and be very judicious in terms of where you're actually allocating, because I think it's a little bit of a different environment from where we started 25.
All right, Steve Weiss, coming over to you. What are you using your awareness on? What are you looking at going into the new year? Are you looking at some of the weakness in recent days, the fact that it looks like we're not going to get that Santa Claus rally for the first time 3 years in a row? Are you looking at something else? I mean, what are you paying attention to?
Look, I mean,
Oh my God, I was muted. Thank you so much. Thank you so much, Joseph. Guys, I was asking, guys, did the Santa Claus rally happen? Yes or no? These people are making me go absolutely fucking wild. Joseph, thank you for thank you for asking. Are you muted? I was asking, didn't the Santa Claus rally happen? Like, bro, these people are making me feel like the Santa Claus rally didn't happen. Blah blah blah. Dude, they're fucking crazy. Like, what? As someone that has played the entire move of December down from FOMC, and I saw them go up, and I played a little bit here and up, and like I did all-time high, they're saying Santa Claus rally didn't happen. Like, what? Are you crazy? Like, what? Dude. You guys seen this shit? Like, bro, look at the news. Oh, my Lord, right? The Santa Claus rally happened, right? Yes or no? Can everyone say yes or no? Like, what? Did the Santa Claus rally happen? I think yes. Like, the news saying no. This is some bullshit, bro. Like, what? It did. Thank you. It did. Like,
what we've typically seen.
Alright, no, my mic was muted. I was talking for like 30 seconds.
Everybody's watched that game, so everybody continues to position earlier and
exactly from Thanksgiving into Thanksgiving.
It just doesn't happen. What I take from
we
the
call
last
that
2
kind of
days
the turkey rally, but like into Santa,
zero.
into
There's
Christmas.
No volume. It's meaningless. There's no information coming out. You're in quiet periods and all that, so it means nothing. Now, as you go to
people are mixed.
January,
It says yes,
I
no.
have concerns going to early
Sid
January.
says yes. I mean, honestly, I don't disagree with you that it's not the official days, but like because it went into December 26th, December 24th. That is Christmas, like all-time highs. That's so.
Retail for another year.
I don't know. We're near all-time highs. We ran to all-time highs. I technically, in my mind, count that as a yes. But technically, people want to see Santa Claus as in more until like 700 SPY.
For quite some time. However, I believe that those stocks, not all of them, but the ones that make money, and primarily the public market ones, not the private market, are actually a pretty decent shape.
1210 lows testing right now. Something.
I don't think the valuations there are excessive. And if you take a look at
the news is saying Santa Claus rally, blah blah blah. People were looking for it. Didn't happen.
They will be the biggest beneficiaries of AI. Then I think they're in good shape. And this low we've had in the performance there will once again move to the upside. So I'm pretty sanguine about next year. If I had to guess about next year, and I guess part of that's my job in terms of positioning. I'm optimistic
1255 algo ranging.
We'll lap the tariffs, even though we only saw the impact of tariffs in the last quarter.
1 p.m. is here.
So and we'll become somewhat more immune to the craziness that's going on in Washington, which will still be deadlocked for the next 3 years unless we get something done, in midterms.
Okay. Jim, coming over to you. Are we sure we're going to get more rate cuts? I mean, the Fed minutes seem to put that in some question. The Fed even more divided than we thought it was. That quarter-point cut.
We are hovering at the SPX 1-minute gap that we filled today.
Like Mark Zandi coming on and saying he
all
sees
these bulls trapped at the top now.
It seems like the sentiment around the Fed is varied, and then there's been people on this desk.
All these bears down here too, though.
Those rate cuts. Where do you stand when it comes to
I seriously hope we don't get 3 rate cuts. I mean, if we get 3 rate cuts, it's because things are not going well. Look, we're going into the new year with whatever the markets are doing, and I will admit it has a sour feeling to it. Steve's probably right that this has no meaning in as light a trading week as this has been.
4 people voted yes, it happened. 4 people voted no, it did not happen.
We're likely to have a good year in the markets because the economy is quite strong. You know, whether it's the 4.3% reading for the third quarter GDP or the 3% that's predicted right now, or, you know, signs that the labor market is okay. Look at initial weekly jobless claims and continuing claims for that matter today. There are reasons to think that the economy is going to have a very good year next year, and with that, the markets as well. As far as the Fed goes, look, who knows? It's not just that they need to be data dependent. It's that there are very strong political winds blowing. We don't know who the new Fed chair is going to be. Even more importantly than that, we don't know if the Supreme Court is going to allow President Trump to fire Lisa Cook. And if that is allowed, I think we can feel pretty assured that he will fire other people unless they kowtow to his desire for more rate cuts. But at the end of the day, just speaking as an economist, this is not an economy that needs rate cuts. And I think we should hold those rate cuts in abeyance until that time that we actually need them, which I don't think is in the coming year.
Jimmy just took himself out of contention for Fed chair. There's no way.
Who wants that job?
I mean, no way you really
burning calls inputs. Wow.
Fuck. I believe, but with that question, Joe,
come on, squeeze lower, bro. What the fuck candle is this?
Santa Claus rally may not be happening because people just position earlier. They know the trend, they know the historics, and also what you were saying is that people moved away from the year-to-date winners in this last month of the year. So with that, where do you position going into the new year? For example, Jefferies raised its rating on materials and discretionary from
like yes and no. I agree.
I'm looking at the charts right here. Materials up 2.5% in December. Discretionary up over 1%. Is that the wave that you want to ride into 2026?
It's interesting because as Steve was speaking, I heard him say he's optimistic about 26, and I think the three of us collectively
at 12.55 and rejection at 1
position as being optimistic about 26. But I think speaking for Steve, he probably wants to add a word to that, which would be cautiously.
Always cautiously.
And I think we all are very cautiously optimistic going into 26 because it does get harder. It just does. You're not going to have the tailwind of not just the Federal Reserve's monetary support, but global monetary support. I don't think you're going to see the type of policy action you saw.
We're going to draw a purple box on this algo range going on right here.
It gets a little bit harder because you don't have the benefit of earnings growth being as strong as it was in the prior 4 quarters. Now, the expectation is that you're going to get double-digit earnings growth. So you already have a very high bar that you have to exceed as it relates to that earnings growth. So I think when you look at the 26 and you say to yourself, okay, where do you want to be? I think early in the year, the market is going to reveal exactly what the roadmap for 26 is going to be. And I would be surprised if it's much different than what we saw in the 4th quarter. So I would be very surprised if we make a return in 26 to what we saw in the first 9 months of 26, where it was a momentum market, where it was a high beta, 25, where it was a momentum or high beta market. I just don't see that happening.
Can I ask you a specific question, though? I mentioned materials and discretionary on purpose. You have 2 big winners in that space, Carvana and Newmont. Mm-hmm. Is there a change here that would make you want to get out of these that you see? I mean, obviously Newmont's very closely tied to the gold trade. Carvana, the ability of consumers to spend. I mean, are these 2 names that you're saying, hey, they had a great year last year, I want to get out of these and move into something else?
I think again, I use that word cautious. I think these are 2 great examples of why you have to be cautious. They've been really strong so far. I mentioned on
what a
Monday,
nasty ass chop, bro. It's chopping fucking puts too, like it's fucking chopping up everything.
The increase in margins that I rang the register on the GLD.
Look at this shit. It's about 11:35 on SPY going up, down, up, down, up, down.
I think precious metals over the next couple of years, you want to maintain a bullish bias, but I don't like the type of elevated volatility. I don't like the price action we saw on Sunday, where it basically goes parabolic. And Carvana is another example of a stock that is growing into It's maturing into what the expectation was for this company to be, but you can't ignore the fact that it has had a rapid acceleration. It is a company that, from the perspective of valuation, is a little bit rich. And I think you just have to temper your expectations. So I think it's temper your expectation on basically most of these high beta plays, momentum plays that really worked well in 25.
Why, with such momentum, should we expect it to continue? Or the deal's not all done at this point?
Yeah, I think that's a fair point. At least when we're hearing, when we're talking to CFOs, when we're talking to advisors, they're saying to us that actually what we've seen in recent weeks, so in the past 2-3 months, is something that should continue in the coming year, driven by, for example, companies' need for AI investments. So looking to add on this important technology to their businesses, as well as the softer regulatory stance here in the US with regards to deal making. We've seen less deals challenged by the FTC and DOJ, plus also the prospect of lower financing costs. So there's I think a range of factors that could drive deal making.
It's right where my put it, 685.
To be talking about next year, as we all know, and advisors also like to talk that. But I feel as if talking to CFOs, that's certainly the sense that I'm getting. There's more to come for next year.
Just keep bouncing and rejecting on my fucking put level 685.
Did it really do much to deter that? Why do you think?
It's so crazy. I just keep playing with my feelings. What a crazy ass cycle we're doing right now. This is insane. We're in a downward trend right now too from this wedge breakdown. Tesla. IWM rejecting all again together. Oh, let's see, man. Damn, all around the world. Yeah, BS. BS. What the fuck is this rip up? $110. Man. What the fuck is this shit? Huge ass gap down IWM. Crazy. Crazy pop. Inside the algo range again. Nice fabricated candles. Love it. Love to see it. Just a bunch of fucking flags coming in. Love to see it. It's pretty nasty. Just candles stacking on top of each other like nothing. Fucking color coding. Wow. Sorry, I pressed some button on my mouse.
Tom, you speak, then I'll get back to you and we'll break it apart in a second. Check it out.
I think it's still possible to have a double-digit year. There have been 12 times in the last 100 years where markets posted 3 years of 20% gains. This year hasn't finished yet. Globally, half the time markets do even better in the following year. So I think next year is a year where the debate's going to be, is the bull cycle over or is it going to extend? I think it's going to create quite a lot of volatility in the first half, but I think GDP growth stronger. We have a dovish Fed. Valuations are reasonable, so I think we end up exiting very strong. We have to keep in mind that equal weight S&P 500 PE is 17 times. It's lower than it was 5 years ago. So the market actually has derated in the last 5 years because of these black swans of the shutdown, inflation surge, fastest Fed hikes in history, etc. So actually the equal weighted market is cheaper. I don't think risk is actually that expensive.
Okay, so let's break apart everything important Tom Lee just said. So Tom is saying,
Tom Lee, love it or hate him. It's Tom. Man. 1:15. How long? Shit. Top of the algo ranges near.
Joe mentioned at the top, today is Warren Buffett's last day as CEO of Berkshire Hathaway after 60 years. Buffett shocked Wall Street in May when he announced that he would ask Berkshire's board to replace him with Greg Abel as CEO at the end of the year. Buffett has led the conglomerate for 6 decades, but he won't be stepping away completely. He is staying on as chairman of the company, and he plans to continue coming into the office each day. In fact, he's there not only 5 days a week, but I think he comes in sometimes 6 days a week too, either a Saturday or a Sunday.
Amazing. Is it Cherry Coke Zero or Cherry?
No diet, no zero. Yeah, he likes the full flavor.
I like it too.
Coke.
I like it too.
I think Coke or Cherry Coke either.
Yeah, I just can't. The 140 calories. If you run on a treadmill for like a half hour, it's like 120 calories. It's like I can't. It's not a fair trade.
But his record as an investor, what he's managed to do.
Unbelievable. He's changed the. Yeah, I mean, one man can change the world, and he certainly did in the way that you invest. And I mean, how many people's lives has he enriched? Not just. I'm talking monetarily, but I'm sure in other ways as well. And he's going to leave a legacy of philanthropy that's going to help a lot of people as well. He's done a lot for the NCAA March Madness. I mean, he's done a lot.
For a lot of things. I mean,
he's given me a brick. I have a brick. I have an
Acme brick.
An Acme brick.
He's given away more than $50 billion already. His plan is to give away more than 99.9% of all of his wealth.
Give me a lollipop.
His children are going to finish carrying that out for him.
Yeah, they will.
And Greg Abel is the person who Charlie Munger first kind of slipped at an annual meeting in May of 2021 to say that Greg would be the one who would be taking.
He did back then. Yeah.
So it was 2021 when he first slipped. But then it was this annual meeting, May of this year, when Warren Buffett surprised everybody in the auditorium by saying that he'd like to step down as CEO. Today would be his last day.
How much is it more oversight for the last since then? What is that? 4 years? Is it more oversight? Do you think they took anyone took ideas to him to get his blessing? They did still?
Well, I think not
Greg
internally. I think for the most part, Greg has been running a lot of the non-insurance companies for years now. That's been the way that they set it up. Ajit Jain has been running the insurance companies. Everybody reports through to Warren Buffett. But Greg has done a phenomenal job of really in the operations business.
Now they're gapping down and go gap fill.
That things run smoothly. And a lot of the problems that Warren Buffett didn't really want to deal with were the things that Greg Abel's been dealing with. But they work together very closely, and I know they still talk constantly. So there is a lot of back and forth, and I think that's great for Greg Abel, too, to be able to have Warren Buffett as a fire shield to anybody who wants to come along and say that you're not Warren Buffett, this is not your company.
This is so crazy
Buffett
on
still
IWM
controls
right now.
30% of the vote in that company.
But what does this really mean
got Greg Abel's back.
Today? I just wonder what
IWM 1 minute gap being played like insane right now. Look at this shit.
Going on. I'm sure he, as a chairman,
I think he is trying to step back and let Greg do more and more.
Step back more than he
Look at this fucking shit. They're trapping bulls and bears like fucking crazy using this IWM 1 minute gap right now. Big fucking trap.
If you own 30%, you could still say, I don't want to do that.
Yeah, but I think he's worked with Greg for a long time. He's been his chosen person for a long time, and I think he's very happy to see what Greg has done with the company over the last several years, too. And I think what you pointed out, his legacy is going to be much more than just Berkshire Hathaway, although that's a pretty phenomenal legacy in itself.
For anyone who's owned it.
Yeah, $119 to $7,500. You're talking about gains of $3.5 million.
You could probably, with AI, figure out how many millionaires
he's created
from.
But I think it's also like his Thanksgiving letter that he wrote this year, talking about how you should behave in life, and kindness is an easy choice, and that's what you should do.
God.
I think those messages are pretty
There's
important.
another IWM 1 minute gap, and it's filling the other 1 minute gap.
Admire not only what he's done in business and in investing, but what he has chosen to do in life.
He's kind unless you're on the other side of a negotiation. Especially when he was younger, I heard he was just at a an assassin. Like
he doesn't make bad deals.
No.
I shouldn't say he doesn't. He does.
Top of the trend line.
I mean, ruthless,
I guess they
that's a
broke
bad
out,
word.
and
It
now
has a
it's
bad
their gold. They
connotation,
broke
but
out.
If you're spending your partners, he's always looked at the shareholders as his partners because it started out as a small group of family and friends. He's not going to overpay with.
I wouldn't want to be on. I wouldn't want to buy or sell anything to him.
Another 1 minute gap.
I think there have been
They
a lot
triple,
of
they
pretty
triple
good
gapped
deals
up,
where
and then they
people
triple
on both
gapped
sides
down and
come
filled.
out.
Sure, I'm sure,
All right.
but
not gonna overpay
he
for it,
hasn't.
right.
No, and he hasn't been on the short.
Charlie
short
Munger once made a really interesting point. He said there are all of these companies that want you to overpay, but only once when you pay for them, and then they want to make sure if they're getting paid in stock because that's more tax advantageous that you never overpay for another.
Is he frugal? I mean, he gave me a net.
He just doesn't want anything.
He gave me a net
Look at this shit.
card, and
It's the most insane fucking thing ever.
It wasn't good for it. It just had my name. There was nothing associated with it. That would have taken nothing for him to give me a couple of million on the
shit right now,
plan
bro.
with philanthropy has been trying to help the people who need the help the most, and you're not it.
That is crazy. That is crazy. I'm gonna scan. Look at the fucking chart. Look at the picture. Oh my god. Isn't that crazy? It hit the fucking top of the trend line perfectly. Oh my god. They can come lower on this shit back again, but like, wow, this is so fucking risky now too. Fuck. $120 trying to bounce. This is so fucking crazy now. Left the gap up there on purpose. Wow. Last poll of the day, folks. Bearish or bullish? This is your opinion. Oh my god. This is the most insane fucking wedge breakdown, break up, hit the trend line play ever. We got waving on Tesla right now like crazy. Got 3 people voting bullish, 3 people voting bearish. Wild. I voted bearish. Gap fill up top is an impossibility. Okay, I thought it was at 690. It's still far as shit, so there's no reason to even talk about the gap fill above. We talk about what market doing now. Market doing now is playing at 685 with the purple box and the VWAP, which is 685.35. Nothing more.
Jeffrey's down.
Just like when we were going down crazy and people were talking about the gap below, right? And I said, we're not even doing that shit, right? And look what happened to everyone that was saying the gap below, and they got fucking burnt to the crispy toast, right? So,
saying the forecast
this is
for
why
oil and
I
natural
don't
gas
care
are
about
in the
no
sector.
candles, I don't care about no price targets.
Long energy. That brings us to one of our
Just close by
2026
setups.
picks. Joe, it's yours in the energy space. EQT. Why are you so bullish on this name going into the new year?
Well, I've been bullish on this name since 2024. And
8 people
this is
bearish
not
and 3 people bullish.
Of some
That
belief
is
that I think
crazy
energy
number.
is going to be an outperforming sector in 2026.
Willis
I don't think
says
anyone
bullish,
really ultimately
so
knows that. people that are buying energy right now are seeing the underperformance and the cheap valuation, and that's what they're attracted to. In terms of the fundamental for energy, right now, as Jim and Steve correctly point out, if you focus on fundamentals and you look at the energy sector, you realize that consumption relative to supply, there's an extreme dislocation there to the tune of arguably 2 million barrels per day. So what does EQT actually give you in your portfolio? It gives you exposure to a name that has very strong, first and foremost, momentum. Secondarily, strong relative outperformance to the industry itself. Natural gas pricing has been on decline, but there is clearly a resiliency for this corporation in the face of declining natural gas prices. And where does the resiliency come? It comes from their ability to generate very strong free cash flow. They've made a series of midstream acquisitions that have worked to their favor. And then being in the Appalachian, they have what I would call prime geographic exposure to really where we see a lot of robust data center demand, in particular for Virginia. And ultimately, natural gas is going to be a power generation solution for that data center demand. So I love the way this company is positioned. As I've said, I've owned it since the mid-30s in 2024, and it really hasn't even had the benefit of a rise in natural gas prices. And when you look at how this company is hedged out going into 2026, a rise in natural gas prices would really benefit them because they're largely unhedged in that regard.
Yeah. I like your call, Joe. I just want to point out, you said natural gas pricing is a little lackluster. It depends on your time frame, of course. You go back two years ago, natural gas was trading under $2. Now it's a little bit under $4, and that's I think that's basically what the energy sector has been riding on all year. It's certainly not crude oil, which is down whatever it is, 20% year to date. Natural gas is strong, and it's going to be strong for exactly the reasons you pointed out. Steve, I know you're in Caterpillar, or at least I think you're in Caterpillar. There's a great Wall Street Journal article, I think yesterday, about how Cat is basically building its natural gas-fired generators as fast as it possibly can to allow data centers that don't have connections to the electrical grid to power themselves.
There's so much going on with alternative energy, but my view on energy, traditional energy, is I haven't changed it. It's a very, very difficult sector to make money in. It's very situational. That you can, if you put up a 10-year chart of a Chevron or any of those, you're going to see that's basically flat. Now, it may not include dividends or not. I don't know what they use for charting, but
we won't break up, but we won't break down.
I'm not saying on an EQT. There are idiosyncratic stories that do make sense and do work out. But overall, I mean, you can make a lot more money elsewhere and save a lot of aggravation. Even the chart of EQT, you've got to be willing to tolerate that chart. And if you look at that volatility. So I'd just rather, lose money elsewhere, and I'd rather, not be as aggravated.
Pull the chart back over the last 2 years of EQT.
Yeah, it's up versus where it was.
And you'll see the resiliency I'm speaking towards. Look, Steve's right. Energy investing is difficult. Also understand
I also think it's rigged.
Well,
I think it's rigged not in the crooked sense, but that there are some very large players, some players that only do that and they control the markets. I'm not insinuating that there's crooked or anything illegal. I'm just saying it's rigged by those big players and where they want it to go and the leverage they use in the futures contracts. And then you have the Saudis and all the others. So as a tourist there, it's very tough.
Well, the commodity space is very concentrated in terms of the pool of participation. So in fact, that ultimately what you're describing could occur. But there are some in the energy sector, some winning names so far year to date. ExxonMobil, I think, is close to a 52-week high. So you don't want to completely disregard it. I know when you speak to a lot of financial advisors, what they're saying is, okay, we're going to extract the energy from our portfolio because it's only 3% roughly of the S&P. We understand President Trump and his administration want lower energy pricing, and guess what? We are going to place in the portfolio utilities as the alternative to energy because we like where utilities are with the AI data center demand.
And just keep this in mind, one more point. If you overlay that XLE chart against the S&P or NASDAQ,
they're about to go fill the IWM gap now. What the fuck?
On the bottom. The underperformance is stark.
We keep touching on this AI data center trade. I want to bring up the news today. NVIDIA getting an order for about $16 billion from ByteDance. I think that leads us to one of our next picks in the chip space. Steve Weiss, going to come over to you. TSMC, this $16 billion order from ByteDance to NVIDIA. A pretty exciting thing. I think it has to change some of your sentiment when it comes to NVIDIA from earlier this year. NVIDIA's had some certain volatility as well, and I think people have changed their thought. At first, there would seem to be in the middle of the year some thought that the chips might be commoditized, and the TPUs came out. There might be a rise in competitors. Then you see this. Yeah. So I want to go to your pick, though, TSMC. How does this news shape your view of TSMC in that pick?
It's ratification. First of all, I do own NVIDIA. It's a much smaller position in Taiwan Semi, which is my largest position. Look, Taiwan Semi, they're agnostic. It could be the new Alphabet chip. It could be a Meta chip. It could be an Amazon chip. It could be an NVIDIA chip. It's being made at Taiwan Semi, chances are. And Taiwan Semi, it's not just a manufacturer, it's also a design company. The biggest risk, of course, is a Chinese invasion, but, you know, Alibaba's in China, and they're still operating, and I own that. So I think Taiwan Semi, it's growing cash flow, EBITDA at 20%, revenues 20%, operating income at 20%. Its EBITDA margins, its EBITDA multiple is about 11, 12 times. Think that versus NVIDIA, I'll just guess. I'm going to put NVIDIA at 30 times. And it's much more predictable earnings, and it doesn't have to worry about the competition. So that's why I like the PE's 20 times. So it's a one-peg ratio in this market with the value of those assets. It's ridiculous. So that's why it's my largest position.
This shit is ridiculous.
Pick in the chip space, Jimmy, coming over to you. You previewed this yesterday. You were talking about this company yesterday shifting away from mobile phones.
Yeah, well, it's Qualcomm, and I do think that it is still too much regarded as just a cell phone chip manufacturer. They've done a great job diversifying
projection
first and foremost
ridiculous.
into automotive, but Internet of Things, and both of those aspects of their businesses
WM 1 minute gap, everything filled. That whole cycle was ridiculous, going down and up.
That's not just a one-year, hey, flash in the pan. That's what they're actually projecting through the end of this decade. Add on top of that the data center chips that they are now going to be putting into the Humane project in Saudi Arabia, and they look like they're going to be a legitimate player within the data center space. So you're getting this stock well diversified at 14 times earnings, 2.2% dividend yield, basically no net debt on the balance sheet, which means they can do any of a number of things, some strategic acquisitions if they want, maybe do an accelerated share repurchase. I just see an asymmetric trade here, likely that it goes higher as opposed to going lower from here. All right.
You know why people are having such terrible times during these cycles is because when they're in cycles, they grab fucking super out of the money too. I'm in 685 and it's doing work to me right now, and it's slowly grinding. Like, fucking imagine. Man. What a fucking violent way to fucking do a bullish cycle. What a violent way. And they destroyed all out of the money calls, like far out, right? And they destroyed all far out puts too. Yeah, that's literally what they do. And not every cycle literally the same. So now you literally gotta know what price target, what price level, and they went to 685 fucking 4 times, and that's hurting me, but probably people are at 688, like 683 or something. 680. We only went to 684 today. Playing with $1.5. $1.5 like crazy. Like, you really think 685 to 684 is a huge range? Like, no, it's not. It's not really. That thing could move up and fucking down like nothing. It's fucking nothing. Just the real question is, how and why is it doing this weird ass pull up? And then, yeah. Is that real is the question on the 15-minute candle now. 15-minute candle looking fucking nice, but man. 15-minute candle. $135. I guess that's stable enough for them. Might as well just say fuck it for them and just do it, because 15 minutes says stability. God damn. Man. Actually, was that really the floor? It's showing so hard that was really the floor. SPX gap. 135. These spike candles are horrendous. Going up 20 cents. Man, the setup a little iffy here compared to morning. Morning setup was just the best. And I'm sorry guys, but honestly, you can't control and you can't be scared of morning moves or whatever moves you think whatever, because there's no way a human being or you can possibly predict that the market's going to do the real move in the morning or in the afternoon or midday. The only thing you could do is try to find the setup and to find the real direction and the real time, and when they do what they do, you can take advantage of what they do. That's the only thing people could humanly do. But people that avoid certain times, or people that avoid certain things, or people that are afraid of certain things because they don't want to do it, or they are afraid, or they don't want to learn, or they don't want to do something, or yet, I get it, but the market will never always be so perfect. So, you know what I mean? Like, it will always go at the worst times. It will go at the most unexpected times. It will literally trick out and then do because it wants the least amount of people and the least amount of people to basically find and deduct them right. Get it right, basically. This shit is showing bullish and bullish and bullish until who knows when. That's what it really is doing. Honestly, earlier, I was like, I'm looking for a pullback to go long, but this fucking pullback got me bearish, so I don't fucking know anymore. I really don't know anymore. It's got me kind of tricked out. W pattern as well or something, but I'm still in 685s. I'm confused too. But I am also playing with kind of house money for the last 3 fucking days, so 2 days. Data grinding crazy. grinding crazy. But yeah, usually huge, clear, momentous moves really come in the morning. That's kind of the sad part. Once the trap setup plays out and the momentum comes, usually 9:30, 10, 10:30, 11, 11:30, and then things get slightly sus and all fucked up and shit. Just like today.
Today, Bitcoin is
Today. $140. Man. That is an insane candle. I'm doubling down right now. I'm in 62 contracts for 685 now for 2.2K. Wow. $140. Fuck. Time is 1:42. There's 2 hours left until all options close. On Robinhood. Where's that shit? Previous low. QQQ rocketing right now. Inside the algo range from the morning. Bottom at the minimum. Time is 1:40 on QQQ. I think there's going to be some sort of pullback. I don't know how fucking deep, but
In the final trading session of the year, joining us now to unveil his top picks for 2026
Shrine
is Niles Investment Management founder and portfolio manager. There he is, Dan Niles. Dan, always good, of course, to continue the conversation we've been having so often about the hyperscalers and spending and AI. But do want to get to sort of some of your picks this year because they're interesting and they're not necessarily down that lane at all. Why?
Well, I think, let's take, for example,
RWM is rejecting
today, right?
hard.
You had really good news. You hear about them potentially needing 2 million chips from TSMC, and then, you hear hear about ByteDance ordering a lot of GPUs, and NVIDIA stock, I think it was up like 0.5% or so. And what that points to is the fact that the AI trade is becoming a lot more discerning. And the Mag 7 trade, if you look at all 7 stocks, 5 out of the 7 are under the S&P 500 in terms of performance. So I think you're going to see that theme continue into next year, and so that's why.
Yo, why does this man's skin look like a fucking alien?
Defense with some, good offense built in, but not necessarily the names you might think for riding the AI wave, which are doing actually quite well.
Yeah, no, it's funny. Peter Bookfarm made a similar point about some of these AI-related, specifically related names. All right, so let's get to them if we can, and start with Boeing, a company we follow closely here. Certainly the incredibly important manufacturer here in the U.S. But why do you like it for 2026?
Well, I think to paraphrase Sir Mix-a-Lot from the 1990s, I love big backlogs and I cannot lie. And so if you look at Boeing, I don't think
you said backlog.
Sarah, you know your rap songs. Yes. Well, they've got $600 billion in backlog that keeps growing. It's almost 7 times this year's revenues. And they've got some really big secular tailwinds. You've got the Golden Dome project in the U.S. You've also got NATO, which is going from spending about 2% of GDP on core defense spending. That's getting bumped up to 3.5%. And what you should see with that, plus them being able to self-certify some of their planes starting in September, is cash flow improving from a loss of about $2 billion this year to low single-digit billion positives next year, and growing to about $10 billion before the end of the decade. And by the way, that's not a high bar to clear. These guys did $14 billion in cash flow in 2018. So I love that. I love the duopolies, and so that's why we picked Boeing.
So at the top. Trying their best.
Well, I mean, I'm always watching President Donald Trump. He lives in my head rent-free, and I think that's probably true of a lot of people. And then, of course, Putin.
Give me a $1 drop, come on. Going up on cents on dollar. Wow. Just fucking washing. Don't even know what it's pushing up on, but it's doing it. It's washing. Just vacuum up. It's 150 now. It's just not a normal cycle now. Not a normal cycle. MACD RSI is the most bullish it's been all day. With terrible volume. Fuck. turning into a humongous cycle. Like, oh my god. This 5-minute low or 10-minute low is showing as one cycle, a medium. And then it ran up to the mid. That is something. At 12:55, it couldn't break it. And then extended the cycle high as fuck. This thing could go higher, but I'm just saying this is what happened, so wow. Oh. QQQ from 416 to 418. What a cup. Or you, or whatever the fuck this shit is. IWM. Extending higher and higher until what? 685.76. Moving 20 cents, 50 cents, 30 cents, and going higher, rejecting, going higher, like. Oh. Come on.
Matt's point that we've seen unemployment claims basically at the same place for almost a year.
Right. So, as you said, we're not seeing signs of deterioration in the labor market. Like the layoffs have not picked up in a way that was the downside risk that the Fed has been very acute to. And we haven't seen that. So we're not seeing the bad news story. Frankly, we still need to see some good news in the labor market. So the claims don't get at the piece that's really been sticky, and that's that the hiring rate has been quite low. So yes, good news on the continuing claims for this week, but they are still quite elevated. And so we need a little bit more of the good news. But, the fact that the layoffs have not shown up despite a lot of layoff announcements. Like, we're not seeing them in terms of actual layoffs, and that's good news.
Claudia, do you take anything from the idea that continuing claims came in to some of the lowest levels that we've seen going back about a month? Not significant, and they are elevated, as you've said, but does that indicate that people are actually finding work?
It's possible. These are, while the claims data are very timely, I mean, we get a quick read. We have to be careful around the turn of the year. It's just really tricky with the holidays, and, just reading these data is much harder at the turn of the year than, say, in the middle of the year. But it is potentially a good sign. And what we're looking for are signs of more stability in the labor market, signs that the hiring rates start to pick up off their very low levels. So this is encouraging, but this doesn't make the case yet, right? We need to see it in the hiring data.
Come on, bro. How long? Fuck. I just need one candle to POC. That's it. That's all I need.
There is a level of skepticism, frankly, when it comes to just how they're looking at the returns in the market. Some are asking, how is this possible? With whether it's the political rhetoric or just, thinking about, hey, they'll take it. Like the returns in the market this year, obviously they're very happy with it. But when it comes to portfolio management and creating a diversified portfolio, that's what they're really interested. Why is this, what is this part of the portfolio? How is it helping things, whether it's owning precious metals, whether it's invested in alternatives, how do we balance out fixed income and equities, especially given the run we've had in equities this year? That's what they're talking about as it comes to investments.
So is this a time to rebalance, maybe given some of the moves in the stock market over the last several years?
I do think it is. And, it's something that we do regularly, once a year, sometimes twice a year, depending on the moves. But you want to be opportunistic. So you think about the returns we've had in just the bond market as well, right? So is it a time to adjust the duration of the portfolio? And we've also even had a move in things like precious metals.
Can I just get to
given the weakness of the dollar,
6,876?
the dollar expected to continue to be weak. You're looking to rebalance things across the board.
Just going higher and higher,
also,
and higher.
when there's illiquid exposure in the portfolio, when is that expected to become more liquid? When may there be distributions from your alternative portfolio? Those are the kind of things we look at. It's a lot of that cash flow planning as well, especially when it comes to retarees. So when you're thinking about reallocating,
no pullback going higher. It's due to pullback at some point, but it's just going higher and higher. So
put together for our clients.
I just, when and how much is my fucking question that I'm fucking worried.
People are talking to their clients about, regardless of their net worth, right? I mean, it's still the same questions, the same concerns. How is it different? I'm sure you've worked with all sorts of folks over the years in your career. How is it different, the way these high net worth individuals approach the market versus others?
Yeah, so I think generally high net worth people are already rich. They just want to stay rich. Right?
So it's about maintaining?
Very much so. It's about maintaining, especially about maintaining their purchasing power. So when they think about inflation, especially what we've faced the last few years, is one of the reasons, frankly, we've been in things like, gold for the last 4 years. So that certainly helped. But then, again, looking at alternatives like multifamily real estate or industrial real estate, whatever it may be, those kind of things, protecting the purchasing power is very important. Now, you can get that with equities, right? But when you see the types of moves you've had in the market, and we're going into a midterm election year, midterm election years tend to be volatile, peak to trough. And so having some defensive position in the equity market, I think, makes sense. So if you're underweight defensives going into 2026, perhaps it's time to allocate a little bit more and then to trim, even if it means, paying taxes, which high net worth clients don't like to do.
I'm getting 2 SPX puts right now too.
The main difference is we don't want to pay taxes.
But there's a lot of there's a lot of tax planning you can do, tax loss selling and the like. But generally, if clients, if you're very transparent with it, if you plan ahead, if you're really walking them through that picture, they tend to take that in stride. They just understand, obviously, paying taxes is a high grade problem at the end of the day. They just don't like surprises.
You mentioned alternatives. What do you think is a reasonable allocation to alternatives these days for an average client?
So I include gold in alternatives, and in gold is high single digits.
Give me a $1
close to
drop.
10%
Come on.
in my portfolio. So if you add on other
I'm
alternatives,
in
maybe
2K
you're
on
looking at 15
SPX,
to
and I have a
20%
fuck ton
overall in
of
alternatives. I
SPY
think it's a very reasonable
puts.
allocation for the risk portion of the portfolio, right? So if someone is obviously retired, has a heavy fixed income allocation, you would balance those things accordingly.
What about crypto? Are they playing? And you're laughing. Are they playing in crypto, or are they staying away from it?
I'm sure they're playing in crypto. I don't put them in it, but I've always said
why not?
play
Why
at
not
your own risk because as I said, I'm looking to protect purchasing power. I've already chosen what I think is the best way to offset that purchasing power risk. The best example I would say is having gold. Crypto is it's correlated so much to the NASDAQ, right? And I've heard people say you own gold for the left-tailed risk and you buy crypto for the right-tailed risk.
How much now?
Come on. I don't really buy that entirely.
I'm gonna try to get 1K out of 2K on SPX. Hopefully,
I haven't really been proven wrong to this point.
SPY needs to come back a fucking $1.50.
With us, Jamie Cox, managing partner at Harris Financial Group. Jamie, I got a real kick out of the notes I got from you because it's been a long time since I've seen someone so plain spoken about the AI bubble and whether it's there or not. Can we start with that?
There's maybe a 1 minute cap on QQQ. There's a 1 minute cap on QQQ. That's not good.
People have been talking about AI bubble for the last couple of months. I mean, it's even been on 60 Minutes. What people are paying attention to, they're trying to relate it to the 1990s when there was no earnings growth. There was no underlying fundamentals that supported the stocks that were being run up. What you have now is a completely different situation. You have a situation where the companies that are investing in the infrastructure, they actually have the earnings growth and the capital to support that investment. And also the largest tech companies right now are doing the investment to try to crowd out and make sure that the smaller players actually get a foothold and actually take over and gain market share.
That's so fucking
evil. It's a completely different situation.
Oh my
so
fucking
instantly. That doesn't mean that there's not going to be one in some future state. But what we don't see are some of the
IWM SPY crazy to go fill the gap on QQQ immediately.
Any of the typical or the privately held companies come to IPO yet. These are typical signs that you see, after when you see before there's a bubble. What we're going to see next year, I think, is some of these companies come to market, and I think what you will see is you'll start to see clarity where you actually get to digest and understand some of the fundamental financial information coming from these companies as they report. And that will really fuel, I believe, and actually more growth in these tech companies. I actually think we're probably just at the precipice of it actually happening.
What do you think fuels the opportunity for the smaller guys, the guys that, the big guys are trying to keep out? And do you think that some of the big guys that are right now private go public next year? Are we going to see more IPOs for OpenAI or Anthropic?
Yeah, I don't know exactly what will happen, but I assume that you're going to start to see them come public. And the reason is because they really do need to legitimize themselves. And going public will do that. In addition, there have been so many reports of, electricity deficiencies and the infrastructure play. And what I notice is that investors tend to overestimate the ability for the infrastructure in terms of investment, but underestimate the software portion of it. That's what's really going to define the moment for us is what comes next. What's happening right now with NVIDIA and some of the infrastructure plays. There's plenty of money to be made there, but the real money to be made is what the productivity enhancements. We all know this. This is not something that's brand new. It's not in the market. We just haven't seen it yet, but we're going to. And if you look at the economic data that's been released in the past couple of months, one of the things that gives me the greatest sort of hope is we're starting to see some increase in gross domestic income. And if productivity growth picks up, that will legitimize the AI enhancement piece of this productivity wave. And that's going to create a lot of value for investors over time. And I think that's where people need to pay close attention. And it's not just going to be with the largest tech companies. It's going to be very broad-based. It's going to enhance the earnings potential of many companies in many sectors, industrials, financials, and others.
It's insane candle. so fucking on something. Every time they do some shit, it's like to the fucking max. Like, god damn. Like, what is this candle? Oh, just sick. Can this hold up? Hmm.
Today, Bitcoin. Let's ask Jared Holtz, Mizuho Securities healthcare equity strategist.
Fucking wild.
Jared, thank you for joining us. Are you expecting to see more M&A in the space?
I'm getting burnt.
Thanks so much for having me. I am. I think this
I'm still in though, but it's wild. I'm like coming
pretty
back.
similar
I'm
to
like $50 out on my
2025.
SPX now,
think
but
there were
like it
about
was getting burnt for
22
fucking 205 like
transactions in
crazy,
biotech
and then my SPY is
north of 500 million. I think
I
that's
need
roughly
$1,
right.
50 cents
And,
dump
and
on
so,
SPY
yes, I think
basically.
next year will be
On
pretty
SPY.
similar.
In any particular space, I mean, the GLP-1s have been sort of the theme of this year. Are you looking at new trends in this space?
I think it's very difficult to predict where the next deal is going to come from in terms of the therapeutic category. Obviously, this obesity situation has been, so remarkable. I'm not really sure there are that many companies left to be acquired. The one that I keep on looking at, I think a lot of investors are circling, is Structure Therapeutics. That's GPCR. They've had data recently, and they seem like they could be a decent player in this industry, even if they took 5% of the market. If the market estimates that the entirety of the GLP-1 class is going to be above 100 billion.
What about the efforts that the White House is taking on controlling drug prices? There looks like there's going to be some arm twisting going on where drug prices are concerned. And then you have the subsidies for the Affordable Care Act insurance expiring today. Does any of that affect where these companies go for the next year?
Well, I think the drug pricing discussion is one of the more interesting ones in all of healthcare. This year has been very active in terms of the industry coming to some sort of negotiation, some sort of terms with the administration over the price of drugs, either new drugs or existing. My sense is that the government's going to walk back a little bit from drug pricing as this major issue if they believe that a lot of it has been tackled already. And
throw
if that's
up a little
the
bit.
case, then I think the
Give me like a
pharmaceutical
fucking
industry,
5-minute
large-cap
throw
pharma,
up. Come on.
Lilly, Pfizer, Merck, et cetera, probably feel
Throw that
better
shit down.
about how they're positioned in the market in 2026. That
Throw it
could
up a
allow
little bit.
for more deal making, as we were talking about earlier. As far as the subsidies are concerned, I'm not quite sure how that's going to work out. You're right; they expire today. There's probably there's a good chance that there's some sort of
Tesla leading?
agreement
I have
made over
no
the next
fucking
couple
clue
of months.
what's
But
leading.
I don't think it's going to have
I don't even know
a
what
huge
is
impact
fucking
on
going.
biotech near term.
Where it's going. It went up crazy high, so where in the shit? I mean, I just know pullback is due because we going up crazy. It's just the setups are so. Small. is terrifying. It's fucking terrifying.
Services Committee member Mark Wayne Mullin joins us now. And Senator, is this all bravado, or is Trump's pressure campaign actually taking any effect at all?
It's 100% bravado by Maduro. He understands what's happening behind him. I'm going to take a little liberty with the assumption, but it's assumption based on some briefings that I've received and some of the things I've been writing on. Maduro is underneath this bravado he is showing is got a tremendous amount of turmoil. Remember, he made some business deals with some very, very, very volatile cartels. Basically guaranteeing them
scaring the shit out of me on SPY, showing that I fucked up on SPY, but all I really need is fucking below 685 somehow.
To dispatch them across the Atlantic
Man,
and the
I'm fucking
Caribbean.
scared. I'm
That
in
hasn't been
6685
proven
puts
true.
right now.
We
I'm
have
fucking
taken a
terrified.
heavy toll, cutting down
Prime is
those
2010,
narco boats by
2009.
90%. The ones we haven't had direct strikes on, we've interdicted.
My SPX
as
is
many,
break
if not
even. If
more.
they go lower to
And
VWAP,
so,
I'll fucking leave,
underneath
or
all
POC
this,
in profit. I
Maduro's
just
not
need
able
my
to live
SPY
up
to
to
come
his part
back.
of the bargain.
So
What's going to
more.
happen eventually is he could be taken out from within, not from the United States, from within,
Fucked
because
up
of
on
the
SPY.
relationships that
I
he
don't
has
usually
brokered.
switch from SPY to SPX, but I
You know,
literally
if
do
you play
that.
with fire, there's a
That
good chance
fucks
you may
me up.
die by fire.
Right. All right, on to
Just
the
stick
next
to
one,
SPX or
Senator.
some shit.
Israel's Netanyahu pushing for Hamas to disarm to allow the Gaza peace deal to move
Like
into
my
its next
risk
phase.
analysis
Listen
gets
to this,
fucked
I'll
up
get
with
your
SPY and SPX too, because like I just go off by 1, 2, 3 contracts when I do SPX, but like SPY is like sometimes I get fucking 10 and it's 1.5k, sometimes I get 10, it's like $900, sometimes I get 20, 30, but like that's just
the answer to your question is if
yeah.
we disarm Hamas, whether within
Set up
international
fucking
forces or
terrible
any
too.
other
I got
means,
set up
yes,
on
I see a
basically.
different
I got
future
set
for
up
Gaza.
on and they
And it's the one
extended the
remaining
cycle
step,
and this
and
shit
everybody
fucking broke out
understands that.
like crazy.
I think Hamas understands
Now
that. That's why they don't want to do it.
it won't even come down. Like how the fuck?
Senator, will there
It
be
needs
a
to
next
come
phase
down
of
how?
peace
Well, like
if Hamas refuses to
chop
disarm, which I
and
doubt
then a
very
little bit
much
down,
they
or
will.
like chop and then at 3:45 close
Keep in
SPY
mind,
out and then
Hamas is a
15
terrorist
minutes or some shit,
organization,
or
even though
what?
they formed themselves as a government because the
fucking
people
sad.
of Gaza elected them. Now, the Palestinian individuals
If I
that
get
live in Gaza are different than the
684.75,
Palestinian
I'm
individuals
good.
that live
Like
in the West Bank. The
anything in
West
this
Bank
purple box, I'm good.
elected to
It's
have
just
the Palestinians rule
I think everyone's
the
the
West Bank.
same though.
In
Like
Gaza,
the range is kind of
Palestinian
fucked.
people that live there elected to
Range
have
we
a
played
terrorist
here for
organization
2
called
hours, so
Hamas
it
to
broke
run
out.
the
So
government.
until it
What
comes
has
back
happened
here,
now is
basically
Hamas is
most of the
using
bears
their
are all fucked
innocence
and
as a
trapped
shield.
on
The
SPY or
fighting could
QQQ
stop
or
tomorrow. Hamas
SPX
could
or
just
some
simply
shit.
lay down the arms.
The range is just all
And
here
Bibi is
since
correct. There's no other
11:45.
government
So
that's going to be able to go in as long as Hamas is there, because Hamas would kill that individual, because they're not a form of government. They're a terrorist organization which wants to
fucking extended so
fear
crazy when they
and
go though, bro.
destruction.
Like what in the
So
shit is this?
I think the next phase could look
I thought we
two
were gonna go
ways.
back to the
One, you could
9:30
see
open.
just a complete
That's how
destruction
crazy. Like
of Gaza,
I mean, we
where
still
we would
can, but
wipe
that's
out
how
all
crazy this
Hamas.
shit
The
looks
problem
when
is
it does.
some innocents will
IWM
be caught
bouncing.
up in that, but that is by Hamas's choice, because if they lay down their arms, we could
Time
disarm.
is
Or
210.
you could see where a vetting process of everybody that wanted to leave
There's an algo
could
range
be
on.
brought out, be held in
210.
in some type of secured camp while we
Pulling
vet each
inside of it into
individual. We can't
215
just
looks
allow
like.
everybody to walk out, because Hamas has infiltrated the civilian population that is there. But there has to be a next phase. Absolutely.
I got 1 minute left, and I want to get this in because I know it's important to you. The Trump administration planning to launch a $50 billion fund to help rural health care in all 50 states. How much is coming to your state, and how badly needed is it?
You know, keep in mind, this $50 billion project was part of the one big beautiful bill that every single Democrat in the House and in the Senate voted against. Oklahoma is going to receive $223 million for rural health care. Now, remember, the Democrats were saying that the rural health care was going to be devastated by this. It's just the opposite. It's vitally important. I live very rural. My parents live very rural. What this is going to happen is allow rural hospitals to be able to become critical care centers, to be able to provide critical care in life-saving times, be able to stabilize a patient, be able to bring them to a larger hospital where they have more resources. So the $223 million Oklahoma is going to receive is going to keep our 36 rural hospitals open and going to be able to have critical care for our parents and our loved ones.
Fantastic. Money well used and much needed. Senator Mullen, thank you so much for joining us, and Happy New Year
We're
to
still
you.
red. Wow.
Happy New Year. Have a blessed New Year.
Thank you.
So trash candles are. What is this coiling at the roof? Let's see some sort of something. MACD is growing on the 1 minute, but I mean, it doesn't really mean much unless things start going. 0.618 reached on SPX, and we're trying to pull back to the 0.5. Tesla's bouncing. Candle, like the candle there. First of all, the green candle literally right here, it looked like it was gonna go, and this one too, it looked like it was gonna revert too, but now it's just, yeah, fucking off the fade, bro, at this point. 618.5. Playing it to the absolute.
Intraday price action in the Dow. Well, there we have just 30 minutes worth, but let's pull up the 5-day. That's because we are 5 days into the Santa
shutdown. One of the things
high average tariff rate. As a macroeconomist, the way I view the impact of tariffs is I look at the average
There's our
tariff
trying.
across all goods and
Candles are
services
somehow
imported into the
moving
United
now.
States. You know, it's a sales tax.
215
and
is
so
here.
what is the average
0.5
increase in the sales
Fibonacci is
tax
being
versus
passed on
prior to the tariffs?
SPX.
And so
MACD is
it's
bearish
likely
on the
that
1 minute.
the
Volume's
government
growing.
has other tools to implement sector or product specific tariffs that would keep the average tariff rate considerably above what it was at the start of 2020. Excuse me, 2025.
2/3 going.
So probably if we saw those tariffs invalidated, we could see some businesses get tariff refunds. That would be a boost to their cash balances going into 2026. But going through the rest of next year, I would expect that the average tariff rate will still remain high, and so imported goods will continue to be subject to tariffs, most likely.
Well, I appreciate that perspective. Moving on here, your survey shows, or Comerica's survey shows that tech and construction are leading optimism, while sole proprietors and retail, they're more cautious. And we talk about the K-shaped consumer quite a bit here. That is, in the letter K, you got one leg going up, the other going down. Is it possible that we have a K-shaped small business
I'm up
$500
well? On my SPX, and my SPY is still
my interpretation of the Comerica Small Business Survey's breakdown by industry is that you're seeing a lot of the impact of the tech boom on the one hand, which is really driving demand for AI services and for ancillary services for businesses to bring those new technologies into their operating models, versus the impact of the lagged effects of the Fed's high interest rates on the housing sector and on the construction sector. If you look at the third quarter GDP report, which came out earlier this week, very volatile, right? The annualized changes have been swinging all over from quarter to quarter. But if you look at that year-over-year comparison, the parts of the economy, excuse me, the parts of the economy that haven't been growing in 2025 are investment in structures. So non-residential structures, residential structure spending, those are down year-over-year in real terms. It's the only part of fixed investment that has not been growing in the U.S. economy. So I think that explains a lot of the headwinds that we see in the small business survey, in addition to the pressures on low and moderate income households, which are affecting the retail sector.
And we got to
trash. Oh, it's turning into something. It is so slow. It's this. Finally. $650 up on my 2K. Finally going.
Tech check. So how's it looking
I'm
for
about to get
2026?
1K out.
It's going to be all about AI.
On
So like you
SPX.
mentioned, this year it was the
At
tariff
VWAP,
thing that
hopefully,
was the
and my
biggest
SPY.
drag on the stock. In
Come
fact,
back,
if you look
please.
from August 6th, when
685, please give me $2
President Trump and gave him that golden trophy and
please give me a market down.
$600 billion,
Fuck.
stock has been up about
Oh
35%
my
since
God,
then.
this
So
is
it's
crazy.
up about 9% on
Yo.
the year. And the rest of it, the hangover here is
what
artificial
the fuck is
intelligence.
Tesla
Now,
too? I
as
thought
you
Tesla
alluded
was
to,
gonna
they
bear
failed
trap
to
too.
deliver
Bear
that
trap, bull
Siri
trap, bear
AI
trap, bull
update
trap,
that was
everybody
supposed
trap.
to happen in March. They said
Oh
it's going to
my
happen
God.
next year. Now a lot of people think
SPX
that means
going
March
crazy.
2026.
Finally.
And look, we know what it's
Fine.
supposed
I
to
think
do.
it's
We
gonna
know
go
how
here.
it's supposed to work.
6876,
But is
man.
it going to be
Finally.
good? And by the way, what investors
6876, I think.
really need to pay attention to, it has to be so good that it convinces people to upgrade their phones. Because unlike
Possible.
ChatGPT or Gemini and so
6876
many other
possible.
chatbots, Apple
Oh
Intelligence
my
and this
God.
new version of Siri is going to be free with your iPhone. So Apple needs to make sure people are buying these new phones in order to enable those new AI features. That means anybody with a 15 or lower would have to go out there and buy it. So that's the one thing. The other thing they could possibly do is they could change their mind and say, we're going to do a subscription fee.
I don't know if I should
for
take
these
my
new advanced features. Maybe they introduce some
$820
stuff
on my
that
2K
they
on
didn't show
SPX.
us already, but it's been a long time coming. It
SPY,
was
please.
June 2024 when they first announced Apple Intelligence, and here we are. It's by the time they actually get it out the door, it's going to be about 2 years
crazy
later.
fast.
The thing that I find baffling
My
is
SPY
that
was
Apple
getting
has
fucking
always led the
crushed.
way in new tech.
They're crushing it,
and
crushing it,
getting
crushing it on
especially
data, and they're bringing it back
consumer-facing
finally. Oh my God.
technology. What is taking so long? It's not
6880 being
led the
broken
way in the
down.
sense that they'll take
I want to
something
go
that's already
lower.
there and just make it better, right?
I mean, if you're
From
at least
6,889
to
to
on smartphones, but you know, like
but then they took that
I
idea
can see
and
20
and
points
made
on
it so much
SPX
better,
easy.
right? And so
6,896 to 6,876 easy possible. 6,889 to 6,890 possible.
So John
Easy.
Gianandrea, he was the head
15
of
points.
AI.
They want to go lower.
He's out.
1 minute
He
gap
got
down.
pushed out,
I am leaving
most
SPX
likely,
right
and
now.
he is gonna be out of the
3.2K.
company at the
Oh my
beginning
God,
of
I'm
next
out.
year. There's a new
SPX,
head of AI who is
SPY,
not even reporting to
think
Tim
fuck,
Cook yet.
coming back.
That could be part of it. The other thing is they decided to
Holy
mostly
shit,
build
I
it
have
themselves,
60 fucking
as opposed to what
685
they're going to do next
DTs,
year,
man.
partner with
Please.
Google or
I need this
Anthropic
shit
or
in 20
ChatGPT
minutes
to do it, and they couldn't
or
make
less.
that
10
happen.
minutes or
AI
less, I'm
is a
fucking
piece of
leaving.
that. Right.
Time is
how much
2:20.
of a piece
3
is the
p.m. is coming.
affordability of the Apple
3:45.
ecosystem?
There's going to be a
Because
whole different fucking game before.
Well, if you've got
There's a whole
people
different
who
fucking game
are
before.
affordability focused,
Yeah.
that
Oh my
it's
God.
an easy choice to go with an Android over an Apple
Dude, my
product.
spies were getting
You also got to
fucked.
keep in mind that is true.
Please.
But
All right,
especially here in the
bounce a little
United
bit and
States,
come
there's
back
so many
down
deals. We
below.
see these commercials all the time. You
Purple
trade in your
box,
old
come
phone,
on.
you get it for free.
Damn,
The
come
carriers give you these enticing deals in order to get you to subscribe to them. They pay Apple up front, and you pay them back over time. So a lot of people,
Damn.
and they end up getting
HOD,
the phone
and we're at
for
the
basically
midpoint now.
zero down, let's call it, and you kind of lease
Alright,
it
that's
over
the
time.
HOD.
So the affordability of the
That's
phones
not the
becomes
arbitrage.
less
That's
of a
not the
problem.
HOD.
It's these
We were at the
subscription
midpoint.
fees that they're laying on top of it.
Now we're
that
testing the
could,
floor almost. Right?
affect kind
This
of
is the
what we're talking
midpoint to the
about.
floor test. This is another setup. All right, this is the midpoint to the floor. This is 1/3, 2/3, 3/3 building southward right now. They want to go lower. This is the midpoint. Right? You realize this is why smart money does cyclical analysis and why smart money does deductions, right? Because this is what's going on. 1/3, 2/3, 3/3. You say, oh, what happened? We were floor testing, trying to go midpoint, floor testing. We went to the midpoint, right? We passed the midpoint at 1:45 and we were roof showing at 2 p.m. And then we're going from basically the midpoint and the roof hoping to floor testing. It's not really 100% saying it's going to go floor test, but that's what the market's trying to show based off candles, based off cycle, based off where the LOD is, based off where the HOD is, based off what cycle is saying, based off where people are trapped on bears and bulls, based off who's trapped, based off, who's trapped, bulls are trapped, bears are trapped, creating cycles, creating blah, 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 overextending, going overextending down, overextending up, blah, 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 blah. You know what I mean? That's what they're doing. Crazy. Bounce trying. I did not leave my 685s yet. Crazy. They could fucking cook me here in 20, 40 minutes. there could be a whole different world. What I'm thinking about right now could be easily flipped. Why? Candles fucking build cycles, and cycles change. They do not have to go down there. They could. They do not have to, but they could. So let's see what happens with the cycle building here and the candles forming. Market rejected not at 2, but at 2:05 after people thought 2 p.m. not doing shit. But I literally said it's inevitable, right? And we don't know how much, but that's what they did. And now it's showing as 0.5 Fibonacci from the down to the up too. So it's something going on here as well. Let's see what happens. There's another game. Another little mini game inside another game happening. Market loves the 0.5 Fibonacci. It just keeps going fucking right back to the middle. Keep fucking trapping. Keep doing cycle. Keep blah blah blah. Extending whatever. Creating cycles and doing shit. So let's figure out. What it wants to do. If it wants to go lower than here and cross the VWAP or cross the POC, or if it wants to bounce on VWAP. That's what the market's deciding right now with the 0.5 Fibonacci. I think it's going to go lower, but honestly, that could be a whole biased ass situation shit right now because I'm positionally biased right now, so I mean, I don't fucking know. To be honest, it's better to say I don't know what they're going to do until they do it, but my positional bias tells me I want them to go lower, and the candles, if they go red, I'm going to say they're bearish, so it's bearish.
December 8th, federal prosecutors in Texas unsealed
God
documents
damn.
that revealed an investigation into a
So
massive
fucking crazy.
smuggling network that stretched
Market's so
across
crazy.
the United States and around the world.
God, thank
Operation
God.
Gatekeeper by the Fed.
Let's
The
go. I'm at
investigation
3K.
wasn't focused
Let's
on
go.
gun smuggling and stolen goods, but rather on an alleged
Let's
secret
go.
underground network of
Yes.
suppliers for
Yes.
NVIDIA's graphic processing units,
Right.
or GPUs. Eamon Javers joins us with a follow-up on that story.
I'm out
Hi, Eamon.
on 30
Hey there,
contracts right
Contessa.
now.
You're right.
For
The government said
1.5K.
a hidden smuggling ring was sending chips to
I have
China in
32
defiance
contracts
of
still
American national
on
security export control laws.
685.
The smuggling
Holy
syndicate
shit.
allegedly involved operatives illegally entering the United States, phony front companies, and a secret warehouse shipping
have
operation
30
in
left.
New Jersey that was penetrated
I'm letting
by
this
at
shit
least one
ride.
working on behalf
Yes!
of the US government. Now, here's how the operation allegedly worked. That empty office space in Sugar Land, Texas, ostensibly served as the headquarters for a company that was actually run out of an individual residence in nearby Missouri City, Texas.
6, 7,
Federal
5.
prosecutors allege
Let's
that
get
the
it
company
done.
purchased NVIDIA components from an
Yes.
American electronics
Let's
firm
get it done.
and then shipped them to Singapore and then on to Hong Kong.
6875.
In another case,
Oh
a
my
Houston-based company allegedly purchased computer components from a firm in
God.
Southborough, Massachusetts, shipped them to a logistics facility in Secaucus, New Jersey,
Oh my
where
God.
they were relabeled with a phony company name.
Look
and
at the
shipped to a New
MACD
York
actually
warehouse.
pulled that crazy with the
Paperwork suggested
volume.
the components would then be
1,
shipped on to
2.
Australia. An NVIDIA
Third
spokesperson
time
told CNBC
today.
that the U.S. government's export control
Second time
process is
today or
rigorous
something,
and
actually.
comprehensive. Even sales of older generation products on the secondary market are subject to
Okay,
strict
now we broke
scrutiny
out
and
once.
review, the NVIDIA
That was the
spokesperson
only
said.
breakout. That
While
was the
millions
true
of
breakout.
controlled GPUs
That was
are
the
in
one
services
true
at
breakout.
businesses, homes, and schools,
They
we will
fully pulled
continue to
back.
work with the government and our customers to ensure that secondhand smuggling does not occur.
Is that it?
And on the
1
same
third,
day
2
the
third,
federal
3 third.
prosecutors announced this investigation, Contessa, President Trump
cycle
made a
extending
social
into
media post that could undermine the whole operation. Trump
225.
said on
They
Truth
might go
Social
lower into
that the United
230
States
here,
would
but
now allow
225 is
NVIDIA's
here.
H200 GPUs, the most powerful
Cycle is
GPUs
fucking
seized
crazy.
by
I
authorities
guarantee
in
you the
Operation
most of the
Gatekeeper
people got
to be
trapped at the
exported to
top.
China.
Why?
Trump
Because they're
said those
doing
exports
1,
would be
2,
allowed,
3,
provided
4,
that the
5
US
day
received a
DTEs,
25%
1
cut
weekly
of the
calls, and
sales,
they're getting
and the
fucked on it
president
right now.
added that NVIDIA's most advanced
That's
AI
what's
chips,
most
the
likely
Blackwell
going on
and
this
Rubin
pop.
GPUs,
These people are
are
trapping the
still
1,
not
2, 3
authorized
DT
for
calls.
export. So that throws federal
The people that
prosecutors'
went in
case
yesterday
into
too that
some
didn't leave,
question
it's
here.
still
Defense
now,
attorneys for
and
the
they're
men
destroying
charged have said in
all
court
the fucking
filings that the
data on
government's
everything,
claim
and they're
that this
just
alleged
rejecting it
smuggling
because that's
threatens
what they
national
want to do.
security can't be right because the president
Insane.
is allowing it to happen. Contessa, back over to you.
That's got to be frustrating for the prosecutors and for the investigators who went after this. Isn't the problem in the first place the smuggling, like labeling boxes falsely for export?
Oh, they want to go a little bit lower.
That would be criminal.
Yeah, it's a surprisingly low-tech smuggling operation for a high-tech product. What the allegation in this case says is that there was this facility in New Jersey,
Look out, dude.
in Secaucus, in a warehouse,
look fucking
Chinese
crazy bullish at the top. At
205,
I was getting crazy squeeze.
Slapping fake labels on top of the GPUs.
Yo, that whole thing was a setup. They set everything up
Sankayan.
down here to pump it up. They set everything up there to fucking pump it down.
Label, and then they changed the bill of lading descriptions
I love the market.
of what these items
love the
actually
market.
were.
Where are they gonna go? They're probably gonna go to this purple box right here at 6.
Export control officials at the point of embarkation. So, clearly it's old-fashioned, low-tech smuggling. I mean, this is right out of like a prohibition.
It looked fucking crazy, and I was chicken little, but look.
But in this case,
market
this
set up.
is NVIDIA
Market
GPUs going to China.
Do you know? I mean, NVIDIA chips have just been in such high demand. We've talked
a deductor's
about
world. I'm telling you, bro. How the fuck do you do this shit on candle and go bullish? It's not like that every fucking time.
GPUs in the first
it's actually market setting up, using trend lines, using things, using everything.
Right? So
using
they don't seem
everything.
to be purchasing them directly from NVIDIA, but from other third-party companies. It's not clear in the documents because oftentimes they're referred to just as Company 1 and Company 2, so you don't know exactly who they're referring to. But
Happy New Year's, everybody!
More or less legitimate purchasing activity by a company that's on its face based in Houston, for example, and then in reality that company
hit the like button before you head out today. Thank you all very much.
Documents and certification to the original sellers saying this is for legitimate U.S.-based purposes, and then out the back door it goes to China.
Eamon Javers,
look what happened higher time frame. The amount of news they were feeding today, folks, on Monday. Sorry, today is Wednesday. 9:30 open Wednesday. We pushed down crazy. Made everyone say blah 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 blah, and then now it's bearish news. Rally. And then at the tippity top of the bullish, they pulled it back crazy. And where are we? We are. Man, I'm like shivering right now. It's fucking crazy. 0.5 Fibonacci has lost. Of the bottom bounce to 205. So bottom bounce to 205. We are going lower right now. The market wants to go lower right now. Tesla is testing the LOD. Tesla is breaking the LOD by slightly. Not moving that much intraday, but it's still breaking the LOD after it went to the HOD, right? Technically speaking. 456 to 452 is a range. So let's see, time is 2:30. We are at POC. We are getting some sort of chop, but the purple box is here. The purple box says, come here. 684.96. Man, the amount of fucking bears that were getting killed into 205. Do you guys remember? Does anyone remember? Does anyone remember? Does anybody remember or no? I remember. LOD breaking. They're gonna go test the LOD. Low the day is here now. Alright, LOD testing. This is insane. If I had all my puts, I would be up fucking I would be up 4,000 or some shit for the day, but I don't give a fuck. I am still in 30. Holy shit, I just went up 1K on 30 SPY puts. Fucking crazy. LOD testing on IWM. LOD testing on SPY. LOD on everything. LOD, 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 everything. LOD, everything. LOD, everything. Look at that big ass 1 minute gap. They gap down crazy from the 0.5 Fibonacci to 0.786. That is a fucking dump. That's a dump. They're back into the trend line. Look at this shit on SPX. That's what you call fucking setup. That's what you call setup, right? That is what you call setup. I was one of them too, dude. I was one of them too, and I did not know, right? It was gonna do this 100%, but like I was literally hoping and I was praying, right? But honestly, this is crazy. This is fucking insane. I love it. Wow, LOD breaking. Woo! LOD breaking. Look at QQQ. QQQ wants to go to LOD. Oh my god. Biggest dump of the day. This is the biggest dump of the day. Biggest dump of the day. QQQ. They want to go break the LOD or they want to go test the LOD. This is LOD testing right now. Oh, here we go. And on that note, folks, I am all out of 685 puts for $1 each. I am out $3,000. I'm done. I'm done. On 30 contracts. I'm done for the day, folks. Happy New Year. Happy fucking New Year. Happy New Year. Happy New Year. Happy New Year. Happy New Year! Let's go! Oh my god. Wow. I'm up 2,000 for the day now. Oh my god. 2.4k. I got grinded crazy down. With my $600 profit that I fucking scalped all fucking day long. Oh my god. LOD testing on SPY. LOD is here. Alright, LOD is here. LOD broke on QQQ. Alright, LOD is breaking on SPY. Most likely here. The chances are it's 95% chance it's going to break the LOD. Look at the dump on QQQ. QQQ wants to go to 614 by Monday. Insane. QQQ wants to go to 614 by Monday. Insane. That's what I truly think right now. It dumped $2. QQQ wants to go to 614 by Monday. That's crazy. 614 is a crazy, crazy smart money put call wall. 614 we might see next week. That's crazy. LOD did not break yet. It's the most craziest fucking cycle extension fucking bull trap ever. You know how I say every day I see some crazy ass shit and then it's crazier than the last day? This is what I mean. This is the most insane cycle fucking bull trap extension ever. They wanted to go lower here, they wanted to go lower here, they wanted to go lower here, they just extended the fuck out of it and then they bull trapped the fuck out of that and then went lower to the new LOD on SPX. There's a divergence on SPX and SPY. Long-term calls are in danger. The floor broke on SPX. It did not break on SPY. The divergence is most likely going to go clear. The SPY and SPX divergence at the floor. I lied. The LOD broke. There is no divergence at the floor. The divergence at the floor does not exist because they broke the floor on SPY and QQQ and SPX all at the same time. So there is no divergence at the floor. The setup has been played. This is the new floor. There is no divergence at the floor. Time is 1:35. When everybody is fearful, when everybody is euphoric, when everybody is excited, when everybody is not giving a fuck, that is when it's most important to give a fuck, which is 24/7, every single fucking minute of the market. So if you guys love that, man, this is the right place to be. This is deduction, BESTSPY live trading, folks. Candles are always showing the same shit, but this is just live chart analysis. Showing bullish, showing bearish is who is able to deduct the chart and analyze what's going on live, what they're showing, how they're showing, what they're faking out the most, the best. They're back into the purple box. There's no divergence at the floor. All right, setup has already been played. Until the low of the 135 breaks, all bears, all puts, all shorts are in fucking danger and they're fucked. LOD divergence cleared. SPY, SPX, QQQ. Alright. And they are playing in this box now. 684 somewhere. 684.5. Alright, purple box being played. Man, this whole fucking week I've been on fire. Last 3 fucking days. Last 3 fucking days I've been on fire. Not a single fucking miss. for myself, man, with these fucking algo ranges, with these purple boxes. Insane work, right? And they're rejecting off the purple box, and there's a SPX 1 minute gap here. SPX 1 minute gap. Right, we pushed down at 130. Sorry, we pushed down at 230. Crazy. Time is 240, so it's not 135, it's actually 2. They are not filling the SPX 1 minute gap, and they are pushing lower again, showing. That does not mean they're gonna go lower. That just means they're rejecting off of 240. Cycle creating at the floor, the new floor. Oh shit, QQQ. Looking crazy. What a beautiful fucking pullback dump. It turned from a pullback into a dump. But it was, I literally sat at the top. It's almost impossible that it doesn't pull back, right? That's literally what I said. I said it's fucking, it's imminent. The pullback is imminent, I said. I said no dump. I said pullback is imminent. When did I say that? I don't know. Man. At 222, I said this is another setup, midpoint to the floor in the WhatsApp group. 222 was right here. 222, I said, hey, this is another setup on the WhatsApp group. I said in 222, midpoint to the floor. This is another setup. 6876 SPX is possible. 6876. We went way past that bitch and dropped crazy. That was 11,222, and then it went from 6,880 to 6,876, which is exactly the price almost, and then it just dumped off it. Purple box being played. Until the low of the 235 breaks, you say, all bears are, all shorts are stuck at the LOD. But there is no confirmation long, so it doesn't really mean, you know, oh, now the bulls are coming. That just means there's a floor being created. That just means something is happening at the purple box. People that don't have setups, people that don't care about setups because they are fake Ferrugi traders that don't really do shit except paper trading, they won't really have setups, and they won't have purple boxes, and they won't have real deductible things drawn. Don't blame them. Be glad. Why? It's going to be like that. It was like that, and it will be like that for the rest of human history. So, God bless that fact, and everything will be okay. God bless that fact, and everything will be okay. I think that picture we sent at, I think, what time was it? I don't even know. Things change so much, though. At 120, I sent a picture of them rejecting this shit right here. And then they broke that out crazy, and they bullshit that. So, like that. Look at how crazy market changes and market cycle is insane. Going to the 0.50 of the entire day and then doing shit, man. That's how they get the majority, because majority are saying, oh, it's bullish on candle, 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 and then the majority is saying, oh, it's bullish because it was bullish on this yesterday, and the majority is saying, oh, it's bearish because the candles are red, and the majority is saying, oh, it's bearish now because it was the same exact bearish yesterday, so it should be the same thing, and the majority is not caring about the cycle, and the majority is not caring about the setups, and the majority is not caring about smart money deducting, risk analyzing, and higher things than just money, or losing. And that the only way to find that, or the only way to discover that, is through struggle. To struggle and to experience it and to find it yourself and to want to be able to find it yourself. That's it. Our view count hella low today, right? 90 people. Right? Imagine there's like we normally have like 60 or 70 more people, bro. Right? Just imagine the things they went through, and imagine the hundreds of people over there in the other channel went through too. And I know the person over there, I'll go view bots or whatever, so the view is always at the same number. But honestly, it's really sad to think about how the huge number of people that are always wanting to try, but they don't really like. I'm not saying they don't put enough time in it, but like it's just like it takes a lot of fucking time, and like like we're all busy with life and we have so much shit to do, right? So like it's just like I'm just you get what I'm saying here. Like it's so crazy, the market number one, and I'm just glad that New Year's Day, end of the trading year 2025, things are as best as it could be for yeah, just whatever, deducting world, man, whatever, what's going on. It's wow. Look at Tesla, new LOD. Wow, so they did go lower, but they just made it so goddamn hard, wedging lower, and then they barely went lower, but they did go lower. So, wow. IWM new LOD Tesla. So IWM Tesla aligning in the new 3/3 at the new floor. Right. This shit's very rare, by the way. What just happened today, right? How Ochoa just said, "Oh, they fucking killed me," and then, "Oh, I was gonna take up blah blah blah," and then, "Oh, I decided to go back in," and then you got lucky or whatever the fuck. Literally, this shit is maybe a once in a fucking wild thing because of setup being so goddamn rare. That's why I was hoping too at the top. It looked crazy bullish, so yeah. But I would have done the same shit too. I ain't gonna lie. I don't want to fucking miss out on some crazy ass shit like that, right? But I mean, I left hella early too. I ain't gonna front. But I mean, the risk was crazy for me. I was in a fuck ton of SPY puts that were getting drained and drained and drained. Like I literally added 30. I had 30 here, and I added 30 here, and they were getting drained and drained and drained and drained and drained. And I added 2 SPX puts here, and they were getting drained and drained at the 205, and it looked absolutely insane. But I mean, I could hold on for a little bit until setup and something says you're fucked, right? But I mean, that was literally the time. 205 to 220 to 245 is like about the time where it's like setup doesn't happen, you're fucked. So that's why I was hoping and praying. But man, did they come through crazy. Setup playing crazy. SPX 1 minute gap. This is a deductor's world, but like it's not even like this only this year and it's only this day. It's been like this for 100 years. 300 years probably, since the tulip market days. So man, that's what I truly believe, honestly. I'm just kind of glad, right? Today good day. Shit, let's see, is today a good day, bad day? What happened today? Pull, last pull of the day. How was today? Oh my god. Insane. Insane. The one giant inverted cup, but you realized right before it was a cup. Like that shit looked like a cup, and then now it actually is an inverted cup. Yeah, what the okay, they form a cup and they form an uninverted cup on. Like, it's fucking wild. So wild. Wow. We did a poll. 6 people said they had a good day. 1 person had a neutral day, and 1 person had a bad day. Damn. So crazy today. They fucking faked an LOD broke 1, 2, 3 times, and then bounced it, and then LOD bear trapped everybody to near the midpoint. Cooked off all the puts and then cooked off all the calls too, making people hope too on the HOD, because people were saying gap fill above, right? The realists remember when this shit was happening, people were saying gap fill above, and I was like, it's so far. 690 is impossible, right? And they burn in everything. Shaking out the majority of the puts, shaking out all the calls. Majority of the calls too. I mean, new money calls doing fine. 1/3, 2/3, 3/3. It's just, I'm talking about the majority, and the majority is 1 day, 2 day, 3 day plus 1 weekly. And look at the look who they're trapping on IWM. You see this fucking green box I drew, and then they reverted up and made it look like they were gonna bear trap everybody. And look who they're trapping right now in IWM. That's called setup. That is absolutely called setup. IWM is bull trapping, not bear trapping, but bull trapping off of 2 p.m. 2 p.m. pop. And then 205 drop. So. Ay. Time is 2:50. Man, market crazy like this, guys. And you telling me candle traders are okay? What? Candle traders are okay in these environments? Fucking 1 out of 10 days. Deductors are the ones that are doing good and fine. 8 out of 10. Or 9 out of fucking 13 days or something, man. This world, no joke, unrelentless for fake Ferrucci candle traders. That bullshit about bullshit. Bullish, 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 bearish, bearish, fucked. Amateur. True amateur. True scam. True bullshit. But life is good because it's the new year. And wow, look at the purple box on IWM. I'm going to show you something on IWM. Look at the purple box on IWM. What is it doing? It's playing with the huge, right? This is bearish. Why? Look at the higher time frame right now. IWM broke, right? IWM broke the bottom of the 0.5 full retracement. This is bearish than not. Okay. This is really bearish. This is a trap. Setup has already played, so I'm just sending the setup so people can see the picture. Full retracement breakdown. IWM. They want to go lower. 250. And the purple box being tested so perfectly right now. Wow. Tesla looking together with IWM. Wow. SPX. Did not break the floor. Just near the floor. With the SPX 1 minute gap. You know, that's why, this is why my live stream title today is called the SPX 1 minute gap below fills, guys. Hopefully you guys all remember and you guys all had a beautiful day today and you loved what happened today, because the bounce at 2 p.m. completely made people forget about the SPX 1 minute gap below. And
retailers are closing the book on 2025, and this was a rough. Retailers are closing the book on 2025. And this was a rough one. Courtney Reagan joins us with a review of how the stores performed.
Yeah, it was quite a year, actually. I mean, the retail theme for 2025, when I was trying to think about what it was for me, was sort of surprising, and for two reasons. I would say the resilience of the consumer and retailers' ability to mitigate most of the tariff cost to mute the impact for consumers. So the XRT was up 7.5%. That's half of the performance of the S&P 500. So not great. But if you would have told me that that would be the case in April, I would not have believed you. You can see the very dramatic drop here in all of these charts, all of the indices that track retail. from that April 2nd tariff announcement. Now, consumers were value seeking, to be fair. And I don't just mean value with price, though that's part of it, but also value in item attributes.
Today was
so
the biggest example of candle trading versus fucking setup trading.
Players, they soared. Five Below up 80%. Dollar General gained 75%. Dollar Tree, 64%. But specialty mall brands, they also did well. American Eagle launched campaigns with Sydney Sweeney and Travis Kelce. Shares grew 59% in 2025.
That was so
Victoria's
fire.
Secret stealthily gained 200% in just the last 6 months, 32% for the year.
I'm
UBS
not playing
does have
this.
a
This is
buy
the 3/3.
for both AEO and Victoria's Secret for 2026. Now, as Macy's gets smaller, its shares gained 30% for the year. Kohl's new CEO led the department store to 45% share growth. Tapestry's deal to buy Capri, that was blocked in late 2024, and thank goodness, I guess, for Tapestry, because shares gained 96% this year. But Lululemon shed 45% under internal missteps. Target, it missed out on that discount rally too because of a lot of internal mistakes. Both of those names are getting new leaders in the new year, at least Target for sure. Lululemon is looking. PVH, Deckers, RH among the biggest losers of the sector because not everybody can be a winner. And if you look to 2026, Jefferies says it is more constructive but still selective when it comes to retail stocks. Nike is its top pick, but it does suggest a short for on holding, while UBS puts on holding on its buy list, along with Ralph Lauren, TJX, Signet, and a number of others.
Is there one consistent theme, though? Like, if you
stop
doing promotions, if you start doing promotions, if you have
I literally told you the range is only $1.50. They could move this shit down crazy, right? And they fucking absolutely did so fucking fast.
The best thing I could come up with, and it sounds really generic, and I was
using the
trying
wind
to explain
direction
it,
of the
is
trend
sort of
direction
idea
of the intraday
value.
market
So
perfectly.
Dick's executive chairman Ed Stack said to me,
people out on
just
candles
because
at
a
2
baseball
p.m.
bat
perfectly.
is priced right doesn't
With
mean a
no
consumer
volume,
will buy it. But if
MACD
that
just saying,
baseball bat
bullish,
helps that kid
forever,
score
then they
more
got
home
cooked
runs or
probably.
improves its stats in some way, the consumer sees value in that,
no matter what it
and
costs.
then we will sell it, no matter what it costs. And so
Damn.
that's where it kind of
This
starts
is
to be
literally
tricky.
why,
It's like,
right? I
where
hope you
are
guys
consumers-
realize, hope you guys understand this is why I tell channel hoppers to get out of here and just to stay away, because all they do is just come here and fucking troll me when things are good, and when things are bad, they don't want to talk about it, and they just channel hop. Right? I think we had this at 12 p.m. We were doing this shit at 12 p.m. But like, dude, this is an everyday thing. Like, do you think I want to sit here and deal with that every fucking day? No, I really don't. I'd rather do my own thing and keep myself busy and do good myself and you know, keep going on with my life. But there's like, I don't even know, bro. The thing is though, I say this shit and they can't even hear it because they just come and go, right? But it's literally like people from that channel specifically.
Value. Yes, price is
that
part of it.
can't
but those
find
item
confidence in
attributes
themselves.
are another part. You can't just
Because what they
put up a
feed over
private
there
label
is
that's
fucking
less
pure
expensive, but if
bullshit.
it's not great in the consumer's
There's no
viewpoint, they're not going to
confidence
pay for it just because it's priced lower.
No
Courtney,
belief.
thank you very much. It's a big.
How do you have belief in
industry.
candles? Like, do you guys believers in candles? No. I don't believe in candles. No. I believe in the fact that smart money out there doing what they're gonna do.
Let's begin this hour with the technical side of the markets. In a year that has been dominated by big tech, which part of the AI trade can keep working?
Expect a jump,
and
slump,
which
and a
part
pump
might
for
be ready
S&P
to
500 in
break down?
2026,
Your
says
next
Craig
guest
Johnson.
is a market veteran technician whose insights help traders separate noise from meaningful signals. He's also just a great guy. And he joins us now on New Year's Eve, live from Minnesota. Craig Johnson of Piper Jaffray. Craig, we're really happy to have you on the program. We know, listen, it's an interesting day. Thanks for joining us. You've made so many great calls in your time. Great to have you on the program. What is the technical setup for the macro market as you see it next year?
Hey, Brian, it feels like we're making the last call on the last day of the year here today. And it's kind of a fun way to end the year. What our viewpoint is for 2026 coming up is
end the year.
we're not looking for a lot of upside, Brian.
What a
as
fun
we
way to
look
end the
at
day.
2026,
End the year,
we only
man.
see
Amazing.
about 5% upside.
What a
We're
fun,
looking for
fun way to end the
7150
year.
on the S&P 500.
God
And
bless
as we
way to
think
end the
about
year,
the
man.
progression of what 2026 is going to look like, it's probably going to be
I love
strong.
it.
We're probably going to have a weak second and maybe third quarter, and then sort of finish on a high note. And from my perspective, I'd call that a jump, a slump, and probably a pump after you get through the midterm elections. And from my perspective, it's going to be an okay year, but I'm only looking for about 5% upside.
I like this guy.
And it's kind of a fun way to end the year. What our viewpoint is for 2026 coming up is we're not looking for a lot of upside, Brian. As we look at 2026, we only see about 5% upside. We're looking for 7150 on the S&P 500. And as we think about the progression of what 2026 is going to look like, it's probably going to be strong. We're probably going to have a weak second and maybe third quarter, and then sort of finish on a high note. And from my perspective, I'd call that a jump, a slump, and probably a pump after you get through the midterm election.
Tyler said, bro gets so happy when a trade goes way. I love it. Yeah, I mean, bro, when a trade doesn't go my way, at least I'm not sitting there crying my ass out. You know, at least I do shit on my setup right. No offense to nobody, but please, let's not talk about me, right? Let's keep the chats focused on the economy. Thank you.
And from my perspective, it's going to be an okay year.
What I just said is a goddamn fact, right? So people can say whatever they want to say about me, but I mean, at least I know who I am, and I do what I want to do on my own emotions, and I know how to control myself, good or bad.
But I'm only looking for about 5% upside for next year, Brian.
Okay, let's get to a jump.
That's what a lot of channel hoppers have said, though.
And a slump. It's one of the reasons we love you, Craig, among many, because you're just going to lay it out there. It's something to remember.
That's reality, though, bro. People like me.
So what would be then the pump
like mentors,
if you're only seeing a 5% gain
they know who they are.
for all of next year?
Okay.
It sounds like the first half, kind of to your point, may be a dump.
Oh, that's good, Brian. But you know what I think is ultimately going to be for the first part of the year is a continuation of this AI trade we've been talking about, but a little bit of a shift in focus.
At least I don't go bullish. Whoever's going to be this is going to be that. Is going to be millionaire. Let me sell the bullshit idea.
We're going to need more optical companies, Brian, to actually connect these data centers together, make AI, all these agents and everything else that people are going to use to really have faster connectivity to make it work. So I've been sort of turning my focus to a lot of these optical companies like Ciena, companies like Coherent, and companies like Corning. I look at a company like Corning in here, Brian, and it's like if we go back, we're probably going to go retest the 2,000 highs on that stock, and if we do, we've got a nice 20+% upside. And if we look at Ciena, right, I could see another 20-30% upside, even though it was up a lot here in 2025.
Wow, and because these are not beaten up stocks that have had rough years and you see a turn. To your point, these stocks have been noticed by investors. Corning has done well. Their glass, their fiber optics that go into all those cables you talk about. Ciena, kind of the same thing. Coherent, a little bit on that side. These are names that have already been hot. It sounds like you just like the charts, I guess, on these names.
Well, we like the charts, but there's also that connection theme that's going to play out with this as we think about the data centers, we think about AI to really make that next level of AI work. And that's where the first part of what we're talking about, where you get this sort of kind of quick jump up in the market is what we're ultimately thinking here in the first quarter.
You're really going to 614 right now, right here.
And then the slump side of this comes into play as people start focusing on politics in Washington.
That is so much
and
power.
Midterm election and those kind of items. Going to be a lot of noise in 2026. And you probably don't see that noise quiet down until that midterm election is done. And that's where at the end of the year, Brian, clearing some of that noise, things got reset. You get that sort of pump at the end of the year is what you ultimately get.
2025 year-end dump. This is a market year-end dump, basically. Now it's turning in bloody as shit. Turning bloody. They want to fucking leave before the New Year's. Crazy. First of all, this could be the finale too, but like they just burnt every single fucking call expiring next 3 weeks on this shit. So on today's move alone, combined with yesterday and the day before it, so wow. New Year's. Right, market update video said we were at the tippity top of the wedge on Friday, and look at the bearish push we are having. Today is the biggest bearish push in the last 3 days. just at the last minutes of the market. Last 1 hour or 2 hours before market closes before 2025. That is something. Oh my God. What a drop. All SPY puts are up like hundreds of percents now. What the fuck? Or 200% at max. Oh. Yo, go take a breather, man. Everybody, go take a breather.
You can take a look at all the strategists on Wall Street and around the globe. But right here from the New York Stock Exchange, I'm serious. Jay Woods, Chief Global Strategist at Freedom Capital Markets. Now, we've known him around town as the regular nice guy. But in the meantime, Jay Woods, a year ago, had the target at 6,900. On Friday, intraday, the S&P high was 6,945. We are right around 6,900. So congratulations, Jay Woods, for getting this so right.
Well, thanks. And we go by Price is Right rules, so I'm over, and then that will nullify the call. But yeah, we expected a good year. 3 years of double-digit returns was something that we thought could happen. Now the question is, what is next? Let's not come here and spike the football. It was great. Sometimes you get a little lucky, and after Liberation Day, I was
so
questioning
sad,
my.
My friend just sent me another picture. Ay, ay, ay.
Thesis, but we also learned that we backed down from some of those tariffs, and the economy was going to grow, and that's what we thought would happen, and would be a strong second half of the year. And now we're kind of like stumbling into the next year as to what's going to happen. And as we enter January, there are a few things that have me concerned, and that's why my forecast for next year is 3 to 5% higher, around 7,200. So an up year, bull run continues, but not at the stampede that we have seen this bull take off. We've only had more than 3 years.
You know that person, Desi Vanilla, that's usually on my channel? Someone sent me a screenshot of Desi Vanilla saying no Santa rally in the other channel, and then it said bears get their due for 1 day or something. You guys have to understand, right? The market is not really a bear versus a bull versus bears get their win 1 day, oh haha, oh bull get their win 1 day, haha. Like, that's what they want you to feed. So when I say the things I say, I really mean the things I mean. And the people that are, getting friendly fired upon, and people that are getting the dirty water slashed upon because, dirty water needs to be thrown at, some direction for something. It's just, I'm sorry. But at the end of the day, man. Hope you guys all have a great New Year's and a great, wonderful outlook on life. And let's have a great life, man. But all I will say is, ain't nothing gonna change in life unless you change yourself in life. And I say that in a way that I mean talking to myself, and I say that in a motivational way, but I also say that in a friendly way. Like I mean that as a friend, because I care about everyone here, and I genuinely believe in the things I say. And yeah, but thank you all. Hope you all
years of
understand.
double-digit returns
And
once,
you
and
don't
that was
find too
.com.
much offense
I
in the
don't
things
think
I
we're going to
say.
get a fourth year of
But
double-digit returns next.
what is true is that none of the things I have said about channel hoppers and about perma bulls and perma bears have been lies, and nothing that I say or do will change what is existing and what they are doing to themselves, not me. And everything will be okay because life is just a journey and adventure to find and journey upon, no matter what age and who or how or she or he or you are.
Yeah, I mean, we're going back
Man,
to
life is good.
You're going back to the 90s when
Life
you're
is
talking
good.
about those double-digit
All the time.
returns consecutive years. You know, when you say 3 to 5% for next year, people
Not just when things are good or bad. Life is good
You know, the Nasdaq's at
all
21%.
the time. God is good
3 to 5%.
all
Does
the
that
time.
mean down 5%
Believe
or
that.
down 10%? And then
I don't believe in no scam
I
fruity
expect
shit.
a lot of volatility. It's an
Believe that.
election.
God is
It's
good
an
all
election
the
year.
time.
Well, we get a 10%
Not just when
correction
you want
on
it.
average every 18 months. So yes, you go 18 months from April 2nd when we bottomed, then yeah, we're due for another 10%
Going from
correction.
6,000,
Not the end of the world. But when we live
900
through
to
it, it's hell. And we have 3-5%
6,860.
corrections on
That is
average
40
per
points
year.
on
So
SPX.
I anticipate a lot of volatility. And when you look at some of the headwinds we're coming into right out of the gates, Supreme Court decision on tariffs.
Time is
New
3:10
Fed
and their water
president,
slide
how
dumping
will the new
still.
Fed chair
Let's
get
see how
along with
far
the rest
she
of the
goes.
chiefs? We expect someone that wants to cut rates, but if you look at the dot plot, we're only positioned for one cut over the coming year, and then we have 4 new Fed voters. 2 of those are very hawkish, so it's going to be interesting to see if the Fed will continue to be a tailwind and we cut rates, or we'll have that headwind.
Wow.
And then turnover in Washington is anticipated come
crap.
November. Long way to go before
believe
we
that?
jump into those waters. But these are things.
Can
that
you
the
believe
market
that, man?
doesn't like
This is what I get for not
talk
playing in the
about
3/3, but
5%,
this is the
10%
3/3.
pullbacks. That 18
That
months,
is
that would be from the
unbelievable.
Liberation Day. That would put us into 2026.
Yeah.
You talked about 5% sell-offs a year as an average, so you're going to
Yeah,
have
bro,
to
trust me when I say this shit. Like, sure, my age is young, but I've done shit more in life than people that are 3 times my age. What do I mean by that? I've driven a CDLA truck across the country, right, for Amazon after I graduated from college with a computer science degree. So trust me when I say I know who I am. Don't worry about me. Worry about those that don't know who they are, and worry about those that get naively scammed by fake ass people online and those that fucking fake bullshit because that's what their culture does. Know that. But all I can say is God will be with you no matter where you are, what stage you are, who you are, and whatever your religion is. But all I know is God is watching, God is there, and all I can say is that's the only man up there that I fear. So, hope you find some love and confidence and support in yourself. But all I can say is a lot of people don't have that, is why they find strength and bullshit, and a lot of bullshit and scam, fruity, whatever the fuck. But yeah.
like that or weeks like that. Are those screaming buy opportunities for you in 2026?
Trust.
I think there are pockets of screaming buy opportunities right now. There are stocks breaking out that no one is talking about. No one's talking about.
I'm not even dirty. Trust.
To 52-week highs.
I've done shit
of
that fucking 50-year-old people do. Trust.
Why? Because
I've done it for 2 years. Trust.
Energy, oil is $58
know what I'm saying.
a barrel, yet
I've been around
ExxonMobil
places.
is starting to make new highs. Something is
Just
going
gotta
on,
be
and then we see these
educated enough to see what the fuck is what, and
gold
know
making
and
new
go
highs,
around places to
copper,
know how things
silver
are
making
and
new
not get.
highs. Copper and silver scare me because those will come back and hurt some of these tech stocks. So I don't think technology is going to lead. And when you want to see big returns, you need to see it in the heavy hitters, those Mag 7 names. Those are pulling back. They're consolidating. I don't think the trade is over by any stretch. But it's not the leadership we're going to need to take us much higher than, say, 5% over the coming 12 months.
Been a lot of excitement around Tesla because people are looking at it not just as the EV maker, but Optimus and robo-taxis, expansion of the Cybercab, a lot of things, and SpaceX, and just all things Elon Musk, right?
Yeah.
It's 2026 Elon Musk's year. Tell me where you think Tesla could be headed. I mean, right now it's at 453. The high was 498.
Yeah, no, technically is how I look at Tesla. Tesla is a cult stock. It's about Elon Musk. Well, Elon Musk had a crazy 2025. He's out of Washington. He's put that behind him. He seems to come out on
This is the last time now.
It is not
You're
about
gonna
EV
be
sales. If we're going to focus on EV
temporarily
sales,
blocked for one day because you are one of the people that is channel hopped, and you are here today, but you cannot keep the comments to economy related and you keep wanting
every
to
single time he's had a pay package with incentives.
respond to
guess
me and
what?
wanting me to
They
talk
will
about
start
some
to kick in
bullshit.
starting
So
next year. So I expect
that,
Tesla to do well under his leadership. And then you look at it technically as a CMT, a technician. This stock is breaking out to new highs. It's pulled back a little bit. If it breaks 420, then this trade that I think will lead us into next year, I pull back, I go on the sidelines, but I think it's poised to run not just the 500, but well into the 600s, a good 20% gain. It's just below the S&P 500 as we stumble across the finish line today. So I think Tesla is poised to have a great year, and it's not going to be about EVs and car sales. It's about what the future holds and what that pay package and those deliverables on autonomous driving and robotics lead for Tesla.
figure it out next week.
Tell me about FedEx. Why FedEx?
FedEx, well, you look at the transports. The transports are breaking out, have already broken out. We've seen it in some of the trucking companies. Well, what's on its heels? Federal Express. That's
No, I was talking to
nowhere
Timmy.
for 3 years.
I like Timmy, but I just I need to take a break because I can't keep asking the guy to, you know, I can't.
If this breaks above 300,
Everything's good
it's
though.
got a runway
Let's just keep
to
it
go at
respectful,
least
right?
20%
I'm not no
higher.
one's kid.
It's made a tremendous run. It's
You
pulling
are
back
an
from
adult.
that run
I am my
in
own
its
adult.
July
We're all
lows.
good.
It's up, what, 5%
If you're looking for
the
people
year?
that are
I think
40-year-old,
that's one to
50-year-old
watch
on
for
YouTube trying to
2026,
do whatever
and
they
then
want to
you
do,
ride the
then I guess
coattails.
I'm not the
UPS
one. But
is
I
a
mean,
beaten
trust
down
me,
stock. It's broken a
we're all
long-term
good. Let's just
downtrend,
keep it
has a lot to
respectful.
reverse. So these two stocks can be
All
leaders
things come.
in the
We're all good.
transport section.
If you want to come back on Monday, you can come back on Monday. All things are good. I just don't want to talk about the same thing over and over again all day today.
I'm not sure people are going to love 3 to 5% gain, but they'll take it. It's
I'm
better
getting
than
off
down,
soon
Jay
too,
Woods.
guys. I'm
Chief
hungry as
Global
shit. I gotta go
Strategist
eat.
at Freedom
I gotta go to
Capital
work.
Markets.
So, thank you all for being here. Hope to see you on Monday. You too, Timmy. And right, market is literally closing in 45 minutes, guys. You know what I mean? Major setup is already basically played out. Let's be real here. I guess just little cycles are happening, but yeah, I don't know. They're going extremely lower than where I expected them to go. So I don't really want to say this shit is bearish. I just want to watch at this point. But I mean, yeah. No hate, no love, nothing like that. Let's just all move on. Let's just all, yeah.
Mackenzie Sagalos joining us now.
1.5 million per employee is crazy. I want to work at OpenAI.
Really are. When you compare
Friday,
it
yeah.
to other companies
Friday,
out here
Friday,
in
my
Silicon
bad,
Valley,
Friday.
it really just puts it into perspective. So let's start with Google, right? Before it filed to go public in 2004, it disclosed stock-based comp and adjusted for inflation. It was roughly 1/7 of what OpenAI is paying now. And if you zoom it out to a
The
broader
market kind of
set, the gap
pissed
gets
people
even
off,
wider.
though. Where
OpenAI's
market has
per employee stock comp is
frustrated people away.
times the average.
Because that's the
18
feeling
other
I'm getting.
large tech companies in the year before
What
they
they're
went
doing.
public, according to a Wall Street Journal analysis. And those same investor decks, Brian, they show
market
that
is
OpenAI
pissing
expects
people away.
stock-based comp to rise by
People
roughly
are not
$3
liking what's going on.
billion a year through 2030.
All right, so because as I referenced on the
It's
intro,
doing
you
things
know,
so volatile, honestly. It's doing
averages
things a lot.
average
So
is the most like misused word out there because if you got one guy or one woman making 100 million, it can skew the average. Do we know? And maybe we don't. Is everybody just making a bundle, or are there a couple of just superstars just printing gigantic sums of money?
You can certainly assume that there are a handful of MVPs that are garnering 9-figure salaries that are helping to skew that number higher. But what I will say is that OpenAI has been in the midst of this code red period where it's been all hands on deck looking to shore up their models because Google Gemini has made such strides. That's long hours during the holiday. It is a finite period that this code red that's supposed to end in January. And so people across the board, not just the people who are building the LLMs, but some of your mid-tier talent want to be compensated. And it's such a competitive market that OpenAI realizes it needs to pay up. And another data point for you here, OpenAI's equity spend is projected to hit 46% of revenue this year. For context, Palantir was at 33% before its IPO.
Little history. I was actually
Hey,
on
how
the
we
train.
have one
There is a train,
not
believe it or
trading
not,
day, and then we
from
come back on
Mountain
Friday,
View,
and this
California
weekend,
to
like,
San Francisco, the day Google, I would say IPO'd, but it was a Dutch auction. Anyway, a lot of the people on the
It's New
train
Year's
were
trading on
employees that
Friday.
got really rich. There were people literally weeping and throwing champagne. I've got to imagine that these employees, when and if they go public at OpenAI, they're not only going to be hugely rich themselves, but the entire region and the city of San Francisco, where you currently sit, that is a real shot behind you, Mackenzie, that they're going to have a huge tax windfall. The mayor has got to be happy about that.
Yeah, not a green screen. Bay Bridge behind me. Yeah, I mean, when you look at these numbers, and we were talking about who stands to gain the most if OpenAI goes public in 2026. We know that at least internally they are working through the mechanics of how to do that. We were talking about that in the context of SoftBank yesterday, their 10% stake. Microsoft has a 27% stake. They've already 10x their investment to $135 billion. But certainly a lot of very newly minted billionaires out here in San Francisco. And yes, they will have to pay taxes.
These are not the only companies that outperform some big cap tech, but they did catch our collective eye. But that was this year. Let's turn now to next year and see what might be on the radar. And welcome back in Citigroup Director of Research for U.S. Equity Strategy, Drew Pettit. Drew, welcome. Happy New Year. I was just a tiny slice of what was a third year of another good run. Do you see a record rally continuing into its fourth year?
We do. And Brian, it's all fundamentals. Like, look, I heard the technical setup at the beginning of the show. I hear people talk about sentiment, but when you get down to the nitty gritty, earnings are still moving higher. We're above consensus. We're probably at the high end of the street. As long as the fundamental story is still intact, we're happy to stay invested in this market and buy some risk and hold some risk into 2026.
I want to be optimistic. It's New Year's Eve. Everybody wants to feel good when that ball behind me here at the NASDAQ drops in a few hours. But I wouldn't be doing my job if I didn't ask what would be the risk to the fundamental strength story.
Look, it's the multiple, and
There's
I hate to
no
come back
stopping.
to something that sounds very
Can you
basic
believe
and
it?
down
There's
the
no
middle,
stopping
but we're
bears
paying
right
a
now.
lot for
Oh
a really
my
good
God,
fundamental story.
that's so
When
bearish.
we really break this down, we think the
What is
market
this?
is discounting about 10%.
Can someone do the
earnings
math
growth
right
for
now?
the next 5 years.
6897
That is extremely good.
minus
What we have in our
6858
projections implicitly is about 12%
6897
growth.
minus
The problem is if you
6858.
get good growth, not great
That's like
growth,
40 points.
that's a reason for people to take
41.
profits. So what to us, everyone says
That's something.
valuation, but to us, it's really growth living up to those valuation expectations.
There's a SPX 1 minute gap.
Inside the
They're just
market,
gone.
you know, there's 11 different sectors. One of them is
So
called
bearish.
industrials. The industrial sector, currently
They're
the
actually
third
just
best
fucking
performing
full on
S&P
dumping into
500
market
sector
close.
this year.
Oh my
Now,
God.
normally I wouldn't
Actually,
reference a third
I'm
best
feeling
of
so
anything,
much
Drew,
FOMO since
but
250
that was
and
the
I didn't go.
first
But
time
wow.
it is finished
That's a
in
whole
the
ass
top
another double
3
move.
in
Like, what the
12
fuck?
12 years.
I left so
These
early.
industrial
I left
companies,
in the
we've talked
1/4.
a lot about the potential
I
shift
left in the
in
fucking
the market.
1/3
What's
of the
your
fucking half.
internal thesis
Oh my
for
God.
sectors and stocks next year?
Set up so crazy.
Yeah, it's funny.
like
there's
three
a
times
couple
more than I
stories
expected.
here.
2 times more than I
One,
expected.
it's
I expected this
inflecting
purple
growth.
box.
So we've heard people talk about
LOD
earnings are
just straight
broadening,
up
growth is
dump.
broadening, market performance is going to broaden.
There's no
But to
stopping
us,
them
there's
now.
companies that have had negative growth for 3+ years coming out of that post-pandemic high that we're finally
People
going
are
to see some
fucking scared
inflections.
now. The
That
VIX
plays
must
really
be
well
crazy
to some
spiked.
cyclicals. Industrials falls in there. We like financials a little bit better. Another thesis, growth.
All right,
that
the
game's
VIX was
not
dead
over. Look,
2
there's
days
still
ago.
a lot of
All right,
AI
market
stocks
update
that when you
video
discount
stance. They
the
took
earnings
advantage of the
are
VIX.
actually
And the
reasonably
VIX is probably
priced.
crazy spike.
So to us, there's still AI at a reasonable price out there. And then the last piece, look, there's a lot
The
of
thing was at
companies that
fucking 11.
have really
Now it's
changed
at
and
15.
improved
So.
operations. There's tons of these big cap names that survived a pandemic. They've survived
The VIX was
tariffs.
literally
They've
at
survived
50,
a lot
11
of
on the
business
market
challenges.
update video,
There's
and now
a
it's at
ton
15.
that are
It
improving
has to be
ROE
something
from an
crazy.
operational perspective. Those three stories,
maybe it was
those
at
three
13.
stock
I don't know.
stories are the biggest ones we think that'll really define
Somewhere
the internals of the
13
market
or
in
11.
2026.
Any sectors out there that you don't like, that you're just
Market
sort of
update video
negative
says
or
smart
at
money
the
hedge
minimum
fund could
neutral
be
on,
taking
Drew?
smart money could be taking
It's
advantage of
consumer,
the
to be honest with
volatility
you.
that's crushed
Again,
the
another
hedge into the
segment I
market
heard,
right now,
like
and that's
right
what
before,
they did at the
you know,
all-time
power
highs.
lunch. There's winners and losers in consumer. When you're kind of in that world, it's hard
IWM,
to have a really
Tesla,
good fundamental
all
view.
pulled back.
You know, we're ahead of earnings on pretty
SPY
much
is
every
just the
sector
latest
except
one.
consumer discretionary and consumer staples.
SPY
I
is
don't
just the
think there's a
last
really
one.
great catalyst there for outperformance of those.
If you
two
look at the
sectors.
chart, right?
Yeah, and then
IWM
you
has
got
been
an
pulling back,
international
and
view.
Tesla
I
has
know
been
you're
pulling
the
back for
US guy.
7
We'll talk
days in a row
international in the
now.
next segment,
7
actually.
days in a row, right? SPY only started this literally on Friday, December 26th, Monday, December 29th, 1, 2, right? This is third Tuesday, December 30th, third day, fourth day. Today is Wednesday, December 30th, right? 1, 2, 3, 4 days. So Tesla and IWM has been going for 3 more days. That's what I said yesterday on the 6th day. Here we are. Trend direction is so bearish right now. Trend direction is downward. Trend direction. What downward trend am I talking about? SPX is a downward trend right here. We broke that. And now they're really about to go gap fill into next week, I guess. They're crazy. 6, 8, 3, 7. I don't know. I'm not thinking about it right now, but I mean, market closing in 20 minutes. They are so terrified.
Say, Drew, but listen, the world has done better than us this year. Is next year we're going to go back to sort of eagle on the shoulder, apple pie USA, or what?
S&P 6872. 6872 was right here at 2:30, and they made this video.
It's idiosyncratic. I really think, like AI, for example,
as long as market fundamentals stay intact, 2026
I would say it's at least
should be a good
50%
year.
of U.S. market cap, at least 50% anyways. But when you think internationally, it's not as big of a piece of that pie. But the AI at a reasonable price names are much easier to find internationally.
Lower and lower
and
digging
those
into
off
the floor.
of the tariff lows have actually outperformed the U.S.
I am not
AI
in.
at a reasonable
I'm just
price
watching
names.
here.
So there's some opportunities there. I think you want to kind of piece these themes together, not just domestically, but globally as well.
BI into Friday. I'm gonna chill with my profit into Friday, and I'll watch what the hell happens. I am not fucking overnight trading. I am not swinging anything. I'm just watching now. I am okay with what they want to do.
With double-digit gains. And all the major U.S. equity indexes, they're set to close out 2025 with double-digit gains. Still, your next guest says he is looking to add some global assets to his portfolio
What
in
an
2026.
insane trap at the end.
Joining us now, Todd Gordon, founder of Inside Edge Capital. And a man I know, Todd, you love America. You love this country, but maybe there's better investing opportunities around the world, particularly south of here, really far south of here.
3 continuously going, candle switching
quite
in 3
south,
minutes.
much warmer, Brian. Happy New Year's to you. Yeah, love this country. I am a patriot, but we must, as a capitalist, follow the capital. So, yeah, there is a rotation happening overseas, particularly in South America. So, the main drivers we're seeing valuation and rotation away from, again, expensive tech growth stocks. The commodity move is very big. They're major exporters. They're not as impacted also by tariffs, so there's a little bit of insulation there. I think the move on Venezuela perhaps is the view that we're stabilizing the area a little bit. And then the political change in Argentina with the new president, Javier Milei, I hope I'm pronouncing that right. He's a populist, right-wing libertarian, gave that market a lot of boost. So there's factors that are driving the rotation there. There's some FX at work, as I mentioned, the commodities. So, yeah, I think, is it a full-on rotation out? No, I think we're still in a secular-driven AI bull market, but let's increase the exposures we already have overseas, and particularly in the South in the portfolios.
Yeah, Mercado Libre MELI, technically headquartered in Montevideo, Uruguay. I hope I pronounced that right. But a lot of its business, of course,
They're
in the
not
more,
stopping.
populous
Wow.
nations, the Brazils, the Argentinos
There's a gap up there
of the world. Again,
on SPX.
This is an incredible story. Some people call
we
it
may
the
come
Amazon
back up into next
Latin
week.
America, but again,
I don't know if
think
Friday
I'm
and then
guessing,
feel
Todd,
that, right? We
you
may
have
leave
to
that,
watch
right?
currency moves,
You know what's
right?
going
'Cause
on
the
now?
currency
We're
moves
playing
that
in
you
a
talked
gap
about,
down here, and we're
those
playing
could
in a
change
gap.
everything,
So
I
we're going to
think.
mark that, okay? This SPX 1 minute gap they just created today.
It's interesting. There's a
this
lot of nuanced
SPX
stories
1 minute
going
gap
on
down here
within Latin America, but particularly, let's just focus on the dollar. The dollar index, which is a basket against 6 or 7 international currencies, has been in a decline. And if we break a little bit lower in the new year, that's a break of a trend line that goes back to 2011. So that could be additional dollar weakness, despite the Fed, done with the rates move. That would boost international holdings. Argentine currency is getting destroyed. I know Colombia is up, and I know Peru is actually off significantly. But yeah, I mean, MELI is like you said, it's Amazon, it's PayPal rolled into one. They have a big first mover advantage in the area. It's a digital online platform. It's Amazon. It's marketplace. They're doing what Amazon did in 2010, right? They're doing logistics. They have credit, financial services. They're expanding margins. The growth, if you look at the GAAP EPS, when you convert it into dollars, Brian, they're going 35-40% every year, expected over the next 3 years. So the growth is there. Stocks pulled back to 1900. We increased our allocation, and if we can get a little bit of a push up, I might go to 3 or 4% in our portfolio.
Wow. Never seen so much bearishness before, but they're going so goddamn fast. Our points are losing like crazy. This is now 50 points from the top. 6,900. This is now 47 points. They want to go 47 points down, man. Are they really about to go down there that crazy? I have no fucking clue, but I have no interest. Time is 3:30. This is power hour. It's so oversold. There has to be a bounce. I mean, there doesn't have to be a bounce, but I think there's going to be a bounce. I'm feeling there's going to be a bounce.
This is Porsche's animated ad. Look at that. It was created with hand-drawn sketches and a little bit of CGI. But no AI was reportedly used. The video
is this?
Today, Bitcoin.
BS. So scared, man. People are just no directional dumping out, just knifing down on everything. VIX is just climbing and climbing and climbing. Where was the VIX? The VIX 3 days ago was at 14, so it was near 13. Sunday night. Right, Sunday night market update video called out that VIX was at 13, right, in the weekly candle, testing the bottom of 13 or 12, right, and now it went from 13.5 to 15, which is just normal. A market update video. That's why we tell people to watch the market update video, man. Market update video talks a lot about the setups that people need to pay attention to into the week. Smart money setups, basically. 3:30. Q. It's really at 6:14, so close. It's doable until Friday, maybe Monday. But so many bearish days in a row. So many bearish days in a row. It is now playing in the middle. The SPX 1 minute gap at 6876. The SPX gap down below. Wow. Big candle coming up. Bounces trying. Bulls are. Bulls are. That is such a nasty ass pattern. What the shit? Forming a channel. Forming a channel. It's an algo range at 330. At the floor. Counting as an algo range creation. Not full on bullish right now, but it could show a small amount of bullish, but wow, look at that rocket down on QQQ. $4 down. That is crazy. 618 to 614 in 30 minutes. SPY 205 to 330. So 1 hour actually? 1 hour and 30 minutes? Never mind. 1 hour and 30 minutes. What the wow, that's went so much. Literally went for 30 minutes, 30 minutes, 30 minutes. So an hour and 30 minutes. That's such a huge fucking knife. That's such a huge knife.
I'm Nicole.
Nicole. Wow. We may. I don't want to speculate, so. Cycles are building, folks. Alright. Wow. Have a good New Year's. I'll see you on Friday. Bye bye.